an optimist about the elections. The elections will hold. I don't know who will win, but the elections will hold. In 2007, we were about the same position when there were talks of third term. And a very good friend of mine had invited me to Abuja, and I spent a day with him. And I came back to Lagos believing that the elections will hold. He said to me as he saw me off, it was more difficult for the election not to hold than for it to hold. And I think it's the same thing today. The elections will hold. So my worries for Nigeria are not about the elections. We're going to have elections. Whether we vote wisely is a completely different thing. I think my concern is around the state of the economy. Reforms are crying to be made. We are losing anything from $1.5 to $2 billion in oil that we can't take out and export. When you look at the gas situation, it's even worse. But I think over time, we should expect that some of these challenges, we will begin to deal with them. If we have gas, we're going to have to find a way to get the gas out and sell and make money, and then build the economy in a different direction. I am very optimistic that that would happen. The success or successes in fintech has shown that the path for Nigeria's future has to be a private sector-led path. The government only required to pave the way and create a level playing field for the private sector to thrive. And I'm sure you would agree with me that that is the case, whether you are working in government or not. The prosperity of this country will come from a flourishing private sector. It is not that we disdain the government, it's just that it's the way it is. And if you look at it, take your GDP, for instance, take all the contribution of government to GDP, max 13% of 100%. The rest comes from the private sector. If you take all the government budget, whether the federal government, the state government, and all you add it, it's sub 20%. And that's why I believe that if you have 80% hanging somewhere, you need to nurture that 80% so that it can grow and pull the 20% and even make it larger at some point. We have a very well arranged or an array of speakers today. And so let me not take any much of your time, but to just say thank you to our partners who have worked with us to ensure that we are able to stage this event today. I must recognize the support that we have received from tech experts, Stanbic IBTC Holdings PLC, AG Levantis. I'm not sure they have a choice, knowing that we are stuck with Levantis in Papa. Open Access Data Centers, my very good friend Tunde. It's been a while, probably saw before COVID. As they say, it's not BC, BC is before Christ. Well, we can even say BC too, before COVID. Thank you very much to Galaxy, Backbone, MasterCard, and all those others who have been quite instrumental. MTN are good friends. We thank you all. Diplomats who are here, we welcome you. A friend from the Indian High Commission. Welcome, sir. We're looking forward to an interesting dialogue
And I hope that you will make good effort to be part of that dialogue as well. Nigeria is our country. Your Excellency, welcome, and just to announce the arrival of the Chinese ambassador to Nigeria. You're welcome, sir. Thank you. You know, when I'm coming back to Nigeria, I am the boldest, simply because you can't deport me to anywhere else. And I tell the immigration people, whether you stamp the passport or you don't stamp it, I don't care. You know. And I remember many years ago, I had traveled with my wife and our 2 children to America. And the children were on my wife's passport, and my wife was staying back, and I had to bring the children back to school. And we got to the airport in New York to fly out to London. And they were running around wondering, where is the mother? The supervisor came to me, it was British Airways. You are the father? I said, yes. You are going home? I said, yes. And go now. When we got to London, they didn't even ask. I think they were fed up. But you probably couldn't do that today because of terrorism and money laundering. But there's nothing like coming back home. That's the point I'm trying to make. If they want to hold me anywhere else, let them try. I mean, in the end, they will enter into some arrangement. Let's exchange prisoners, and they will send you back home. Ladies and gentlemen, I welcome you warmly to the 2022 round of the Business Day CEO Forum. And thank you very much for coming. Thank you.
One second, please. Okay, so we're going to move very quickly. Thank you very much, Mr. Frank Aibogo. My publisher has a way with words, so you'll bear with me. I don't have the gift of the gab. Right, so we'll move straight. We're starting behind schedule, so we'll try and cover up lost ground. Mr. Shogole has a meeting to catch, so I'll plead with those who were to start before, so we can take Dr. Shogole's panel, so that he can meet up with his other appointments. So if you don't mind, I'll be moderating this panel. My name is Obi Onyaso. I lead the conference's arm at Business Day. If I may call you, sir, please, Dr. Shogole. Please come. All right, next we have Ambassador Q Jiachun. Thank you very much. Yeah. And finally, to join us will be Dr. FM Ubi. Thank you very much. Thank you very much. This session is expected to last about 45, 50 minutes. So if I'm going overboard, please call my attention. We'll start with you, Ambassador. Yes, China has committed over 60 billion to Nigeria. Cumulatively, they've promised commit over 60 billion up to 2035 in agriculture, manufacturing, infrastructure, environmental protection, digital economy, blue economy. It's quite a number of areas. However, China is over 11,000 kilometers away from Africa. Why is Africa so important to China?
Okay, good morning, everybody. I am very happy to have this opportunity to share myself with you all. Lagos really is a big city. We are living in Abuja. So yesterday I come here with my colleague to attend this very important meeting. Here's a business day. So you just mentioned about how can do business. China really just mentioned Africa, China, China, Africa. China is not only the government and the politicians, people. We believe Africa is the future of humankind. And China is hope in terms of state governance, whatever. But I want to let you know, China is ready and willing to work with Nigeria side to develop our business. We just mentioned China can provide loans to the African countries. Really, this is a very, very big concern for all the countries in this great continent. We need finance, we need technology, we need management. So I want to let you know, here is not the African countries try to find a way to get money. Most important thing is that how can we get reasonable and affordable the money to support development of the whole Africa. I want to say that in Nigeria, I'm working hard and try to convince the banking sectors that Nigeria is not only in terms of economy #1 in the whole Africa. Very, very important thing. They use their business language. They use their measures to manage risk management. Banking is not a charity organization, not like a politician, like a diplomat. They always try to boost the benefit for the people, but the business first focus on profit. So I want to let you know, I'm the 14th Chinese ambassador. I know that the banking sectors are doing their calculation. They're taking, oh, where is the revenue for the government? How can they repay the money back? But for me, I have to combine the two forces, political language and the business language, to let them to support us. Now the situation is not the organizations or the institutions provide service, find service. The most important thing, how can we come here to support us? Not only from China, this is from European Union, from US. If the big powers, the big economy can work together to provide sufficient, adequate services, especially for Africa. If we can get money from the international organization, including China, you just mentioned $660 billion US dollars. You know, we have we are committed to doing this. We are trying to let you know that if, you know, European country, US side, they just have their initiative. We have $600 billion US dollars. If China, US, European countries work together to provide the services to the African continent, this is the reason I think that the future is in Africa.
Thank you very much, Ambassador. Thank you. I'll move over to Dr. Shogule. The ambassador had mentioned the banks are not charitable organizations. I thought Stanbic IBTC was a Red Cross, honestly. Surprised to hear this. But Stanbic IBTC has positioned itself as a one-stop solution for banking for Nigeria-Africa trade. Last month, you had a very big Africa-China Expo. However, Nigeria has significant trade relations with several other countries. Why have you decided to become the one-stop end-to-end solution financial institution for Nigeria-China trade?
Thank you very much. And Your Excellency, good morning once again to see you here. Good morning, distinguished guests. The question, you know, is very, very important, and it's good to quickly lay it on the table very quickly now. If you check statistics and you look at, you know, the volume of trade between Nigeria and any other country, you will see that between Nigeria and China, we are talking about almost 25%. That is massive. That's a quarter of the nation's trade with just one country. So for us in Stanbic IBTC, it's a no-brainer. You just have to be there at the epicenter of that trade and the transaction. So that's number one. Number two, if you check what is happening within the context of the volume of trade, 95% of the volume has to do with imports from China to Nigeria. Does that give us concern? I would say for us as Stanbic IBTC, we think we should be able, as a country, be able to do better. And it takes me to the third point, which is the fact that we are looking at, the relationship beyond just, import from China. We are already trying to facilitate, working with other stakeholders to see to what extent Nigeria is able to export to China. And we've gone with many of our customers pre-COVID. We've gone there to see to what extent we can facilitate manufactured goods, export to China, semi-processed, produce being exported to China. Those things are very, very important because, when you look at China, the second largest economy in the world, and you look at Nigeria, the largest economy in Africa, it's like if you are talking about, in Nigeria, Taiwan and Kennedy, they are twins, conceived and delivered from heaven. So we have no choice, for us as Stanbic IBTC to be able to facilitate that relationship. Trade, economic partnership, transactions, and the whole ramification of what we've got. Thank you.
Thank you very much, Dr. Shogule. I think you now see why bankers are the best salesmen. He's almost convinced me to leave business day and move into the Africa-China trade. I'll move over to Dr. FM Ubi next. Dr. Ubi, you're probably known as the best, most knowledgeable China expert in Nigeria today. For those of you who don't know, Dr. Ubi is the head of research at NIIA. NIIA is the intellectual powerhouse of Nigeria's foreign policy, foreign relations. In the last few years, it's been said that China is tapering down its exposure to Nigeria in terms of loans. Is this a case of buyer's remorse or priorities have changed?
The answer is no. No, it's not buyer's remorse. But in any case, first let me thank Business Day for this opportunity. I think this is the second time I am on this your platform. I think I was on the platform in 2020 during COVID. That took place online. And I would say that's your first one. No. I think the problem is that naysayers, critics are looking at the funding, from China, from just one particular aspect, which has to do with infrastructure. No, we are not even, yes, infrastructure, but basically from the Chinese government. And we focus our analysis on the FOCAC funding, the loans given to Africa, which is at the last FOCAC was about 60 billion.
Can you just quickly explain what FOCAC is for those who don't know? Sorry,
FOCAC is a Foreign on China Africa Cooperation. Now, we look at those loans and, because in the last 6 years, it has remained the same, 60 billion. But we are also now looking at other facets of funding, like the Silk Road Fund, because see, it's holistic, it's a package. So if you want to build your infrastructure, you have to source for funding from even policy banks in China, so which are also lenders. Then you also have to look at the BRICS New Development Bank. They're also part of the lending institutions. I think the funding comes from various aspects, not just from that loan. The pledge that China gives per every 3 years. Now, secondly, I want to say that I think the whole idea of BRI, it's not just about infrastructure. It goes beyond infrastructure. There's capacity building. There is trade. There's industrialization. There's ICT. There's digital economy. And I'm glad he said it. So with regards to Nigeria, again, we are not also I think there's so much misperception, so much misinformation, lack of information. And that's why we keep having this criticism against our borrowing from China. For instance, I would like to tell
this forum that we are only owing China 3.1 billion. Now,
Dollars, please.
yes, $3.1 billion, sorry. Now, if you look at the loans from Nigeria, it goes beyond that. As at 2020, it was about 27 billion when we had a whole lot of criticism about China. Right now, it's about 40.1 billion. Now, if you just take 3.1 billion, who is Nigeria owing? I think this is the same thing for all Africa. We have other bilateral loans. We have multilateral institutions, financial institutions like IMF, World Bank, and all that. I think part of the funding, part of our loans, the debt trap issue is not coming from China. I think this is what we have to take into consideration when we now begin to criticize Nigeria-China relations in terms of financing for infrastructure. But much more importantly, you see, we need the BRI. We need China, because China is the only country that is ready to finance or invest where other traditional partners have refused to invest. I think I'm sure we're going to come to that. The PGII, that just came up, I will talk about that later.
Well, you're using a lot of abbreviations, sir. We're not all China experts here.
That's why I said I'll come to that later. But what we're saying is, I think right now, what we should be looking at within the international system, it's more of cooperation and not rivalry. I was in a forum in the United States. I was asked to do a presentation. And I said, you see, when you talk about rivalry between China and the West, China and America, you tribalize Africa. You take us back to 1884, 1885, where the map of Africa was kept on the table and dissected and said, Britain, take this, Belgium, take this, Portuguese, take that. That's exactly what they're taking us back to. And so I think that is not the case. We don't need that right now. All we need to have among these powers is that competition, that cooperation and not competition.
Thank you very much, Dr. Obi. I'll come back to the ambassador. So regarding China exposure to Nigeria, on the one side was the finances, the loan exposure to Nigeria from China. On the other side are issues relating to what is happening in China's neighborhood. Some of you here might remember that last month, Speaker Pelosi visited Taiwan. That got a lot of temperature up in the room. Is there a possibility that with more activity going on around China, there's a chance that its priorities might change and the attention Africa has received over the last 20 years might decline?
2 points I think very important. First, for Nigeria, I believe that why China would like to work with Nigeria side, especially provide loans for the infrastructure. We need this money. Not every country, especially developed country, we cannot do that. This concessional loan really is from Chinese taxpayer dollars. That means not only about business. We know business can make a country prosper, can let the society, we can use words thrive, or the persons, especially good product, flourish. But I want to let you know, this is not only about the business. The underlying factors is very important political relations. Nigeria, China, we support each other. Nigeria, why Chinese government value cherish this very important thing, because in the history, especially 1971, when we established bilateral relations with China, at that time is very, very important. Chinese people always remember who supports us. In the year 1971, Nigeria is one of 26 countries in Africa to support China, restore UN state, Republic China. You know that People's Republic of China. And very, very important thing at that time, Nigeria takes the lead to support a new China. This I want to let you know that this is the bedrock. We try to do something for Nigeria as a great country, even we are facing great challenges. But we believe we had a story that from 1921, at that time, China is a semi-colonized nation. Nigeria fully colonized. So we know what's the meaning of a hunger. We know what's the meaning of multilateral things. We cannot let one power to dominate everything. Related to your second question about Taiwan, I think everybody is curious about the current situation between US and China. I want to highlight 3 basic points to let you try to understand the current situation. One point is by the year 2050, China will achieve or complete the second centenary goal. That means the founding of New China, 100 years. Because first centenary goal is by the year 2020, last year. It's the 100 years of Chinese Communist Party. Nigeria, no problem. If it's Communist Party, I have talked to 18 parties, the registered party in Nigeria. We understand what Chinese CPC has done for the nation, for the world. So I want to let you know the first point is very important. China now is fighting for the rejuvenation of Chinese nation. What meaning of rejuvenation? Before 1820, if you look at history, China basically 5,000 years history. So only by the year 1840, because of Opium War, so China is declining. So now the Chinese people restore the historical position. This is the second centenary goal. The first is about the elevation, the absolute or extreme poverty of people. We have lifted 800 million people out of extreme poverty. So we built a moderate society in all respects. The second centenary goal, just to mention, reunification is the first. There's no forces, especially external force, can stop China to reunite country, because Taiwan, China, we are the shape across Taiwan Strait is one China. People know that Republic of China, this is historical things. By the year 1949, before we can see before 1911. I do we have time? I think it's okay.
This is a separate conversation.
Okay. I know that time is very limited. So first point, rejuvenation for Chinese. This is the first word. The second, we oppose the external forces to try to exploit Taiwan to not only contain China, to make troubles for China. So China, military sectors, Chinese people, we are fighting for this just cause. Third element is very, very important. Small minorities in Taiwan Island, including now this local government, and try to separate from mainland. That means try to create one China, one Taiwan. We Chinese people, Taiwan, we have 23 million people there. We have 1.4 billion people in mainland. So some people say, Ambassador, why do you do the referendum? Let the people decide the future of Taiwan. I challenged them. I was a politician in the US, my friends. I told, think about this. If California want to separate from US, let people live there to make a referendum, do you think this is a good way? Yeah. If we have referendum, we have less than 1.4 billion people, like Biafra in Nigeria. Can you let people to make a referendum to, oh, we would like to get independence? No way. So I think that the current situation, the difficult things is not in Taiwan, it's because of external forces. I think everybody knows that. Some big powers try to create the chaos, try to use their force. We understand, we think that it contains China, but we would like to say that no external forces can stop China's reunification, rejuvenation. And also we think that Nigeria, we thank Nigeria. Nigeria supports China. I can speak publicly from the president, from the foreign affairs minister, from all the parliament and government. So this is the reason why you are supporting just cause. You cannot let the other people, other politicians. I can say maybe this is not applied. Some politicians are still living in the 1950s. We are now 21st century. Thank you.
Clearly, this is a subject that the ambassador is very committed. The ambassador is very committed to, the cause of the People's Republic of China. But I'll move very quickly to Dr. Shogunle. Stanbic IBTC, providing financing for businesses doing trade with China or Chinese companies introducing them to Nigerian market. A few years ago, there was a currency swap deal between China and Nigeria. Okay, so Nigeria added, Chinese currency to its foreign reserves and all of that. But the truth is that several businesses that do, trade with China don't even know about these currency swap opportunities. Many of them say they can't even access it. From your experience, what are the issues there?
Yes, thank you very much. 2 or 3 things. Number one is that that currency swap agreement was put in place in 2018. And it's very important to bear that in mind. Number 2 is that when it was put in place for about 3 years. By last year, that agreement was renewed. So what does that tell us? It means that it is important. Given 1 or 2 statistics I've shared with us this morning, you could see that, look, the swap deal or the swap agreement was to facilitate transactions between Nigeria and China without necessarily going through a reserve currency or a third currency. You can't get dollar. I'm trying not to mention, it could be euro, it could be pound sterling, without necessarily going there. I'm a banker. When you move from one currency to the other before you get to the final currency for settlement, you're talking about almost 15–20% that you've lost in terms of value creation, value extraction, and value addition. So that swap deal was meant to facilitate that and to cut out, to remove intermediaries, right, in terms of value creation and value addition. The third point is the fact that we are not the only country in Africa to have signed that. South Africa did also with China. Egypt did also with China. And when you now come back to say, look, what has happened? The important thing is that when you are doing transaction at the formal level, that swap deal is being utilized. The comment that you've made had to do with most of our SMEs, small and medium scale enterprises, who will just prefer to do their transactions in an informal way, right? They don't want to formalize it. But we saw that, and regulators also saw that. And you remember, I think about 2 years ago or 3 years ago, CBN introduced what we call Form Q. Form Q is to allow SMEs to be able to use telegraphic transfer to pay for goods coming from outside the country. About 80–85% of the Form Qs are actually being utilized to bring goods from China. Now, the barrier or the limitation to that is that you can only do 20,000. With more reforms, right? It's not
20,000 what, please?
$20,000 per quarter. And that is small. It's small when you look at, if you see some of our brothers in Alaba, Rago, and the rest of it, they can do almost $200,000 worth of imports from China. So when you say you can only do $20,000 per quarter, you've limited them. So the idea is to see to what extent we can have more reforms to bring more SME players into that fold. And the swap deal, we can continue to see to what extent we can use it to facilitate trade. I think that the level of relationship that we've seen between Nigeria and China can only improve on the back of this swap deal. And it's something that we should. Why is it that it's only Nigeria, South Africa, and Egypt? These are the top 3 largest economies in Africa. And Nigeria is, I will say that we are at the forefront, because we are the only one that have gone back to even treat 1 or 2 things. It may interest us to know that on a bi-monthly basis, CBN sells an average of 20 million Chinese yuan. As part and parcel of this. This is direct Naira to yuan, and you can't get it better. So most of our traders, most of the SME players, if they can come into that fold, they will enjoy the benefit. Thank you.
Thank you very much, Dr. Shukule.
Well, it's very important. I talked to the governor of the central bank. We have to establish a Nigeria bank operating in China and China's bank here in Nigeria. This could facilitate the business. Use currency yuan and also Naira. So we are doing this. I think that is very important to get the first time.
So probably next year, 2 years, we'll see Chinese banks opening branches in Nigeria.
I'm working hard to calendar. Calendar is ready to take the license by Chinese banks here, and also facility to the Nigeria bank to be China. So that for business is easy.
Thank you very much, Ambassador. I don't know if Dr. Shugele will be excited to have competition in that area where he's marking out. So I'll move on to Dr. Obi.
We have now 115 billion the Chinese currency, the yuan. That's the equivalent. We have naira, we have Nigerians have a naira, we have a nice yuan, we have naira in the central bank. So that we need a commercial bank to carry out the business.
Thank you very much. Our time is going, so we're just trying to move quickly. I'll move over to Dr. Obi. Dr. Obi, a while ago, I think I read a report where you said that is $15 billion worth of unfunded rail and infrastructure projects that were once promoted by China. One school of thought says that looking at the financing side alone does not give a full picture of Nigeria's relationship with China, which you had mentioned in the last answer you gave. But this 15 billion, what happens? This missing, absent 15 billion.
Anyway, let me thank His Excellency and my colleague from Stanbic. Thank you very much. I think both of you have given a very insightful presentation. I will say that I think the future of Nigeria is PPP. And I was glad that was mentioned this morning. It's the future. At some early this year, I was also invited again to South Africa to look at this particular funding. I think even in China, I was invited online where I did a presentation online on the new global China's global financing. Yes, financing. Initiative, the financing initiative that was talked about at the last FOCAC meeting in Dakar. Now, I think Nigeria does not even have that amount of money to build its infrastructure. And much more, we need to look at donors and also get the private sector to get involved in financing infrastructure. Now, I think one of my arguments is that we don't have to always look, like I said before, from financing for infrastructure. There's an article I wrote, which is Nigerian-China relations, the complexity of an interdependent relations. I think we have to be very holistic in our analysis. We look at trade. We stated here it's 25%. In other words, if you bring it down statistically, the amount of trade is above 20 billion between Nigeria, and that is the highest in Africa. Now, and you see, Nigeria is of priority to China. We are, he said it earlier, we are 1/4 of African market, 3/4 of ECOWAS market. And so trade with China is very, very robust and key. But anyway, in favor of China, he talked about it, it's imbalanced. And that is where we also have to key in on the BRI to enhance our trade. But you see, there are some components within the BRI. For instance, industrialization is there. There's capacity building. There's production capacity. Why are we just looking at infrastructure? We should keep, China has promised, these are pledges. Now, even if you look at the Foreign on China Africa Cooperation, the plan of action, all the plan of action is see there, they're going to transfer technology. Although we will argue, no country will want to transfer technology, but you can also acquire technology. I think it is high time we hold China to their promise in regards to technology and industrialization. Now, I think key, and I'm happy the ambassador.
What happens to the unfunded 15 billion?
Sorry?
What happens to the unfunded 15 billion?
Unfunded, that's why we have to look elsewhere too, not only from China. Like I told you, it's not directly from the Chinese government. There are other sources of funding for the 15 billion. Let's look at the Silk Road Fund. Let's look at the China Exim Bank. Let's look at the China's Development Bank and a whole lot of other financial institutions, multilateral, that have keyed into the BRI. I think we should look for funding from those sources. You know, China alone cannot provide all the funding that we need because China is everywhere right now, so, you know, so I think we need to look elsewhere.
Thank you.
But conclusively, I wanted to say, like the person said, I think the Chinese government needs to encourage their companies to offshore and outsource. And you know, if you want Africa to develop, that is part of what the BRI is envisaged to do: outsource and offshore. So bring the companies in here, not to bring in importation. So if you do that, you know, the companies are here, we produce, and this we're going to say made in Nigeria.
Thank you very much. Thank you. We'll just take one more set of questions and we'll conclude because we still have a long day ahead of us. I'll move to Ambassador. Your Excellency, a lot is going on in the world right now. Some of you may be aware, in February, something happened in Ukraine. Some Russian tanks rode into Ukraine. And in the aftermath of that, there's been a lot of diplomatic activity trying to get countries on one side or the other. Russia and China have spoken of a fair world order. America in the past spoke of a new world order. What does that mean for Africa?
Before answering this very, very important question, I want to add some points quickly. 3.4. Just
different event for you.
Okay. The first is about the imbalance in trade between China and Nigeria. That we support more product from Nigeria because China is the biggest, is number one retail consumption market. This one point. Second point about infrastructure, we need money. I'm working hard to try to make it a reality for Kaduna this year. Maybe Nigerians say, okay, China, the people say that's trap. This is nonsense. I think nobody believes that. I hate to name the countries in the history. Some countries use this way. If you look history, but China is not. China, I think that here, I just mentioned not only for the political things, China's political and economic combined together. So that we need more money for the infrastructure. And the third point is very, very important at this critical stage. How can we have increased or enhanced our productivity in Nigeria? I have proposed the Nigeria-China 5G GDP strategy. I have no time to elaborate. This strategy
next year.
Okay, this strategy is about the political consonance, economic cooperation, military security collaboration, international affairs coordination, and people communication. We have specific goals for this strategy for Nigeria-China. So this will cover prioritized areas about first infrastructure, ICT, industry, investment, and import export. We need the condition that how can we get security, structure, speed, synergy, and I hope that this is a very important condition. The guarantee really is about the South exchange, talent cultivation, and treasure capitalization. Nigeria, we have abundant natural human resources. So how can we capitalize on this and also technology, just in technology application? The most important thing about tradition, the tradition transcendence. This is about the essence of the 5G GDP strategy between Nigeria and China. And also I want to advocate harmony simply. I have no time to elaborate. We can. Okay, I'll back to your question about the. Okay, back to your question.
What does it mean for Africa?
Wait.
The fair world order spoken about by Lavrov and the Chinese foreign minister. They said in the aftermath of Russia's invasion of Ukraine, the fair world order, the new order that excludes too many countries.
Correct me if I'm wrong. I'm being the 14th Chinese ambassador. I have my observation. In today's situation, we have to look at the big picture. Some politicians, some countries really, I just mentioned, are living in the 1950s. And some people are insane. They are unable to live in the normal society. So I'm not criticizing some politicians, but I want to let you know that they have side topic. Maybe it's not good because also they have a you're racist. No, not Nigeria. And we are reasonable. I think that some politicians really have a neurotic illness because they fear, they worry about situations from out of the international community. What I mean here, this is why I support this business today. Business is not about war. So this is the first one, the big picture. The second, you mentioned that realization war between Russia and Ukraine. I want to let you know, Russia, Ukraine, and Russia, they are both friends. We have close relations with two countries. This is the reason why we approve the war. We think that how can we find a way, find a solution to help them? But this is, some nations do not agree with that. So this is really Nigeria's support. We have to find a way, how can we end the war? The third one is that really we have got consequences, affect all the people in Nigeria. I travel these days to some business. You know, it's difficult for them to buy the explosives to use to the mining sectors because of the Ukraine-Russian war. So that this will affect every nation, every people. So we strongly support the international community, Nigeria side. We are trying to how can we end this war? This is, I think, business can do a lot for ending this war. Thank you.
Thank you very much, Your Excellency. I'll move over to Dr. Shogunle. I know that he has to leave very soon. So the question I have for you is Russia-Ukraine conflict, financing export trade. Of course, shipping rates are going to go up. Insurance fees are going to have to go up for shipping routes, you know, that are coming from, you know, from China because of, you know, the greater attention being paid to China by, you know, US-led interests. Do you have any concerns about that for your business, for the growing business you're doing, Nigeria, China?
This is a difficult question, but the way I would position it is this: if you look critically at, you know, what, you know, within the context of our customers and within the context of the kind of trade, you know, that we have between ourselves and China, inflation rates have gone up everywhere, right? And whether we like it or not, the Russian-Ukrainian war has actually accelerated that, right? And we've also seen it in terms of whether you are talking about, you know, prices of commodities, something like wheat. You know, those commodities primarily, you know, produce, produces our products that should be coming from Ukraine or from Russia. They've gone up already. So the important thing, you know, the way we are looking at it is that between us and China, right, how can we augment, how can we safeguard the volume of trade from being impacted, you know, by this whole thing? And that is why some of the things that we've discussed here, very, very important. Very, very important. If we can trade directly without going into the reserve currency, it helps. Because you can use that to moderate the impact of all those currencies on our transactions. And you remember, I would like to bring two things up very quickly. Exactly what Nigeria is doing within the African context when it comes to, you know, Africa CFTA. And when it comes to, you know, payment solutions in Africa, it is called PAPS. It is the equivalent of NIPS. NIPS is in Nigeria, whereby all banks are connected to NIPS to settle transactions. Africa is already, you know, doing PAPS, which is the equivalent, and you don't have to go through third currencies. Nigeria is plugged to China. Nigeria is also plugged to PAPS. Will our customers be able to tap into that? The answer is yes. So I will say we are working very closely, especially with the largest bank in China, ICBC. It may interest all of us to know that ICBC, Stanbic IBTC, we are a member of Standard Bank. ICBC has almost 21% stake in Standard Bank. So whether we like it or not, ICBC is using some parameters, is actually the largest bank in the world. Many people don't know. 6 biggest banks in China. They have top 10, 6 in China. ICBC is actually the largest bank in the world. Many people don't know. ICBC has more than 500 million customer base. It's incredible. But it has 20% stake in Standard Bank. So, and Standard Bank has 68% stake in Stanbic in Nigeria. So you can say ICBC has 20% of 68%. It will give you about 14%. Are we working closely with them, to be able to augment some of these shocks? The answer is yes. Thank you.
Thank you very much, Dr. Shogunle. Finally, I'll move to Dr. Ubi for the last response. Earlier, you spoke about the Partnership for Global Infrastructure and Investment. That's PGII, which was announced, at the G7 meeting a few months ago. How does that compare with the Belt and Road Initiative? PGI is led by the West, Belt and Road Initiative is led by China. Thank you. Please make your response brief.
I'll just be brief. My comparison, although it's not to undermine any country or any continent, is that one is rhetorical and the other is pragmatic. Now, how do I mean? The PGII, if you look at it, it's just another cloud, ideological cloud to counter China, and that's how I, as an academic, see it. Because if you look at the history of other alternatives to the BRI, the B3W, Build Back Better, that was actually initiated by the United States, that failed. Actually, it never saw the light of day. Now they have come up with the PGII, so a few months ago, there was 600 billion in infrastructural funding and other sectors of the economies of the developing world. That, again, likely might not see the light of the day, I'm afraid, because, at that meeting, President Biden said he was going to source for funding about 200 billion from internally from the United States. And you just talked about the war in Ukraine, the Russia-Ukraine war, and the global economy. Like I said, every country the war is actually hitting hard on countries. And so everybody's looking inward now to see how they can stabilize their economy. So no country will want to release that kind of funding, for a project, in quotes, that might not be useful to them. And I think I want to say here categorically, and I've said it everywhere, Nigeria and Africa, especially Nigeria, many countries in Africa are not, they don't have strategic importance for the United States. Now, if you want to understand what it means to have a strategic importance, try to see where the president, which country the president visits, and which country the Secretary of State visits. And over the years, Nigeria has never had that kind of response. Just recently, where Blinken came and all that. I think, for me, the PGII might not, in quote, I'm not really saying that there's a probability if they are ready to release funding. And let me say it categorically, in closing, over the 150 years that we've been were colonized and had business with, the Europe, no tangible infrastructure was built. The infrastructure we got was from the areas of raw materials to the shipping ports. Now, I'll just conclude with this. I was in Nairobi to look at the interconnectivity that the Chinese government was building, from Mombasa to Nairobi, that will go through East Africa. Now, I met a British expert, a railway expert, and told me, he said—
Just so you know, the Deputy High Commissioner is here.
Yes,
he's listening.
Yes, I met a British railway expert. He told me what the Chinese is giving us is too complex, high tech. And Africans are not ripe for that. I actually felt bad. Well, that wasn't supposed to be. And I said, okay, if that is too high tech, Africans are not ready for high tech technology, what do we do? He said, they're supposed to be giving us railways that are very conventional and all that. I said, okay, why has his own country not given us that kind of railway? Now, it's the only people willing to give us as the Chinese. And I think that is why every country is actually looking up to China right now in Africa.
Thank you so much. Really appreciate your time, everybody. Mr. Ambassador, thank you. Dr. Shubule, thank you very much. Dr. Ubi, thank you. I'll invite my publisher, Frank Aibogu, to just come and take a quick picture with our guests. Excuse me, please. Ryan, can you show us? Yes, we are. Thank you. Yes. We'll just take one more photograph. I'll ask the Indian Consul General to join, please. Thank you very much. So, Dr. Aibogu, the Indian, yes, and the Deputy High Commissioner, please. All right, thank you. Okay, please take. Wale, please go ahead. Yes. MasterCard, please. Where is the tech experts? Okay. Tech experts over here. Thank you. Okay, please. Thank you. Thank you very much, everyone. Thank you. Thank you very much. Thank you very much, everybody. I think we're getting to the swing of things. Great. So up next, our next panel, this one should have been moved, but because Professor Sachs is already online, I would plead with MasterCard to just give us a bit of time, if that's okay, because Jeffrey Sachs is already online and he's waiting to start this session. I would like to call my publisher, Mr. Frank Aibogu, to come on stage. Yes, yes. And Mr. Peter Olowononi. He's not online. Okay. Okay. I understand Jeffrey Sachs is not online yet, so I'll just message him. And then we have Mr. Ben Lewin Jones, please. Thank you. Thank you very, very much. So we'll begin. The conversation can start while I just confirm when Dr. Sachs will join, Professor Sachs will join us.
Once again, good morning, ladies and gentlemen. Let me also use the opportunity to welcome the Deputy British High Commissioner who has recently joined us. Ours is the second panel, and we'll be focusing on the challenges of globalization. And joining me will be Peter. You already have had that told you already. He's representing Professor Benedict Orama, who is the Chief Executive of the Afrexim Bank. You're welcome, sir. Deputy High Commissioner, we indeed are delighted that you are able to join us this morning. Once again, we welcome you. We expect at some point to be joined by Jeffrey Sachs, and I'm sure we would be alerted when he joins us. You know, globalization was meant to be the answer to everything. But over the years, we have seen globalization face very heady challenges. If not in as soon as Trump came with his America First philosophy, nations began to rethink their own approach to the whole concept of globalization. So this morning, we're going to aim to explore that concept and, of course, the position of Nigeria in all of that. I think I can see from behind me that Jeffrey Sachs has joined us. How are you, sir? I would like to welcome you very warmly and to thank you so much. I know, I'm not sure what part of the world you are speaking from, but if you're in the States, we know how early it still is there at this time. And so we are indeed very grateful that you're able to join us. Thank you, sir, and welcome.
Thank you very much.
Thank you, sir. Thank you very much. Thank you. Before, I don't know whether you heard us, I was just talking briefly about the challenges that globalization is facing and how it is that over the years, we have seen countries begin to assess their own approach to globalization. So I'm hoping that today we will at least agree one thing. We all need globalization. We all need to pull together rather than to pull apart. We may have challenges in defining the whole essence of globalization and whether it is that it can be led by one country or a set of countries. But in truth, I think this world, especially if you look at the question of the effect of climatic change, whether you are white or black, whether you're rich or poor, we're seeing that, you know, hit countries from across the world. Fire, flooding, what else? And of course, vegetation that we are losing just because we are not able to do what we have to do. And the challenge, of course, that poses for countries like Nigeria, that has been essentially a fossil exporter that now needs to look at how it sustains its economy. But let's go on. I mean, since that we're here already this morning, let's start. I'd like to, of course, go to Professor Sachs immediately. Professor Sachs is director for the Center for Sustainable Development at Columbia University and has played key roles around the world for decades. He needs no introduction. Professor, I'd like to ask you, how, or in your view, what is the status of globalization today? Where are we at in terms of globalization? Is it dead or is it still alive?
Thank you very much. Thanks for inviting me. First, let's define the term. Globalization means interdependence. Interdependence of different groups or nations with other parts of the world. And in that general sense, globalization is a fact of life. It's not really a choice. It's been part of the human situation really forever. And we are deeply interconnected in many ways, partly economic through trade and finance, partly technological, partly political in many ways that I'll discuss, partly ecological. We're all part of an interconnected Earth environmental system, including a global climate system. Now, globalization is a fact, but the question is what kind of globalization? For quite a long time, especially in the 19th and the first half of the 20th century, globalization was based on European imperialism, because Europe was the first part of the world to industrialize. Industrialization gave such a profound military advantage to Europe that Europe went and conquered almost all of Africa, much of Asia, and much of other parts of the world. The UK won the prize for most wars, most conquests, most cynical behavior, in my view. After World War II, globalization was based much more on sovereignty of different countries. So we went from a few dozen countries and European imperialism to now 193 countries in the world. But one thing was characteristic of much of globalization during the second half of the 20th century, and that was the power of the United States. We had maybe not a unipolar world, but we had a dominant US, and then a second country that was competitor was the Soviet Union. When the Soviet Union collapsed and unraveled in 1991, the United States decided, well, now the US will run the world. Pretty pathetic idea, by the way, because the US doesn't have the right to run the world. It doesn't have the knowledge to run the world. It doesn't have the interest of other people at heart. And you mentioned Donald Trump and MAGA, Make America Great Again, or America First. You know, America is a very selfish country, like Britain was, and like others are. And so I'd say the American political elite is very selfish. They want power, and the financial elite wants income, and they don't care much about the rest of the world. So just to summarize, globalization is what we make of it. There are big advantages of a level playing field, because then countries like Nigeria can really benefit from the flow of technology and capital. There are huge disadvantages when arrogant countries like Britain or the United States decide that they run the show. There is a general danger of geopolitical conflict, because the powerful countries have thousands of nuclear weapons that could destroy the whole world. And I tell you, they are run by nasty people who absolutely have the capacity to destroy the world, sad to say, including in my country, where nuclear weapons have been discussed in use for decades, and we came close on many occasions. Now the United States is having a two-front war with Russia and with China, because the US wants to show that it really runs the show. So it says, okay, we're going to put NATO into Ukraine no matter what Russia wants. Russia says no. Now we have a war over that. The United States is meddling in East Asia and threatening war in East Asia as well. So this is not the kind of globalization we want. In the meantime, and just to conclude, we have so many serious problems in the world. Massive environmental crisis, massive environmental crisis. But our political leaders are so preoccupied with power, with staying in power, with military conflict, that they're not addressing the life-threatening challenges on this planet. So the answer to your question is we should have a globalization that is peaceful, problem-solving, with a lot of authority in the UN processes. We don't need a globalization of a hegemonic power like the United States. We don't want a globalization of conflict between the US and China or the US and Russia. This war in Ukraine is insane. It never should have happened. It was a combination of US arrogance and Putin responding to it militarily. So we've got a lot to do. And I don't have to tell you, Nigeria faces massive, massive challenges. And a peaceful globalization would be a big help. But this unstable globalization is a very big hindrance to your country because of all of the massive challenges that it's facing.
Thank you very much, Professor, for your very candid comments. If we don't know you, we would be wondering where you are from.
I'm trying to figure out where I'm going because I'm not sure they want me at home.
Thank you so much. Deputy High Commissioner, let me ask you, in the post-Brexit world, what is Britain's own definition of globalization today? And how do nations pull together to begin to resolve the common challenges that we all face? The professor alluded to the massive climatic crisis that we have.
Thank you very much. Well, firstly, it's an honor to sit on a panel with Professor Sachs, an honor to be with you as well. And it's refreshing to be in a discussion where there's bite and genuine disagreement. And I relish that opportunity, genuinely. So first of all, one of the considerable advantages of representing a democracy is this culture of openness and debate and challenge. And that's really, really important. One of the challenges of that is, of course, it's very easy to spot the weaknesses and the difficulties, and not always as possible. It's human nature, frankly, to spot weakness and difference, to celebrate the strengths. So before I answer your question, which I will, I just wanted to respond briefly to a couple of the comments I heard in the previous panel about the scale of Western investment, certainly British investment in places like Nigeria. So the first thing I'd say is that when it comes to financing investment and infrastructure, the UK is fundamental and has been to much of the infrastructure we see. So the establishment of Nigeria's Sovereign Investment Authority, we helped with that. We gave technical assistance for free to ensure that the NSA could be the kind of thing it is today, with the integrity it has, the funding capacity it now has, and the confidence that foreign investors and Nigerian investors can have in the spend that it will have. And so much of the infrastructure it's building, fair enough, has not been built with a British hand, but certainly the hand of design and the hand of design around finance we celebrate, and it's built for Nigerians. Secondly, if you look at the history of British international investments, formerly called CDC, and many of you will be familiar with it, its portfolio of $500 million of investment is in some of the most important infrastructure aspects of Nigeria, energy. So the largest gas power station in Nigeria, Zura, funded by BII and other Western DFIs with a considerable interest, not simply in return on investment to development investment, but in energy access and energy provision in Nigeria. If you look at the design of some of the infrastructure in the new, if you like, economy around digital, much of that, not simply British, I won't say that, involves UK expertise, UK funding, but also, to be honest, the collaboration and an openness to collaboration across the globe, coming to your question, which is so critical. So for some of these new pieces of infrastructure, which make globalization possible, it's not simply the money, the expertise, it's the approach and the values that underpin it that really, really make the difference and would, I think, for the future and benefit of Africa. It's invidious to disagree with Professor Sachs. He's so eloquent, but of course I would in respect to the premise of the war in Ukraine. I certainly don't celebrate the consequences of that war in terms of the massive difficulties around food, around fertilizer, and the implications of that. But I would look, to be honest, at the kind of solutions the West and Britain have been involved with, particularly, not least to try and ensure food leaving Ukraine, to try and address that issue, but also, to be honest, to look at the implications on food security in Nigeria and fertilizer. And again, one of the key investments the British international investment made is in Indorama, which is one of the largest fertilizer producers in Africa, and certainly in Nigeria. And as a consequence of the provision of fertilizer, has been responsible for increasing food yields across the poorest parts of Nigeria for quite some time. Now that's challenged by current circumstance, but frankly, we're better to be in that position with a fertilizer provider that can help with food security than to not have it at all. So there's much we disagree, and there's probably quite a lot we would agree on there, Professor Sachs. I'd hope you'd see wherever you are in the world. I can't quite tell. Firstly, what does globalization mean? I think post-COVID, if we can say that, and we can't quite, because some countries are still experiencing lockdowns, but post-COVID, what we're seeing, I think, is a renewed interest in how across borders we can do things, not least in the technical digital space. And I celebrate that. I celebrate the fact that we have workers in London, workers in, I'm sure in the US, workers across Europe, who are interested and engaged in how to move forward the digital economy in Nigeria and to grow it into space that currently it doesn't meet. We have programs that try and help people who have no access to the digital economy get access, and we have programs at the top end which help companies grow and create the kind of jobs that needed from that. And that's people inside Nigeria and out, and I think that's really important. The second thing for me is, although there's an increasing focus on supply chains within countries, I think it's also exposed the importance of keeping open supply chains out where it's impossible to self-supply. We've seen that in the UK, but I think we've seen it in Africa, food, perhaps food and fertilizer, certainly. But the openness of borders, I think, that have followed within West Africa, I think, has also been critical. And in terms of exporting from Nigeria, something we also encourage, because many British manufacturers based in Nigeria are trying to export from Nigeria to West Africa. I think globalization, in the smaller sense, has meant we really should just keep those borders open to trade, and we really should find ways to make that trade quicker and less uncertain, more predictable, and to ensure that tariffs are predictable across the board, or indeed are eliminated if the FTA can make that kind of difference. So what does it mean? I think in a post-COVID world, for many of us at least, I think what we can say is it's an opportunity. And we shouldn't discount the real world consequences of what COVID showed us. We shouldn't discount the real challenges of globalization and some of the threats that I think Professor Sachs referred to. But it's an opportunity to trade openly. And indeed, the values that we feel that underpin trade show that to be the best way to move ahead.
Thank you very much. Thank you. Being a diplomat, you have been very I wanted to, but I struggled not to use it. But anyway, Peter, let me come to you. I mean, we can talk about globalization in a global concept or context, really. Let's come to Africa. Your bank did a lot in supporting African countries to manage COVID and to make whatever transition that we have made away from COVID. So I must commend the bank. It will soon be the second anniversary of the African Free Trade Agreement. And I wanted to ask you, what is your own sense of what we have done so far? And what more should we be doing to make that a real source of the collaboration that Africa needs to make good progress?
Thank you, Publisher, and good morning to the audience. As you have rightly said, sir, having come to the realization that Africa needed to trade more amongst itself, to basically insulate itself from the external shock, as we like to say in the bank. What we have seen is when Europe sneezes, Africa catches cold. Why would two neighbors fight Russia and Ukraine? And we see the massive depreciation in FX in terms of our currencies. We've seen the depletion of our foreign reserves. We've seen the massive impact, negative impact that Africa is now suffering from two neighbors who are not able to agree as to what blocks they should join. So what we have been doing with the Africa Continental Free Trade Area Agreement as an institution in trying to ensure that Africa basically insulates itself a bit more and invariably drive the concept of regional globalization. We started with because first is that in all of this, there must be free movement of people, goods, and services. Why do I need a visa to go to Rwanda? Why would a Cameroonian need a visa to go to Ghana? So we started, and then we saw that with the barriers to movement, especially relating to goods, we needed to break down those barriers. And as soon as we can facilitate the flow of goods and services, then we can invariably facilitate regional integration and basically African globalization, where Africa can do more with itself. So we put in place what we call the transit guarantee, because what we saw was that if a truck takes a trailer load of cement from Nigeria heading towards Eastern Africa or wherever it's going to, it will have to stop at every border point. So with the transit guarantee that we have now developed, which we have launched and started with the Comesa region, once the guarantee is put in place, that truck will be able to get through to the final destination without any stop at any border point, knowing that with the guarantee, if it stops, if it doesn't get to the final destination, then whichever country it has basically offloaded the goods, they have recourse to that guarantee, because it means that is where the duty or the custom requirements should have been satisfied. Taking away that has started working and is working very well, then we move into the PAPS, which as you have mentioned, the Pan-African Payment Systems and Settlement Platform. This is an infrastructure that we have developed costing millions of dollars, but we have realized that until payment is made easy, trade cannot occur in the manner with which we want it to happen. Good success. We started with the West African Monetary Zone, where all the central banks signed up. Today, we have 8 Ghanaian banks, 6 Nigerian banks who have signed up to the PAPS and have actually started trading on the Pan-African Payment Systems and Settlement Scheme. We believe that as more countries sign up, more banks sign up, with the net settlement, which we will have to make, will begin to shrink. Because if we look at it today, if there's $1 million worth of trade between Nigeria and Ghana today, meaning that Nigeria has to pay out, the traders have to buy $1 million and transfer to Ghana, right? And if Ghana buys $800,000 worth of goods, they will have to, Ghanaian traders will also have to buy $800,000 worth of dollars and send to Nigeria. But through the PAPS, what we are now doing is settling that net $200,000. What does that mean? It has reduced the demand for FX on both sides and ensuring that net settlement is only what has to now be taken care of. So with all of these key initiatives that are helping to drive and facilitate trade, we believe that just in a matter of time, Africa can become more integrated. I'm sure you were aware of the Intra-African Trade Fair that happened last year. The first was in 2018 in Cairo. We had the one last year in South Africa. We had more than 1,000 African exhibitors under one roof. It's never been done. We had almost 7 African heads of states. It was really massive, and we are beginning to see integration. We're beginning to see Africa trying to do more with itself. We own the music, the creatives today. How can we facilitate the creatives? Afrexim Bank is working, and we have started availing financing. We now have what we call the Africa Film Financing. We're already financing 2 movies, one with Genevieve Binaji, and we are helping to basically drive the creative sector. We have what we call Canex. So we're creating platforms, first to give visibility, importantly, to create the infrastructure, which will help facilitate. Because once it becomes easier, once Nigeria realizes that I only have to send 200 net position to the other counterparty, the central bank realizes then you would realize that the trade between the countries will begin to increase. We're also driving advocacy, regional economic bodies to be able to find what are your comparative advantage, because the FCFTA was first seen as, oh, Nigeria is going to become a dumping ground. Egypt will become the larger population economies will become a dumping ground. But we are now beginning to enlighten them to say, why don't you focus on the area of comparative advantage? If you produce rubber as Liberia, can you send the rubber product to the car assembly plants in South Africa, so that South Africa does not need to focus on all the rubber components in that car assembly? So that's really the kind of work we're doing. And we believe that with the increasing external shocks that we're seeing, it's becoming very glaring that African countries have to work closely together. We're currently trying to increase our capital, general capital increase. I've been in the bank for 7 years. I have never seen the response we have seen in terms of from the shareholders in trying to recapitalize the bank, because they are beginning to understand the relevance of the bank in helping to drive regional integration and, importantly, driving Africa's economic emancipation to insulate us. Why would someone sneeze and then I'm the one taking the medication for the cold? You understand? So those are the kind of things we're doing with the able leadership of the president and the executives. And we believe that the FCFTA we're also financing the secretariat in Accra, staffing technical capacity to ensure that they can do their work. And as soon as they become move from infancy, then we can then let them be and to continue to do the work that the bank was set up to do as a baby of necessity. We're created to respond to difficult times like this. And that's basically the work the bank is doing, sir.
I'm going to follow up by asking the question. I mean, the response differs from country to country. And being a Nigerian, you know how we have struggled, especially about the point you made, how some countries are afraid that they then become dumping ground. It's good to look at this, in an optimistic manner. But I wanted to ask you, 1-2 years after, how are attitudes changing around Africa, in your view, towards the continental free trade deal?
Thank you very much. So we are beginning to see, as once you see the benefits, then the fears, we generally fear what we do not understand. So once you begin to have transparent systems, part of the things I didn't mention was because we realized that infrastructure has to play a key role in all of this conversation. So we also have created what we call the Africa Trade Exchange platform, where companies are coming to create. First, they have to go through the compliance process, what you call MANSA, where they provide us all their KYC information. We screen them and then upload them on the ATEX. And then once the trade begins to occur through a payment platform where he's assured of payment, so you begin to realize that the trades are just happening by themselves. The externalities are diminishing every day. The negative sentiments are diminishing because the trader would always find where his business can make the most margins. So once he can cut his cut of sale, you wouldn't need to tell him to go to South Africa to go and buy. He will buy by himself. Today, Egypt is sending us perhaps the largest quantity of POP cement for plasterboards and for roofing. Nobody in the past was talking. But as the barriers to trade are beginning to diminish, Egypt Air is sending a cargo plane from, in the past was just, as soon as all those bilateral arrangements have been, you're realizing that the response is becoming more and more positive. And so long as there is synergy and there is exports, remember that so long as the goods of exports, standards, the trade will occur. We are about to commission what we call the Africa Quality Assurance Center. It's along the Lagos-Ibadan Expressway on the right. Testing goods, we're working with Bureau Veritas to certify goods for export. The lab has been fully built. We should commission by the end of this month. Once we can put African stamp, a stamp on those goods for exports, you look at it, you know what you're consuming, the trade will occur by itself. And that's really what the focus should be, as against the sentiment that I am becoming a dumping ground. Because in any case, you're already buying something today. So people say China is dumping on us, but there's a reason why we're buying from China. And once we can create those same structures with other African countries that have advanced industrially, you would realize that those trades will occur seamlessly. Thank you.
Thank you very much. Thank you. Thank you. Surely, I mean, I'm going to come back to you to just, if we have time, highlight some of the major interventions of the bank in Nigeria. But let me go back to Professor Sachs. Prof, you've been a very strong advocate over the years of multilateral cooperation, whether it's about sustainable development goals, the Paris Climate Accord, and the Green Deal. You have helped to push this over the years. Do you now worry that the world is entering a phase where polarized blocs are re-emerging? And are you worried that these initiatives that you have not only supported but really worked hard to advance will suffer as we enter a very polarized world?
Well, of course, I'm worried, but I think what we've just heard about African integration is extraordinarily important and positive, and really can enable the kind of world we should have. It's worth saying that the population of Africa, taking North and Sub-Saharan Africa, is about 1.4 billion people today. And this is almost exactly the population of China and almost exactly the population of India. But because of the colonial legacy, Africa is divided into 54 individual countries. And that has meant that the geopolitics of Africa has been very weakened. It's hard for 54 separate smaller countries to play a role when they're compared to, say, one large country of 1.4 billion people. So African integration, in my view, is absolutely exactly what's needed right now on many counts, on Africa's economic development, because if Africa is one economy, it will develop the same way that China as one economy developed. China grew at almost 10% per year for more than 3 decades. It had a more than 30-fold increase of total production. China shows what Africa can accomplish, and I think that this is very positive, and it depends on this integration. But another aspect of China is that it has an integrated infrastructure, a national power system, a road system, a rail system, as a system. Now, with Africa, it's been 54 countries, but now there is really the opportunity not only for the crucial software infrastructure that the bank was just discussing so wisely, but also for the physical infrastructure. I've been looking at a famous undone project in Africa, Grand Inga, which is a potential of 40 gigawatts of clean green hydropower on the Congo Basin, which could power much of Central Africa. In other words, a whole region. But it requires thinking beyond a single country. It requires the scale of Africa diplomatically and financially to pull off such an arrangement. And there are many kinds of physical infrastructure, power, fiber, transport, rail, and so forth, that would make a completely transformative difference. One of the points on globalization that I've been urging is that Africa should be represented as African Union, the 21st member of what is now the G20. You know, the G20 is a crucial venue for financial cooperation. It's got 20 members. One of them is the European Union, which has about 450 million people. Well, if the European Union is part of the G20, why isn't the African Union with 1.4 billion people? Because Africa needs a seat at the table globally on all crucial financial issues. So am I worried about the direction? I'm worried about my own country, which is so desperate to keep a global hegemony, which it can't do, that it is saber rattling in East Asia and in the Black Sea. We're reliving, I must say, the Crimean War of 1853 to 1856, when Britain and France said, we'll teach Russia a lesson, we'll push them out of the Black Sea. Well, you know, this is not the way to have a world that is functioning properly. So I'm very worried, but I also see that there's a way forward with strong cooperation of China, India, African Union, Latin America, European Union. I hope the Anglo-Saxon world fits in and cooperates nicely. The United States really needs to change direction from thinking about how we run a global unipolar world, which is a fantasy. But the US has military bases in 85 countries around the world. Oh my God, and we have so many problems at home. We need a completely different approach. So worried, yes, but practically speaking, there's a way forward. And African strong political and economic and financial and infrastructural integration is absolutely key. By the way, just to mention, Africa today is 17% of the world population. By 2050, it's going to be 26%. And by the end of this century, something close to 40% of the world population. So for the sake of the world, we need Africa to really get everything together and get the development done absolutely successfully. And I think that will benefit the whole world.
Thank you so much. Thanks, Rob. You know, Prof talked about why we must integrate and collaborate, whether it's politically, economically, or even in building infrastructure. There's absolutely no way Africa is going to make progress on those fronts without significant foreign direct investment. And I wanted to ask you, what do you hear from British companies which they hold up as reasons or impediments to capital flows into Africa and specifically into Nigeria?
Thank you very much. Well, first of all, I mean, I think when we look at regional integration, and I was posted in Rwanda for 3 years, Rwanda, Burundi, East Africa, the model of the East African community with some of the very effective both decisions and decisions implemented that we saw there. And again, we have a specific trade development program, Trademark East Africa, which now works actually in Nigeria. So the East is pretty redundant, but there we are. We're looking at how the Port of Mombasa, for example, and indeed Dar are facilitating trade right the way through to the Democratic Republic of Congo. It worked. And sure enough, there are problems. And you talk to finance ministers in those states, they talk about the loss of revenue, tariffs, and so on. What they also talk about, though, is the speed of goods, the kind of investment that you can attract to a place like landlocked Rwanda as a consequence of that cooperation. And also, to be honest, the benefits and very real benefits of the non-Western investments, Chinese and out with that's come in rail and so on to support. So we wholeheartedly agree with what you said, to be honest, about the need to remove those trade barriers and indeed to do that across Africa and to find ways, to be honest, to increase confidence between African states. Coming to your question, but briefly touching on the war in Ukraine, Professor Sachs, I'm afraid I wouldn't characterize the situation there in quite the way you have, nor would I characterize an illegal invasion with Russian tanks rolling west for the first time since the 1940s and in very different circumstances at that time as something for which, I don't know about the US, but say the UK would take blame. Whilst we regret the consequences of that war, it's certainly not the UK that's preventing grain from leaving Ukraine, or indeed fertilizer, quite the opposite. What I would say when it comes to the challenges and opportunities of foreign direct investment in Nigeria, firstly, there's a huge appetite. There's lots of British companies here, and they have been here for a long time. They've also taken seriously the need to backwardly integrate, so that, in a sense, frankly, they're producing in Nigeria with Nigerian goods. Not everything can be done in that way, just you can't produce everything in the UK in that way. But to a large extent, they've gone as far as they can, or at least are trying to make that journey. The challenges they face are foreign exchange, not unique to them, of course. I believe that's probably true for any foreign direct investor from any country. We would hope to see in time a single unified exchange rate that could assist certainly with that foreign exchange challenge. Again, not a unique call from us. We appreciate why moving in that direction can be challenging, but certainly the appetite for foreign direct investment will be increased by seeing that. And I think thirdly, we've seen some of the infrastructure challenges really in the perception of kind of trade facilitation, the speed at which goods can move through the port and the speed at which goods can go out. And I think both of those things are a challenge, bearing in mind, as I said, many British manufacturers, certainly in Nigeria, are trying to export as much as they are trying to sell within Nigeria. And they want to get goods in and out, imports in, sure enough, but they're trying to get stuff out. And Guinness actually exports to the UK, for example, from Nigeria, because obviously Nigerian Guinness is excellent and a good deal stronger than British Guinness and Irish Guinness. So I think there's real world challenges around that. Again, we're working with the Nigerian authorities. What I would say, though, is the massive appetite, huge appetite. We have foreign direct investors, potential investors coming through all the time who are saying, we hear about tech, what can we do? We hear about infrastructure, what can we do? So what I wouldn't underestimate is the goodwill towards Nigeria and sympathy towards resolving these issues, and indeed the long-term prospects, as Professor Sachs described, not just of Nigeria, but of Africa. Someone said to me, if I'm not investing in Nigeria, why am I investing in Africa? And I think that's a very real question when you're looking at the prospects. So I am very optimistic. I'm also very optimistic when I talk to British investors. We just need to resolve these challenges, and we can.
Thank you very much. Peter, let me come back to you. I said I was going to ask you to just highlight some of the pivotal partnerships and investment in different parts of Nigeria that your bank is involved in by way of preparing the economy both to take advantage of the Africa Free Trade Agreement, and of course of just providing better life for the people as well.
Thank you, sir. So we have to understand the role of Afreximbank. The bank was created by the African governments in the 80s when they realized that they needed an institution. While they had the African Development Bank, they needed a bank that would help the continent respond to the difficult times. So we are really a bank, an intervention bank, using finance as an instrument of development. And that's really because we struggled with this point with the rating agencies for a long time, who felt that why would you go and lend this amount of money? They see us perhaps as partially reckless, but really we were created for that purpose, to intervene in the difficult times. And if you look at from the last 5 years, at least just taking the last 5 years, when we had a commodity price crash in 2018, we came up with what we call the counter-cyclical trade mitigation facility, to help companies basically mitigate the impact of the trade of the depression and the depressed commodity prices. We help them to restructure their loans, give them capital to just buffer through the period. And then just as we're coming out of that, we went into COVID. And then we had to respond again with what we call the PATIMFA, which we call the Pandemic Trade Impact Mitigation Facility, where we disbursed more than $10 billion supporting. We issued a $2 billion guarantee for the imports of the COVID vaccines across the continent. It was after Africa responded through Afreximbank in issuing and basically taking its own destiny in its hands. That was when we began to see foreign response. Then the MasterCard Foundation came to partner with us. We had the MTN coming to partner with us. And then the World Bank issued a counter guarantee for $500 million of the $2 billion. But that basically underscores why we have to take our own destinies into our hands. Because to the extent that you keep having your cap in hand, begging, you will always continue to be a victim of external shocks. Just as we're coming out of the COVID again, then we had the Ukraine crisis. And I think for this one, because of the experience we had gained from the co-trial, from the Patimpa, we're more proactive with the Ukraine crisis, because we had seen that invariably we were going to still be the largest, or we will be most hit. So we came up with what we call the UCAFPA. We like these acronyms: Ukraine Crisis Adjustment Facility Program, financing program for Africa. Very interesting program, $4 billion. And we have actually seen that this 4 billion is going towards about 10 billion again, because we're having partners coming to say, we see the work you do. We want to partner with you in deploying this financing. What is the UCAFPA doing today? Under the UCAFPA, we have basically segmented all the impacts that we have seen that the Ukraine crisis is having on the continent. We've seen the one on fertilizer and food. So basically, we worked with all the producers in Dorama, whom we had financed originally, working together with the other international banks. Notori, whom we financed the turnaround maintenance to boost their capacity. The Dangote, which we are the largest financier, to say a portion of your outputs must now focus on Africa. And then we put them on a large vessel, and then we can help in ensuring that Africa has a share. Because a Dangote would not sell its fertilizer locally in Naira when it has dollar loans. So, but helping in aggregating demand and providing financing, maybe in a spread out manner for these countries, we're helping them adjust to that. So we have what under the UCAFPA, we also have what we call the Import Reorder Adjustment Facility, where prices have suddenly spiked. Between February and date, we have financed, petrol, energy in Nigeria, in excess of $4 billion in terms of swaps, because in the past, $40 million were bought, a 30 KT, 60 KT parcel of PMS. Today, you need triple that amount, of course, tied to the crude prices. So we are working using then we have what we call the NERAFA, that's the New Exports Acceleration Facility. We want to grow new exports, because that's the only way. So we are basically looking at projects that have 2 years timeline to completion. So once a project, we can see that within 2 years, it's going to complete and can begin to contribute effects to the country through export. That facility is basically dedicated. We're working with the central banks to basically provide them swaps, because as you can see, 2 weeks ago, it's public now that we disbursed $750 million in Ghana to help Ghana, because we can see as soon as the credit rating, and it's a lot more even about perception. The Ghanaian bonds now are trading in junk, just because this was Ghana that just a year ago, Ghana was where we all wanted to invest, right? So we're working with the central banks, providing them swaps in a manner that can help them adjust, right? And also looking inwards to say, how can you boost your foreign currency generation in more sustainable manner in industrialization, export manufacturing, to ensure that they ramp up their production. We're also looking at the countries that are tourism dependent to help them finance the gaps in tourism, where we are seeing that maybe because of the crisis, the older tourists that will come in big planes from Russia and Eastern Asia, Eastern Europe, we're helping them to basically finance those gaps to ensure that they can stay in business at least up until when this will go away. Now, more specifically to Nigeria, today I think we are the largest financiers of all the Nigerian banks. Today we finance literally perhaps 90% of the Nigerian banks. We give them trade lines. We have what we call the AFTRAF, which is called the Africa Trade Facilitation Program, where we confirm their letters of credit. Because today, because of the perception that there's no FX in the country, So when the Nigerian banks LCs are no longer being accepted by the international suppliers and buyers. So we had our confirmation being an investment grade retail bank. So what do we do with the banks? We confirm their LCs for up to 6 months. At least within that 6 months, it's enough time to enable them gather the FX. And then even at the end of the 6 months, if they're not able to pay, we refinance for another 6 months. So it has a 12 months. So all of this is helping create some adjustments, so that instead of taking the heat where everybody presents their import bills to the CBN, so by supporting the banks, we're invariably supporting the central bank and its ability to manage its own FX resources. We're working with perhaps almost all the big oil and gas, because we want to focus on export capacity. And then we are also trying to reverse the trends, things that lead to capital flight and lead FX out of the country. Perhaps we've heard of the Africa Medical Center of Excellence. We've just working in partnership with King's College London, who have given us fantastic support, Deputy Commissioner. It's going to be located in Apo in Abuja. We've finished the groundbreaking construction, have actually started. We've hired the Chief Medical Officer, the Chief Nursing Officer, Chief Financial Officer. I mentioned the Africa Quality Assurance Center in Shagamu. There's one going to be in Kaduna, basically going to test. The one in Shagamu is the first. Commissioning is aimed for the end of this month, where we will test good food for export to the OECD countries. It's working with Bureau Veritas. We have been accredited. So we're just waiting for commissioning. And we know today it's shocking that good food samples have to be sent to laboratories in South Africa for testing. It's really just unbelievable. There are some certain categories of tests that are only available in 2 countries, in South Africa and in Egypt, which should not be the case considering our population. Thank you.
Thank you so much, Peter. I mean, some very relevant information about the bank's intervention in Nigeria, and I'm sure some of you would probably like to talk to Peter after this session. Wonderful. Thank you very much. Of course, I know about the upcoming medical center in Abuja. I didn't know of the involvement of your bank in it. And with such interventions, we can begin to reduce almost $1.5 billion in medical tourism that we spend abroad. We can begin to hold that here. I give the example, just there's an hospital that I know of, and I've seen people go to that hospital, people who normally, if they have a headache, they would take a flight and go to, well, I don't want to say London. They'll take a flight out. But I'm seeing people now go for diagnosis. Sometimes in the past, if they bother to do diagnosis, they flew abroad for the treatment. They're not only just doing diagnosis, they are actually going in for management of their problem as well. So the more we can multiply these, the better for Nigeria. But there's a question I must ask you, Deputy High Commissioner. In February, Nigeria will be having a presidential election. How is Britain helping Nigeria prepare for what many say is a very pivotal election in Nigeria?
Thank you. Yes, and just on the medical side, I mean, you've got so many, I know people often point at Nigerian doctors out with Nigeria in London and so on, but one of the amazing things about the globalized world is the consultancy that you see, for example, in cancer hospitals in Nigeria. You've got Nigerians in the UK, doctors in the US, I'm sure elsewhere, on a Zoom call, consulting and treatment then in Nigeria, in new hospitals that have been built. I mean, I've seen it's fascinating and amazing, so that's very impressive. The election, it's very important. Our position is very clear. We don't vote. I hope you vote, but I don't vote. My interest and the UK's interest is in the process of the election, and indeed ensuring that the people of Nigeria get to choose their next leadership, not just the president, of course, because there are many elections in Nigeria in that time. We're looking for a free, credible, and peaceful election. I've observed many elections in Nigeria personally. I was in Ekiti watching the people vote, and it's a long and dusty process. But what was encouraging for me in seeing that election myself and watching the outcome was how the technology worked. And I think that's really important to know. Your votes count, electronically transmitted. I watched that happen myself, watched the INEC officials do it. So people should be reassured by that. I think that would encourage people. And the transparency that assures as well, which I think is important. And our interest is in ensuring that. Nigeria is, one of the largest democracies in the world. And what happens here matters to the advent and the movement of democracy across the world. And as I said earlier, we firmly believe that the world and democracy go hand in hand in terms of progress. So we're very keen to ensure and help with that. So I guess we're encouraging that. It's not our election, we don't vote. In the end, it's Nigerians and the Nigerian Electoral Commission. Our interest is in that process. And then the outcome, again, we're agnostic about who wins. The key thing is the promises they make, that they're able to keep them, that they can move forward the economy, that they can deal with security, they can deal with the challenges that voters, when I ask them when they stand in that queue, tell me about. So again, we will engage with everyone and anyone who might have an interest in that to try and talk about solutions, what we can do, indeed what British investment would like to try and see happen. But in the end, these are Nigerian choices. Key thing for me is that Nigerian people choose their leadership.
Thank you very much. Professor Sachs will give his keynote address shortly, but I have one more question for him before he does that. Prof, there's something that we can at least say that is a thing of joy in Africa. We're no longer talking about the age of plethora of wars across the continent. The guns have gone silent in quite a large part of Africa today. And I wanted to ask you, as your final comment, what is your message to the elite of Africa at a time like this, Prof? It looks like you're muted.
Sorry about that. I was saying that you are right that some of the wars have ended, but let's remember we still have a lot of conflict, unfortunately, in the Eastern DRC, in the Horn of Africa, in Ethiopia. These are often wars of desperately poor places that really need development rather than conflict. I think my main message to the elites is Africa has the opportunity and the need really to get its act together right now. Africa's destiny, of course, is in Africa's hands more than has been the case for centuries. Africa should play a global leadership role. It will be soon a quarter of the world's population. Invest, invest, invest. Starting with investing in people. Make sure that every African child is in school, that every African child that has the aptitude goes on to higher education. Build the skills. The whole world needs Africa to build the skills of Africa's young people. This is absolutely crucial. Build the physical infrastructure. We are well past the day when it is safe for people to be without electricity or without clean water or without fiber connectivity. All of this is quite straightforward, and the integrated strategy, continental-wide strategy, is now feasible. Make partners with all of the world. Don't let anyone force Africa to choose sides. China is a crucial partner for Africa's development. India is an important partner for Africa's development. Europe can be an important partner for Africa's development. The United States, late in the story, is looking. Don't choose sides. Insist that the counterparties be responsible, mature, stop bickering and fighting, and stop trying to drain the continent of its resources also, which continues to this day. There are enough Western corrupt buccaneers around that I meet all the time in Africa. I would like to banish them all from the continent because they continue to want to steal Africa's resources. They are a disgrace, but they're often billionaires at the same time. So disgraceful billionaires have their way to find their way around, spread their money around, and they should be avoided like the plague. So all of it is to say, in summary, this is the time for Africa's rapid development, no question. Africa needs it, has the capacity, and it should be continent-wide. And I think you've heard some brilliant words from a crucial institution in Africa, the Exim Bank, that it's playing a great creative role. So much can be done now.
Thank you very much. Thank you very much, Prof. I think that is a fitting point at which we bring this conversation to an end. Let me ask you to give an applause to Professor Sachs, Peter, and the Deputy High Commissioner. Thank you so much. Once again, we thank you, Prof, for waking up so early to join us. I don't know what you want to do now, whether you're going back to bed.
My great pleasure to be with you. Thank you, and great to hope to see you soon in person.
Thank you so much, Prof. Thank you very much.
Bye-bye.
We will now have Professor Kusumanu deliver his keynote address. I'm not Professor Sachs, as I had inadvertently alluded earlier. It will be keynote address to be given by Professor Kusumanu. Thank you very much, and I hope this was an interesting session for you.
Okay. Well, thank you very much. I'm able and willing to start whenever you are ready. If you are ready, I can start. Okay. Before, though, I do begin, let me share the slides from my screen. I think that probably would be better. But okay. But I do want to give a shout out to some of my friends or our friends from MIT in Nigeria. We had MIT Regional Entrepreneurship Development Teams, MIT REAP, from both Abuja and Lagos. And we have many alumni as well that have gone back to Africa as entrepreneurs, sometimes platform entrepreneurs. So we're all very grateful to see that you're working with us, and we look forward to what you do in the future. So let me speak here about my work on platforms, okay? And I'll give you an introduction to that. Sharing my screen, okay? Can you see my screen? Yes, okay. All right, so I'm going to talk about the business of platforms, and this is from a book that I did with my co-authors, Annabelle Gower from University of Surrey and David Yaffe of Harvard. We cover a lot of ground, and this is very important for entrepreneurs, businessmen, policymakers, as well as individual users. So I'm going to give a quick overview of platform thinking, some of our frameworks on market dynamics and strategy, and talk a little bit about the future at the very end. But I should mention that there is a double-edged sword to the issue of platforms, and that is they can become very powerful, they can become difficult to regulate. And so we also talk about self-regulation, government challenges over monopoly or digital content. So there is a negative side to this whole development around digital technology that we all need to be aware of. That's not my focus today. I am focused on the business side. So it's a whole other discussion as to what do we do about the power that comes out of this new technology and this new business model. Okay, so I'll do the best I can here. So one of the first points to make is that platforms are pretty much everywhere. We see them initially, of course, with computers, and then mobile devices, social media, video, enterprise software, and I've been studying all of these fields for about 35 years and started studying platforms about 25 years ago. My first book on this subject actually was 1995 on Microsoft, called Microsoft Secrets. The second was 2001 with Annabelle Gower, called Platform Leadership, and then a number of others. So we see these platform entities that have come up, particularly with the internet and computers. Now we see them more in messaging, payment systems, Internet of Things. So they're really everywhere. What do they mean? And let's talk about that. The other point here, of course, is that these platforms don't work in isolation. They work with other platforms. So we have platforms working on top of other platforms or alongside or within other platforms. In some ways, the mother of all platforms that we see today is the telephone system. And then we have the internet working alongside the telephone system. So these are all platforms of one shape or another. But what we're most interested in is the companies that come out of this. So you all know, of course, that some of the most valuable companies in the world are platform businesses in one form or another. And I will explain what those different forms take, of course, led by Apple, Microsoft, Alphabet, Google. These are trillion-dollar businesses. But we also see very small companies, and that's why platform thinking is so important for entrepreneurs. You basically need a computer or a smartphone and a little bit of software, and you can actually get started as a platform entrepreneur. And that's what we see. So roughly half of all the unicorns, the billion-dollar private companies, are platforms, as I mentioned. When I look at business plans in different competitions we have, I'm also seeing roughly half to even more being platform types of entities. So this is important for many different types of people to understand. We also teach quite a bit about the different way of thinking that is important in a platform type of business. I'll talk a little bit about that as well. So let me first kind of take you back to the classroom in a simple way. And this is a graphic that my colleague and former student, Annabelle Gower, put together a few years ago. We've been using the term platform in an internal sense or a product sense for maybe 40 years. You've probably heard the term used with reference to an automobile company or different software company. There's some internal foundation and building blocks that a company would use to create multiple products or services around that common foundation. And this is an internal platform. It's controlled within the firm. Managers have authority over it. It's essentially closed if we think about outside interfaces. It's closed to engineers within the company. Like Toyota has 5 different car models, all built around its small front-wheel drive platform. So they have a Corolla, they have a Celica, they have a RAV4 SUV, and they have other models like in the Lexus line. Now, the other type of platform extended to that is a supply chain platform where these building blocks are opened up to suppliers. And that's a different kind of platform, like Toyota's global platform for building automobiles. But that type of network is controlled again by contracts. So it's somewhat open, but really it is governed in this hierarchy. What we're talking about in digital platforms, beginning with computers, and early on was personal computers, later on mobile devices. We're talking about an industry level platform. We'll call them industry platforms. That's a term Annabelle Gower and I used in 2001. And by this, we mean that the platform is at the center of an ecosystem, not a network of suppliers per se, but it really is a set of firms that become partners of the platform company and utilize the technology for their own reasons. And they create their own products and services, like applications that run on Windows or applications that run on Google Android, or it could even be different types of components that work with other systems, like in the automobile industry. So it's a different type of platform that we are talking about when it comes to the digital world. So here's a simple graphic that I use to illustrate this. And by the way, I spent a lot of time on the automobile industry because I started out studying the automobile industry actually now 40 years ago. But in the automobile industry, you've got the original equipment manufacturer, the OEM at the top. You've got suppliers under those, and suppliers of suppliers, and suppliers of suppliers of suppliers. But all those relationships, the entire innovation process is controlled by contracts, one supplying the other. But in the platform world, we have this more nebulous network of firms and users that are working with each other or choosing to build around a common technology. So the idea conceptually is the same, that we have a product platform, an internal platform, reusable modules managed by contracts, but the industry platform, the platform company is also often providing some kind of reusable components or services or modules that other companies can use to build their own products or to provide their own suppliers. We call those complementers. The other distinction, I'll talk about that in a moment, is that industry platforms are not driven by contracts. For the most part, they're driven by network effects. And they could be weak or strong, but it's a different phenomenon, and I will explain that as well. The idea also of having complementers, not suppliers, working with your platform is also different. And here, for example, if some company builds an application that runs on Microsoft Windows or the Apple iPhone, they are not a supplier of Microsoft or Apple or Google. They are a complementer. They're not being paid to do what they do for the most part. They're doing it as part of their interest in the platform, and they're pulled in by usage of that platform, which is connected to the phenomenon of network effects. Okay, so let me just give a quick definition here. So what is an industry platform? It's a foundation, product or service that many people and organizations can use to exchange information in some cases, like in social media, and also to exchange goods or buy and sell goods, like on a marketplace, Amazon Marketplace, or I know you have many of those types of firms in Nigeria as well, and otherwhere in Africa, but also to sell complementary products and services. So complementers of Windows or of Android or of the iPhone or even of Amazon Web Services. These are all users of that platform. So then the phenomenon of network effects is such that the more users or complements you have of that platform, the more valuable that platform becomes, at least theoretically. And network effects here, these are self-reinforcing positive feedback loops, where it's not just feedback, but user experience or value in the platform increases with each additional user or each additional complementer. And the growth potential of a network like this is geometric or maybe even exponential, but it's certainly not linear. And it's that kind of exponential growth that has really attracted investors as well as entrepreneurs and also drawn in users. And social media, it's quite obvious. Friends bring in their friends and friends of friends and friends of friends of friends. And very quickly you get from a couple users to millions or tens of millions, hundreds of millions, even billions. The other point about this is that the platform becomes essential. So the user interactions or these complementary innovations like third-party applications would not occur, or at least they would not occur so easily without the platform providing that intermediary function. Now, there are many, many different types of platforms, and I'll show you some examples later, but what do they all have in common? And that's very much what we try to tackle in this book and give a common understanding. So the first point, and I think all researchers on platforms agree, platforms try to bring together two or more market sides, and a side is a market participant. Second, they generate value from network effects. They may have other value as a product, for example, or as a service, but the fact that they are generating this network of interactions or network effect gives them a special value. And we talk about direct or same side network effects like user to user, as you might see in a social media network, but also indirect or cross-side network effects, as you might see in a marketplace like buyers and sellers, or users and innovators with, say, an app store. Third, all platforms must also solve what we call a chicken or egg problem. And this is a technical problem defined in economics, but it's also a very practical problem for entrepreneurs and managers. It's really, how do you get started? How do you get those network effects started and create that special value? So these are three characteristics, and it's kind of like playing three-dimensional chess for managers and entrepreneurs, because the business model is complicated. You're not fully dependent on the quality of your product or what you do to sell your product. You're reliant, or you become reliant, on users adopting it or complementers adopting it and ecosystem partners emerging. So it's definitely a more challenging way of doing business than a straightforward sell a product or sell a service and hope that people buy it. So again, I just want to repeat this point. It's not just a self-reinforcing feedback loop, but the potential value needs to increase with each additional user or complement. So the challenge for entrepreneurs and businesses, or even governments, if they're using a platform for government services, is to create that special kind of increasing value. It just doesn't occur automatically. My colleague at MIT, Robert Metcalfe, introduced a law a number of years ago. He's also co-inventor of Ethernet and routers. And basically, this is just providing a way to calculate the number of nodes in a network. And this directly correlates to the value that we see, or the utility we see in these kinds of network businesses. So if you have just two nodes, say with a telephone system, you basically have one connection. So one telephone is useless, two telephones has a little bit more utility, 5 telephones, you can have 10 different connections, 10 telephones, you have 45 connections. And when you get to many more users, you have many, many more connections. Very quickly, you can get up into billions of potential connections. And that's what you see in the social media networks. And that's why advertisers love to invest in these networks. And again, we have the two sides, same side and cross side in the platform. And there's many examples of network effects historically. Don't have time to go into them now. Telephone is a great example that we write about in the book. Railroads, this was a physical network effect when railroads were basically forced by governments to adopt compatible standards in their track gauges. All the networks of different railroads could connect to each other. So rather than only be able to drive around Boston, you could drive a train from New York to Boston, or from Boston to New York to San Francisco, for example. And all of the train networks became more valuable by adding those different nodes. And that was really a direct network effect that stimulated a lot of other investment. But yellow pages, credit cards, computers, fax machines, these are all examples of physical products that also had network effects. And today we're dealing with cryptocurrency network effects, for example. Okay, so hopefully you understand that. The other major contribution that came from our work is to divide all platforms into two major types. And we understand there are many subtypes, but for the most part, we concluded that platforms do one of two things. The first one we call innovation platforms. And that's what I wrote about originally in the 1990s, looking at Microsoft and Intel. And before that, even IBM with mainframes. And we call these innovation platforms because the purpose of the platform is to stimulate outside companies, we call them third parties, to develop their own products and services that leverage the common platform in some important way. Usually this is something like an operating system or a computer or some kind of a device. I also wrote many years ago about the video recorders, VHS versus Betamax, which is one of the first cases of network effects that I was familiar with. This is a story going back even before the personal computer. And it can be physical, but these are all examples of digital. But the whole idea is to get outside parties to create something that complements the platform. In the case of video recorders, it was pre-recorded tapes. In the case of computers or smartphones, it's these applications and services. The second type of major platform category we call transaction platforms. And here again, the purpose is to enable an interaction or a transaction, buying and selling goods or exchanging information. So we have marketplaces, we have social networks, we have other examples, and I'll give you some more. But the platform is an intermediary for those exchanges, right? Just like in the innovation platforms, the platform is an intermediary for the innovation process. Now, we know there are many different types, but basically this helps us understand the broader world of platforms. And here is just a summary slide of how they break down innovation platforms. And again, it's similar to the product platform idea that in many cases, the innovation platform is a product, but it's also a platform, and it's doing both. And it's opening up those building blocks, which a company might have used for its internal products and services. It's opening them up to the outside for third parties to add their own complementary products and services. So the idea is very similar to the old operations internal platforms that we talked about 30, 40 years ago. But the technology or the product itself becomes core or essential to solve some broader industry needs. So we have lots of companies and users jumping in here. And the transaction platform is largely marketplaces, app stores. It could be mechanisms to connect advertisers with users. It could be other types of services that we see. But this service becomes this core or essential element to some broader industry need. And that's how the network effects occur or the bandwagon effects occur. Now, many companies that have innovation platforms are actually introducing transaction platforms, or companies with transaction platforms are introducing innovation platforms. So there's a kind of a hybrid approach that is very common. And if you think back to the chart I had before, then I can show it right here again. I think that should show up here. We've got many companies on one side or the other side, but then a bunch of other companies, hybrid companies in the middle. Apple has both an innovation platform, which is iOS for the iPhone. It also has the App Store for linking together users with those third-party innovators. Android is an innovation platform, but Google Play is an app store. Even Google Search is a kind of transaction platform when it's linked with AdWords for linking advertisers to those searches. So many companies are doing both, but conceptually there is a separation between the innovation promotion function and the transaction promotion function. But the most powerful and valuable platform companies we see in the world are really doing a hybrid, a combination of the two. And again, it's the usual suspects list of Apple, Google, Microsoft. And there's some smaller firms, Valve, Salesforce, and certainly over in China, Tencent, for example. And of course, Amazon has put itself into this, doing both with Amazon Web Services, Amazon Marketplace, and a number of other platforms and products. Okay, so this is the fairly complex world of platforms that we're getting into. So let me summarize what my argument is. That first, a platform should be identifying some kind of a market failure. And it's a market failure where there's two or more parties or sides in a market that have difficulty finding each other. If that's the case, a platform can be a solution. And if it's users having difficulty finding innovators, an innovation platform might be the solution. If it's more of a marketplace breakdown, then a transaction platform might be the solution. And then, of course, there can also be some combination of the two. What we also find is that many product companies realize that they can't do all the innovation that they need in-house, and so they open up their product to third parties. So if they make the decision that they can create more value by enhancing the product, by connecting them to the outside world, outside users, then try adding an innovation platform to your product business. The same thing on this more of a service side. If you can create more value by connecting market sides rather than creating and reselling the service yourself, try adding a transaction platform. The idea here on the service business would be hotels like Marriott are adding a platform side for sharing rooms or apartments or houses, just like Airbnb is doing. Airbnb decided there's more money in connecting sides, people with rooms to rent or houses to rent, and people that want to rent those properties versus building or managing those properties itself. So it really does depend on the setting where there is more entrepreneurial opportunity or more money. Okay. So what makes a good platform? Just very quickly, it's got to be easy to access. This is really the demand side, open or free. There's got to be a strong ecosystem that does merge third-party apps, rooms if you're an Airbnb, or drivers if you're an Uber, or buyers and sellers if you're a marketplace. So again, this occurs after the fact. The strategy that has to go into this is to figure out how do you build up that ecosystem, or how do you encourage demand. We also find good platforms are modular because there's lots of things people want to do with them that we didn't anticipate. So they need to be flexible, they need to evolve, they need to be open to innovation. The platform owners also need to find a way to build up trust, and that comes from quality, reliability, and often curation, making decisions as to who can do what on the platform or who can sell what. So many things go into that platform, but if you can build a platform business, either from zero or to enhance your existing product or service business, you have many benefits. You can leverage outside innovation rather than hire millions of engineers to build applications. Facebook, for example, just created a side opening up its data and its functions to outside engineers. It could never have built the millions of applications that run on Facebook. Same thing with Microsoft, same thing with Google for Android. So it's really asset light and people light. So many benefits to the platform strategy. The other phenomenon that we've often talked about is winner take all or most. And here we get into regulation issues and self-governance issues, that when you have very strong network effects, and also when multi-homing is costly. Multi-homing means using more than one platform as your home, right? Your iPhone is your home for communications, or your Windows computer is your home for computing, or Facebook is your home for social media. You generally don't use more than one platform. And this is what the platform companies want. And of course, using multiple platforms for the same purpose weakens the network effects or the market share of any one platform. So this idea of network effects and multi-homing, these are new strategy concepts. They really didn't exist in the conventional world. And if you can have those two factors, you're likely to see one or two powerful companies emerge in a market. But you also need some other factors that are more traditional strategy concepts. There should not be too much differentiation or niches because that also fragments the market. There should also be high barriers to entry. Otherwise, you're just going to have lots and lots of companies jumping in. And that's why you'll see platform companies adopting new features, adopting whatever their competitors do to reduce the possibility of competition, and doing many things to make it more and more difficult for just anybody to jump into the market. So part of strategy here for platforms is to make users and complementers choose your platform and not somebody else's platform. Okay. All right. And there's many of us that have written about this for a number of years, particularly some of my colleagues over at Harvard and also at MIT, Dartmouth, Boston University. All right. So when we set out on this research, we set out this project for the book in 2015, really as a sequel to some other work we had done. We did a survey of publicly listed platforms in the digital space around internet services, smartphones, and personal computers. We were only looking at public companies that were on the Forbes Global 2000 list, which is a huge list. And we were not looking at older types of platform businesses like in the telephone business or credit cards, which are kinds of platforms. And what we found is that compared to our control sample, which were a set of firms, all the firms in the Global 2000 list in the same business, same set of businesses. By the way, these were all big firms, on average about $4.5 billion a year in annual sales. But the platform companies had half the number of employees to get to those sales. They had roughly 2 times the sales growth rates. They had almost twice the operating profits, but almost 3 times the market values. And so if you could become a successful global publicly listed platform company, you were very efficient and very valuable. Now, we realize there's data issues here. There weren't a lot of these companies. We also identified 209 companies that had competed directly with these 43 companies and failed. So that's a survival rate of about 17%, which is not so bad actually for entrepreneurship. But it's not easy to become such a successful platform. We also had some difficulty distinguishing, were these companies successful because of platform network effects or because they had a strong product or service that was the basis for what they were doing with their platforms. And that becomes very difficult to separate. But in any case, we were quite convinced that these were really powerful firms, and we had to understand the business models of them more clearly. And this is just some data summarizing the points that I just made. So I'll just leave this for you, but it is available in our book. We have a new project looking at unicorns, which is a much bigger sample. There were 959 unicorns identified last year by CV Insights, which is a company that tracks these types of things. And a unicorn is a privately held company that has achieved a valuation of at least $1 billion. So we had noticed years ago that platform businesses were very popular amongst entrepreneurs and unicorn entrepreneurs. In this sample of last year, we identified 420 platform companies. So that's almost half, 44% of the sample. 356 of those platform businesses were transaction platforms, and 64 were innovation platforms. This is not surprising to us because anybody can set up a marketplace of one form or another, but building a product or service that becomes core to some third-party innovators, like an innovation platform, is more difficult. What's interesting here, though, too, is that there's a platform premium of about over 60%. So investors were paying more for these platform companies, apparently believing that there's higher growth or higher profit potential someday along the lines. Now, this is a complete sample of companies. It's not the cream of the cream, like the product companies that have a platform premium of maybe even 3 times the market value of non-platform competitors. So we'll follow these companies and see what happens to them. But clearly, this is attracting a lot of interest among investors. I don't expect that you can see these slides, although we'll make them available to you and we'll also be publishing on this, but I just wanted to give you some quick examples. So this is from our innovation platform sample among the unicorns. Epic Games, the video game producer, leads the way. It's a product company, but it's created a marketplace. It's opened up to third-party developers that write applications or virtual goods types of services that they create that complement the video games. Canva, another company, collaborative design tool. So the tool is a product, but it's opened it up to third parties to add their own tools and content and let designers share that content. So there, the product is enhanced by a platform on the innovation side. We have Databricks for different cloud services, DJI Innovations. It's a drone company, aerial robotics, but it realizes it can't do all the software for cameras or analytics. And so it opens up its robotics platform, its drone, to third parties to create their own applications. So it becomes a kind of a platform. This is a Chinese company valued at $15 billion. And there's others, and it's mostly a case of companies with some kind of a product opening it up to third parties and encouraging collaboration or sharing of third-party content. If we look at transaction platforms, and again, there's many more of them, the leader among the unicorn companies is ByteDance, which is the maker of TikTok, which you've all heard of. So again, it's bringing together influencers with end users and then advertisers. So it's incredibly valuable platform that came out of nowhere and just became even the most popular used website in the world. And there's many others that are like Stripe, a payment processing platform. It's an intermediary function. Klarna, which is payment and credit financing for e-commerce. Again, it's inserted itself as this financing platform. Instacart for grocery shopping, linking shoppers with users. And then there's, of course, the stores. So it is a kind of a platform. There are network effects associated with that. Revolut, a super app for financial transactions, money transfers, and a number of others in the banking and mobile space. Another one, Zhongshu in China, sharing shopping tips for e-commerce. This is a social media online shopping platform. Fanatics is one of my favorite in the USA. It's worth $18 billion. Somebody came up with the idea of linking fans of different sports teams, whether it's in high school, college, or professional, with makers of different sports products, shirts with names on them or other types of equipment. So anything you want, you can get. And there's also online betting on sports that occurs along with it. So there's all different types of platforms, and I wanted to give you some examples for entrepreneurs. So we also talk about in the book how you build a platform business, and we think there are 4 critical steps. First, you have to figure out which sides are you trying to link. And then second, you need to solve that chicken or egg problem. Who is most important? Who is wanting to find some other party on the platform? How do you connect those two? Third is the business model. How are you going to make money from this platform network effect? And then fourth, finally, if you get to this point, you need to have some rules for managing the platform and the ecosystem so that you don't have harmful content or abuse your position. And I know we're running short on time, but just some quick examples. In the case of Microsoft, it was not obvious what was the most important side. And it really was complicated to set up the business. Bill Gates had to line up the hardware underneath the microprocessor. He had to line up PC makers to make the boxes. He realized, though, that software was useless without applications, or at least an operating system, and other programming tools were useless without applications, and you needed to build applications. And then finally, once you have all these pieces in place, you have users. Very powerful network effects, though, were really between applications development and users. So when it came to building applications, he gave away the software development kit originally for DOS and then Windows. This is very different. Steve Jobs, for example, with Apple, thought that the most important part of the platform was the actual product itself. So the Macintosh, for example, later on the iPhone, and he didn't give away the software development kit, he charged for it. And as a result, there were many fewer applications built for the Macintosh, which never really took over the market. And the iPhone, Apple adjusted and opened it up to the applications ecosystem with the App Store. So it's important to kind of understand what are the dynamics in your market. The case of Facebook, it was quite clear early on that the most important part of this market was getting users. And so just like Bill Gates made the software development kit for applications for DOS and Windows free, Mark Zuckerberg made access to the Facebook platform free. And then he brought in advertisers, and that's how he monetized it. The more users, the more advertisers, the more money to invest in the platform. He also opened up Facebook to application developers. There were tens of millions of applications that have been built, or active websites that are engaged through Facebook that keeps users on the platform. Then he brought in many digital partners. So there's multiple sides, at least 4 sides to the Facebook platform, but it's kicked off by being free to users initially. Okay. It's not always clear which market side is important. As I say, some entrepreneurs get it wrong. Even Steve Jobs got it wrong with the Macintosh, which is why we don't all use Macintoshes today. So you really do need to think about it. In the case of Android, it really wasn't applications driving it. It was really the telecom companies and the handset makers. And the Google folks were very clever. They got together all the companies that were not Apple, because once Apple introduced the iPhone in 2006 and 2007, Google came out with Android, but everyone that was not Apple was essentially a loser, because Apple immediately took like 80% market share and was going higher. So he rounded up all those companies, created a coalition, put them in the Open Handset Alliance, gave them the software for free, and made money off advertising, but some companies made money off of the handsets. And then they brought in applications and users. So in the mobile market, it's actually been the telecom companies with access to the user that has been the most important part of the market. So entrepreneurs need to understand all of these things. Airbnb, it's another easy case. The most important part of this market is having listings. You can't have a room sharing company with no rooms to share. You can have people waiting, but you need to have the content. So the founders there basically found a listing of content first, and then opened it up to users, and then brought in partners. Okay. Try to move along here. The Amazon case, we all know they actually started not as a platform, but as a store, an online bookstore that had other products. They had the users, and then they opened up that to marketplace sellers. And then they added other platforms. So it was a combination of things that Amazon did, but they started with a store, which was very important. So which brings me to a quick list I want to make of chicken or egg solutions, which is the critical part for a platform. You've got to create, or one possibility is you create standalone value for one side first, a product or a service that does not need complements, like the Amazon store, and then you add a marketplace or a bundle with the iPhone. Open Tables, another case of just software to manage table reservations, and then it opened it up to users directly for making reservations. Second, you need to subsidize one side or two, usually temporarily. You can offer free access or technical assistance, or bundle things together like Windows and Office. And that gets the other side going. And then third, you can bring on two sides simultaneously or a little or zigzag a little at a time. Think about it. How did credit card companies start? Well, they gave some credit cards to some users, they're high net worth users. They gave some devices to process credit cards to merchants, then some more users, then more merchants, and kind of zigzag back and forth. And that's also how Uber started out market to market. So there's different strategies, but solving that problem is critical. Okay, so let me get into this other issue, which we call platform mania. And so because platforms are valuable and can grow exponentially, doesn't mean every business can be transformed into a platform business. So if it's fundamentally a bad business, say low profit margins or too much competition, then platformizing it doesn't make it a good business, okay? Platformizing a bad business does not necessarily make it a good business. Ride sharing, grocery shopping, or even buying and selling assets via a digital platform does not generate the same kind of profits as selling digital goods, which Google does, or which Microsoft does, or which Facebook does. So platforms should be identifying and solving some kind of a market failure problem, maybe also being enhanced by digital technology for new scale or scope economies. But if the platform has to keep subsidizing to users and or other complementers in order to operate, then it's not solved the chicken or egg problem. It's not growing via network effects, it's growing via subsidies. And so in that case, the bigger the platform gets, the more money it will lose. And that's what we see with Uber. You know, there's two sides there. You need drivers before you can have riders. And so keeping all sorts of riders on the platform has been very difficult, very expensive. And basically, Uber has been losing lots of money by subsidizing drivers, but also riders can have many choices. They don't single home on Uber. They can use taxis, Lyft, other buses, they can walk, they can drive themselves. And so it's been giving lots of discounts to riders as well as paying bonuses to drivers. And so it's subsidizing both sides. The bigger it gets, the more money it loses. This was the early phenomenon, but even this year it's on track to lose maybe $8 billion again this year, $6 billion earlier as of May. And again, it's just because it's not really a good functioning platform. And you only subsidize two sides when you've got lots of money, a good chance of winning all or most of the market, but you can also control multi-homing and entry barriers. In the case of Uber, they've won most of the US market, 70, 80%, but what have they won? They've won the right to lose billions of dollars, is the way I like to put it. They're stuck in this launching loop in each city, and there's really no economies of scale there for them, and they're still subsidizing both drivers and riders. And so you could fix Uber, and I think they will fix it. They can't be everywhere because that means there's subsidy. They're subsidizing some cities. They should be in cities where there's a shortage of transportation, where there's customers willing to pay for on-demand rides. And there are other services they can expand, like delivering food, which is cheap, more profitable than delivering people, because you can charge both two sides there, the restaurant and also the person that receives the food or package. They need to reduce multi-homing through some kind of a loyalty program to drivers, but also riders. And they can also become a super app for transportation, linking different transportation mechanisms. So there's many options for Uber now that they are such a big platform, but they have to solve that problem. We've also looked at bike sharing platforms in China and elsewhere. This is a graveyard. Or WeWork, which has lost billions and billions of dollars, and its SoftBank financer has lost even more. And the problem there is that they're not platforms. There's no network effects there, bike shares and WeWork. They're one-sided company platforms. They can offer multiple services, but It's really like a standalone product or service that the company is selling at a price below cost. So these are not network effect driven businesses. Don't get confused with them. It's a great way to lose lots of, we hope, other people's money. Okay, so finally, some platform business advice. You want to look for some industry-wide problem or market failure where two sides have trouble finding each other. Create an innovation or transaction platform to solve that problem, or possibly evolve your standalone product or service to solve that problem. You have to attack the chicken or egg problem. That means you need to identify the trigger side that or the side that can get the network effects going, or which side wants to identify and contact the other side. You need to subsidize that most important side. For example, make it free. But you don't want to subsidize more than that one side. You want to grow through network effects. And also, we've seen in smaller scale platforms are starting out, particularly in the B2B world, often partnerships are the way they get started, not network effects that we see with consumer platforms. But the point is, you want to grow via network effects or these partnerships, not selling your product or service below cost, or having these permanent two-sided subsidies. Okay, so that is really the end of my talk, but I just wanted to make some quick comments about the future, that we see more technologies coming out. We see more hybrids. Companies are combining innovation and transaction ideas, but they're doing it around blockchain, biotech, quantum computing. And what we're going to see in the future are probably more of this concentration of fewer and bigger firms, with some startups coming in there. We're going to have to see more regulation of these companies and more self-regulation. So there's going to be some struggle between platform companies and free and open markets. And again, the technologies that will be pushing this are all over: artificial intelligence and machine learning and applications and self-driving vehicles and power systems, and even biotech and quantum computing and quantum communication. So the world of platforms is just beginning, and the ride will be very interesting. So thank you very much for listening to me. And I think we have a little bit of time for some question and answer period. Okay.
Thank you very much, Prof. Due to our time is fast spent, I think we can just take two questions. I don't know, with my publisher's permission, can we take two questions? Two questions, so we can catch up with the rest of the program. Any questions from anyone in the audience? Any questions? All right, I have a question, Prof.
Okay.
Great. My question is, platform businesses, right, that are digital, how do they differ? How come most of them are in the biggest economies in the world? You have in America, you have in China. What's happening in France? What's happening in Austria? What's happening in, I don't know, Australia? How come they only thrive in the biggest markets? Thank you very much.
Well, again, I'm giving you examples from some of the most prominent companies, but if you look at the unicorn list that we have, those platform companies are from all around the world. Now, to get to a scale where you become $1 billion business does require being in a market that's fairly large. And so it's much easier in the United States or China, which are enormous markets, to get companies of that scale. Right? The United States is roughly half of the IT market around the world, roughly half of the venture capital market. So the US and increasingly China just have more money than anybody else to throw at these kinds of companies and accelerate their growth, and the markets are huge. So Europe does have quite a few platform companies, but they're usually small and they're localized. And so you've got, I mean, I'm the director of a platform company in Europe, started in Finland. We're on the German stock exchange. We're only a couple $100 million a year in revenue. It's a financial services platform, a digital bank and platform for other services. So we're not going to reach the scale. Our market is is focused mostly on Northern Europe. So that becomes the issue. So in Africa, of course, you've got a huge market and lots of people are coming into that market and using internet services, smartphones, personal computers, et cetera. So you'll see more larger companies. And we do have platforms, global platforms in our unicorn sample from all around the world. It's not just the United States and China, but that's where most of them are. That's where the money is. That's where the users are. But you'll see more from Africa as we go forward, and also Southern Asia in the years to come.
Thank you very much, Prof. Really do appreciate your time. Please put your hands together for Professor Michael Kusunagi.
Okay, thank you very much.
Great. All right. So next we have a chat between Carrie Toko. Carrie is the VP for Counts MasterCard. She covers quite a big chunk of Africa. Legal Business at Business Day, Onyinye Ukego. They will have a short conversation. As you're probably aware, MasterCard is also a platform company. They started as a credit card company, but increasingly what MasterCard is doing is opening up different interaction points, when people trade or do transactions. So it's a big step change for their business model. And what I expect is going to happen in coming years is companies like MasterCard, are really going to shape the way we do commerce and do exchange. Carrie, you're welcome. Yes, well done.
Thank you. Thank you. It is a pleasure to be in conversation with you. Thank you. Yeah, as Obi mentioned, you're the VP and head of customer solutions at MasterCard. And as Carrie would say herself, that just means that she's in charge of solutioning, all-round solutioning everywhere. So let's get into it. We have 20 minutes to discuss a whole world of change. So let's begin. Yeah. Okay, so the theme of today's presentation is managing the future. I think it says also unlocking the power of the platform economy, an area where we've seen quite a bit of change in the power of the platform economy is with payment solutions and the use of technology in this area. And you've had over 15 years of experience in digital banking, consumer banking, retail banking. What has that experience been like for you?
Thanks, and good afternoon to everyone. 15 years is a short time relative to how technology has evolved, but I'm going to ask for a little bit of audience participation. If I were to ask everyone in the room to pick up an invisible phone call, what would be your hand gesture? What would it be? Can I see in the audience like this? Okay, when was the last time you actually picked up a phone like this? Exactly. If I ask my 3-year-old or 5-year-old the same question, she will do this. And, and I think that for me is what's been so exciting in the last 10 to 15 years. The evolution of technology, and most importantly, how technology has been used to drive financial inclusion. I'm excited about the Internet of Things, and I'm glad that was raised earlier on in a few of the conversations that have been had, and what that is doing in accelerating digital payments. I'm excited about all the investments that have come into Nigeria in terms of the new players, the fintechs and the neobanks. And general investment in technology has been very exciting. And I'm really glad to have experienced the era of picking up a phone like that and swiping a phone.
Yeah, I know that's such a generational change. And, I'm not much older than your 5-year-old. So, I mean, just speaking of that, one of the things that has become apparent just from the analogy that you gave is that, the pace at which consumers and businesses, enterprises are adopting new technologies accelerating rapidly, right? So what trends do you see becoming, coming into fore, and what trends do you think would stay?
Okay, I think the most obvious trend, and I'm going to refer to Peter, who spoke earlier, about there's going to be a lot of trade, but trade will be difficult if payment isn't easy. Correct. So the first thing that I see happening is that there'll be more innovations when it comes to real-time payments. I think Nigeria has taken the lead with person-to-person payments on the instant payment platform built by NIBS. And other players globally have followed the same trend with the likes of Google Pay, Apple Pay, Venmo, etc. Where I see the next click happening is how we're able to transfer that experience into merchant payments, particularly domestic merchant payments. I think there's been a lot of work with the likes of NQR, but I still think that the experience that we all get when we do that instant person-to-person payment is not the same as how we're paying merchants today. I also think that there will be a play on cross-border, and I'm glad that PAPS has already kicked off that conversation. But real-time payments, both domestically, cross-border, and to merchants, is a trend that I think is here to stay and is going to grow. The second thing that I see is around the ramp-up of frictional and seamless payments. Digital commerce has grown and is grown exponentially particularly because of COVID, right? But I think that there's still room for digital payments being infused into everyday experiences and everyday activities. And we're going to start seeing that translating in the way that we interact with each other. When I talk about seamless payments, we know that e-commerce is growing. We know that contactless is growing by virtue of the fact that there's now NFC technology now accessible. But the lines are going to start getting blurred between how we interact online versus how we interact in store. I think customer experience is now the experience that consumers are looking for is one that is integrated, meaning that I want to pay anyhow with anything. And thank God for connected devices, Internet of Things. So that line is going to get blurred. I think we're going to start pushing the narrative around omni-channel, which is that I want to be able to pay whether it's on POS, soft POS, QR, all other channels that are available via any rail, whether it's blockchain, whether it's card, account to account. And we want to have that experience whether online or in store.
Just to interrupt for a minute, rails are the payment options that we have, right? So that's when you have like account to account option.
Pardon my French, yes. Yeah. So the rail, what we call the rail, so think about there's going to be movement of funds, and that movement is facilitated on a rail. MasterCard has always been known as a card company, but another rail would be your accounts to accounts, what we're all very familiar with here. Another rail would be the blockchain rail. So there are many rails with which consumers can actually make payments, and they don't want to be limited now. They want there to be accessibility across multiple rails and across multiple channels, whether they're online or offline. Another trend that I think is here to stay is that banking will continue to be decentralized. I think there's already a lot of decentralization happening, especially with lightweight transactions that we all do today on our mobile banking. But when we think about the world of augmented reality or virtual reality, where you can actually have these components integrated into your everyday wearables, like your glasses, your watch, your phone, then it's interacting with your bank would be as simple as actually dialing up your bank and being physically present in your bank, even though you haven't gone to the bank. And that will create more decentralization in the way that we interact with banking. Another trend that I think, and by the way, even on AR and VR, which really rides on artificial intelligence, there's going to be a huge play for a huge benefit of artificial intelligence in other areas beyond redefining payments experiences. One of that area, I think, is in cybersecurity and the role that AI will continue to play in cybersecurity, and even in identification. So, for example, us at MasterCard, we're currently rolling out our version of an updated version of our e-commerce two-factor authentication, which we call EMV Code 3DS. And what we've built there is actually biometric authentication. So I'm sure you all have done e-commerce payments where you go online, you put your card details, you'll then get an OTP, and then you put your OTP or your PIN into the gateway. We're going to take that one level to the next level with AI by bringing in biometric authentication, meaning you can now use facial recognition or thumbprints to actually authenticate the transaction. So that's another use case for where we see AI going. One more, or maybe two more trends, right, is open banking. It's no longer a buzzword, it's happening. And I think that once we have the mandates going, there will be so much to unpack and a lot of value to derive from open banking. View of customers, which means that we products and services to our customers. It lends itself very well in lending. I think there are huge use cases. Kana, for example, is a beneficiary of this open banking networks. And once data starts to be synchronized and unified through APIs, I think it just makes for better digital inclusion. And maybe cryptocurrency would be the last trend that I'm going to speak on. With cryptocurrency, a lot of organizations have already created verticals for accepting crypto as a means of payments. And I think, Peter, you also mentioned is that sometimes I loved your presentation earlier on today, by the way. Peter had mentioned that if you're scared of something, then the easiest thing to do is just run away from it. And I think that's what's happening to us in Nigeria when it comes to cryptocurrency, even though we are one of the largest markets to actually play in that space heavily. But we at MasterCard have done huge investments in trying to securitize crypto transactions. We can't shy away from the fact that there is risk in this thing, especially when you're trading with exchange houses that are not regulated. So with CipherTrace, one of our products, we're able to sort of guide and guard that ecosystem. And I think once we start to embed that into our infrastructure and advise the central bank, then there'll be more openness and willingness to open up that rail of crypto. So that would be my what I think the trend will be in the next couple of years.
Okay, thank you very much, Carrie. So two follow-up questions really briefly. The first one I would say is you talked about how consumers would want to be limitless in the way that they pay. Are you speaking specifically just to rails or to currency or both?
Everything, really. I think that today, a typical experience would be I go to a supermarket and I request to make a payment. They ask me for my card, or they don't ask me for my card because their POS network is down. The next thing that we do is to do an account transfer to the merchants, and then they have to go to the back and wait for somebody to confirm that they received that payment. Or more conveniently, we pay cash, right? It's just a very hectic process. A lot of us are also global citizens, and we see how payments have been eased in more developed markets. So you go to London, for example, and you see people already tapping with their phones to make payments, and things are happening swiftly. So I think, technology has already created and enabled a platform for more omni-channel interactions when it comes to payments. And what consumers are looking for is that ability to be able to pay simply, securely, quickly, across any store of value. That store of value could be your card, it could be your account, it could be your crypto, it could be your digital wallets, whatever store of value. I just want to be able to pay, and I need the merchant to be able to accept that payment.
That makes sense. Thank you. Okay, so my next question is with respect to payments and how they work. So you mentioned that person-to-person transactions across most rails, let's say the ones that we're used to, cards and account-to-account, those are more seamless than when it comes to person-to-merchants transactions. And you think that one of the next clicks that we should be making is in changing or developing that space more. Why do you say that? And how do you see that working as well?
Honestly, I don't know how that's going to work. I think that there's already been huge investments in simplifying merchant payments. Like I mentioned, you've got NQR, which is growing to scale. There's new mandates around consumer-generated QR, merchant-generated QR, which I think will obviously open up the floor for SMEs to accept a lot of digital payments. We have invested in technology that allows you to simply download an app, put it on your phone, and connect your connected device to an acceptance terminal, for example. And so things like that, I think, would amplify that merchant payment experience. You heard from Peter when he mentioned about PAPS and what PAPS is doing. But I think beyond that, it's really around how we bring in not just cross-border payments, but real-time cross-border payments, which is the experience that we have in Nigeria, and making it that seamless when I'm sending money to Ghana, I'm sending money to London.
Okay, that makes sense, especially in the face of AFTA and all of this that we're talking about.
Absolutely.
Yes, and being represented at the G20 as AU.
Yeah.
Okay, so that brings me to my next question. So we've been talking about the rapid evolution that we've been experiencing in this sector. And only 10 years ago, like consumer adoption of things like the smartphone, it was a fraction of what it used to be, of what it is now, right? We didn't have Netflix, for instance, as a necessity, or broadband as a necessity. So where do you see us in the next 10 years? So gaze into your crystal ball and give us some predictions of what consumer behaviors you think will be commonplace by 2030.
I have a very dystopic imagination. You permit me?
Go ahead.
Okay.
I'm here with you.
All right, so it's very difficult to predict what the world would look like in the next 10 years. I mean, we're talking 2032, right? But I'll approach this with a very simple idea, which is that there will always be a buyer, there will always be a seller, and there will always be a medium of exchange. And our job is to ensure that that medium of exchange is securitized and it's trusted, and that we keep our partners and our consumers ahead of the curve. With that being said, I think in a very short time frame, we can see where technology is heading. 5G, artificial intelligence, the Internet of Things is converging. And it's really changing how we interact with one another. And it's also redefining the future of seamless commerce. And when I say seamless commerce, these are some of the very dystopic ideas that I think we should expect to see in the next 10 years. I think that digital identity will play a bigger part in payment facilitation beyond what its current use case today, which is really around fraud and cybersecurity. I imagine a world where payment would just happen in the background. Payment would become invisible, right? Walk into a store, you make a purchase and buy your digital identity, payment just happens in the background. I see that happening. I see, we're talking about platforms earlier. I see more integrated platforms in the new world. Some may call that new world the metaverse, I don't know, but it's the new world. But when I talk about integrated platforms, I'm saying that as a consumer today, what I have to do when I interact with Amazon for the first time is I need to create my profile. I need to, put in my payment credentials, my address, and then I move to eBay and have to do the same thing, and I have to move to Jumia and do the same thing. I think that we will have more integrated platforms built on the blockchain where user experience and user interactions will be unified. And therefore, these platforms then need to redefine itself on its existence within that new metaverse, right? The last thing that I think could potentially happen in the next 10 years is that consumer robotics will play a bigger part in payments. We've already seen the technology deployed in, obviously leveraging, again, AI, 5G. We've seen the technology deployed in the likes of Alexa, in drone technology. And I think that now with 5G, you're going to have more powerful cloud processing. You're going to have access to cheaper, more durable hardware, which for me, I think we will start to see Internet of Things. Your glasses would be connected, would be a connected device, which enables and facilitates payments. We would have cashierless payment interactions and a whole host of other things that I think will be built on top of this integrated convergence between 5G, artificial intelligence, machine learning, and the Internet of Things.
Okay.
Not too disturbing.
No, well, Elizabeth, so I get using my glasses, right? And I understand walking into a store and paying with my wristwatch. But then you're talking about identity payments. Literally, I walk in somewhere and a payment happens. So how does that work? Am I going to be injected with a chip, or, is the entire store going to become like this architectural MRI machine, that just sucks in my data? Like how, what are you seeing in your universe?
I mean, I definitely don't want to be injected with a chip.
Neither do I.
No, I think, look, there is still a long way to go, right? But I say a long way to go, but then with the way technology has advanced in the last couple of years, this could be something that is coming through in the next couple of years, actually. But we have to be guarded by the fact that there are still some privacy laws and privacy rules guarding utility of digital identity, and that hurdle needs to be crossed. But it's a wait and see game on how these technologies evolve.
All right, so we're fast running out of time, so I'm just going to ask one more question.
Okay.
So as you say, you're in charge of solutioning at MasterCard, right? So, and we also mentioned earlier that MasterCard is pivoting from being a payment processing company, right, to becoming more, how do I say this now? Yes, to becoming one that is more focused on integrating different rails into what they do. So how is MasterCard, moving into being a core player in that interaction between buyers and sellers in the global economy?
Well, I'm glad that you actually said payment processing company, because typically what I get is MasterCard is a card company, and we've never issued one card in our lives. MasterCard has evolved from bordered payments to borderless payments. We've evolved from being known as cards to contactless. We've evolved from in-store to online, and from single rail, which is a card rail, to being multi-railed. And I think that this has been accelerated by emerging technologies like real-time payments, blockchain, Internet of Things, crypto, buy now, pay later, right? All of these things have really given merchants and consumers choice and better ways to make payments. And it's very important that as these emerging technologies evolve, we evolve along with them. With that being said, I think we've made significant strides in that evolution. One of which is diversifying through our investments in alternative or non-carded payment rails, like our investment in bank account to account platform, with the likes of VocaLink, Transfast, Nets, right? And what we've done in the past was also manage these platforms as separate parallel platforms. But today we have converged them, both our card and non-carded rails, and created a secure connection, singular secure connection, so that as a merchant or as a partner, you plug into one and you have access to all. We have also innovated around acceptance, right? Our acceptance philosophy is about low cost, no cost acceptance if possible. And we have built capabilities for QR acceptance, capability for e-commerce acceptance, capabilities for crypto payment links. Our recent project in Nigeria is actually deployment of what we call tap on phone, which is essentially the cloud pause that you download into your phone. Beyond the payments, we have also invested heavily in cyber intelligence platforms and tools. And why this is important is because, you know, when you look at fast computing, ubiquity of payments, open banking, it really does create more opportunities for criminals to perpetuate cybercrime. And so we cannot just rest on payments alone. We need to look at other verticals beyond payment. So our investment in ICATA, which is a dynamic identity verification platform, and New Data, which has an award-winning New Data, the platform is actually called New Detect, is a behavioral biometric assessment tool. And things like checking your keystrokes, not checking your keystrokes, but having the technologies that checks whether, you know, it's taking you a long time to type your name. You should know your name, so why is it taking you a long time to type your name? Or you're making key responses faster than a human being possibly can, which indicates that they're probably a bot in the background. So these sort of capabilities has obviously shown diversification in our portfolio of products, and it just shapes us very well to respond to the future state of technology as we all progress in it.
Thank you so much, Carrie, for that deep and detailed answer. This is how much time we have today to speak with Carrie on her dystopic universe. So thank you so much for joining us, Carrie. Thank you all for listening.
Thank you so much, Onyinye. Thank you so much, Carrie. For those of you who don't know, Carrie was here about 7:30 a.m. She was here with us while we were doing the finishing touches in the hall. So Carrie, thank you so much for waiting. You know, we're supposed to have a lunch break about now, but we just decided, you know, let's rush through the program, and afterwards we'll go in for lunch and all have lunch and we can leave from there. I don't know if that's fine by everyone, so that, you know, we just, you know, keep this intimate and sweet the way it's supposed to be. So without further delay, I'd like to introduce Dr. Ol Kitty, the Managing Director of Business Day. Thank you.
Yeah, Obi, thank you so very much. The original plan we had was for us to have this presentation as a sort of background, providing some macroeconomic context to the conversations that we're having here this morning, or now this afternoon. And but because we did not start early, and of course there were people joining us online, we had to quickly take those ones. So I still hope that you find these conversations or what I'm going to speak about useful, and it will help because, I mean, we've listened to things around the global, of course, the China dimension, and of course now I'm talking about platforms. But this will give you some context around what is happening in the global economy today. And of course, we will zero in on Nigeria, as I'm sure that's where most of our interest line. So today I've titled my conversation around managing into the future, looking at uncertainty, disruption, and of course, talent. So So the outline I have, we'll just quickly look at the uncertainty macroeconomy from the global, Africa, the Nigeria perspective. We look at some disruptions and what that means and how it's driving business responses all over the world. And of course, we look at the talent war. And because we're in Nigeria, we look at 2023 and beyond, because I know that whether you say it or you don't say it, most of our focus has shifted from the present to something ahead of next year. So, can you help with this, please? Okay. So uncertainty. So the first graph I'll show you is about growth today in the global economy. So if you look at wherever you look in the global economy today, there are three things that are common, whether it's the US, whether it's China, UK, Europe, everywhere you look, there are three things that are common. One, growth is volatile. So if you come from the COVID perspective, we're having some kind of recovery that is not even, that is not steady, and of course, it's not really trending upwards. So there's some kind of significant volatility in growth. That is just the story today. So whether you talk about the US, which has just slipped into recession, UK recording their first contraction since quarter 2021, Russia, obviously because of the war, shrinking 4%, France 0.5%. So the normal trend of 3%, 2.5% that's been consistent over the last decade or more, that is not what we are seeing today. We are seeing very significant volatility in growth across all the major economies of the world. So what are the things driving short-term growth expectations and of course short-term growth movements in the world today? You have the Ukraine-Russia where you've had so many comments about that. Tighter monetary policy. So because of the pressure of inflation and prices, many central bank authorities are now implementing stronger monetary policy. And of course, we still have lockdown in China, is a zero COVID policy, and of course, recession in the UK. And so all these combined are what are driving short-term macroeconomic volatility in these economies. So let's look at the price pressures also from the global perspective. If you look at it, we have the graph from 2015, but if you really look at it from 2020, the price pressures and of course started to really trend upwards. So we are seeing inflation levels, for instance, in the UK, in the US, figures that we've not seen in 40 years. So that's the tremendous price pressure that we are currently seeing in all these major economies of the world. So what are the governments doing? So the central bank authority raising interest rates in order for them to curb inflation. So if you look at the US Federal Reserve, the rate raised to 2.5 from 1.75 in July. And in Jackson Hole, just about 2 weeks ago, the chairman of the Federal Reserve said they would do everything within the monetary policy power to do what? To bring inflation down. So it means that even if it means continuous recession, that is what they would do. India increases rate to 5.4 from 4.9. The European Central Bank raised its rate to 0.25 in July for the first time since 2011. That's the first time in 2011. And if you read analysis very carefully, you will find out that the European Central Bank is actually being criticized because why? The reason they are not raising the rates very, very frequently is because they are trying to accommodate the deficit and debt of Italy. So if you really look, that's also becoming a political issue because significant inflation is in Germany, in France, and of course you really need to raise rates in order to bring those things down. But you also have to play the politics. So that's global. So the third aspect, we've talked about growth volatility, talked about price pressures. Of course, the third aspect is energy. So whether you turn on to Sky today or you had CNN, wherever it is, when we talk about global economics, talking about energy crisis. So if you look at the trend from January 2019, of course, you look at 2020, COVID, but if you really look at it from the start of the year, you see how gas prices and of course crude prices started to rise. So when all this rises, I mean, you have companies and businesses, even everywhere in the world, trying to manage their energy costs. And of course, it's driving up the cost of doing the business. And in some cases, it may even lead to closure. And of course, you're talking about the numeric recession in some of these economies following this crisis. If you follow the election and of course, the Liz Truss becoming Prime Minister in the UK, for instance, our first bill is about how to manage the cost of energy to businesses and to homes. So global economic today, the story is in three phases, three dimensions: growth volatility, pressure on prices, and of course, energy crisis. So in Africa, the story is not so much different. Most of Africa economies are still trying to recover from COVID. If you actually look at the growth rate, also the growth rate of these economies before COVID, it was kind of steady, but if you look at it from 2020, it has also become very, very volatile and very, very uneven. So that is really the story, growth story in the world today. Every region you look, growth is very volatile and of course, driving up uncertainty in the global economy. So in terms of price pressures as well, look at it from 2021, in major African economies, prices also started to rise and rise very, very significantly. So we're talking of around 25, 27%. In Nigeria is 20% today. But that is what is happening all over the world. Where you look at developed economies or you look at Africa economies, there are two present dangers: growth volatility and of course, price pressures in inflation numbers. So let's now begin to, I'm rushing this, let's now begin to look at Nigeria. For Nigeria, I think when we talk about growth, it's always very, very important to go a bit backwards because our home problem does not start with COVID. Our problem actually started a bit before then. So you can actually look at the current growth trajectory from the fall in oil prices in 2014. So that's really where our problem really started, when oil prices started to fall in 2014. And you had a recession in 2016, 2017. 2018, we started to climb. 2019, we're climbing. And 2020 was actually supposed to be the year that we really began to recover in terms of the 3, 4, 5% growth. Then, of course, COVID came. So the graph on the left side is to give you the trajectory of oil price. And of course, Nigeria economy's growth, they mirror each other. It's been the case since 1970. You can always put the layer of oil price on Nigeria's growth and you won't get it wrong, or you put growth on top of oil price dynamics and you also will not get it wrong. However, the MB has released growth rates recently and they said 3.5 for Q2 2022. And you probably think, okay, 3.5, that does not really look a little bad. But there's a message that is often missing in Nigeria's economic growth figure, and that is that we look on year. So year-on-year figure does not actually, when the economy is growing steadily, not much a problem. You can always relate to it because it's steady, it's trending upwards. But when there's so much volatility and so much uncertainty, it's actually better for you to look at it on a quarterly basis. Then you begin to actually know whether from year to year or from quarter to quarter that you are growing. So I gave you here from 2014. If you look at it from 2014, on the right side, that is the data for Nigeria's economic growth up to 2022. What does that tell you? What that tells you is that you go up, you come down, you go up, you come down, you go up, you come down. At the end of the day, you're on the same spot. So since 2014, if you actually look at whether it's income growth or whatever it is that you're looking at, Nigeria has not made any dime of progress since 2014. So growth in Q1 2014, for instance, if you look at it Q on Q, not year on year. If you look at year on year, we see some growth. But Q on Q, you move from less than 10%. The next quarter, you have some 9%. Then you drop again 12% compared to the previous quarter. Then another one, 3%, back to 14%, 4%, back to 13%. So that is really the kind of variation that we look at. So even if you look at the growth that we've recorded in the last quarter, that's the Q2 that's just been released, it gives you the impression that there's actually 3.5% growth rate. But what it actually means, if you compare it to actually Q1, Nigeria growth, that's the size of Nigeria's economy in Q2, is actually less than what it was a few months ago. Why? Significant price pressures, and I tried to give you also from January 2020 the factors that have shaped price pressures and inflation since 2020, just before COVID. So if you actually look, you have the headline index, you have the core inflation, and you have the food inflation. So these are all the things that have been driving those dynamics in the last 3 years. So you have devaluation, increase in PMS, border reopening, surge in PMS, devaluation, 3% rise in M3. Now, everywhere you look in Nigeria when it comes to price and inflation pressures, there are two things that are present. One is the structural elements driving prices. That's things that has to do with either security or security, storage, when it comes to food, or border issues. Those are all structural elements. And of course, you also have the other element, which is actually the monetary dynamics also helping to accommodate the inflation. So you talk about the money supply, and of course, government deficits and debts. These are the two things. So, that's again. Diesel, I mean, everyone that's buying diesel in 2021, 250 a liter, today is 800. Exchange rate, of course, driving also price pressures, money supply, and of course, insecurity. So that is the point I'm making. When you look at the exchange rate, and you look at diesel, and you look at money, you look at diesel, that's a structural problem. If you look at the exchange rate and money supply related, and if you look at insecurity, that's also a structural problem. So there are structural and monetary problems, monetary dynamic problems that drive price and inflation pressures in Nigeria. So looking at what is happening to the exchange rate, I was just having a conversation with the publisher now, and he was giving me, was saying that there may be some move on this gap sometime very soon. So hopefully we see some move on that. But at the moment, that gap is widening. We're talking about 15%, 59% as it is today. So it's a case of how long can we suppress, how long can we suppress that? I mean, especially when the NNPC this year, and I mean this year, has not put a single dollar in foreign exchange with the central bank. I mean, single dollar. They have not done that because everything we export, include oil, we use it to import fuel. So, so we have a 59% gap between what is considered the CBN rate and of course, what you struggle to buy if you must buy, if you know what I mean. So, so we're talking about Nigerian uncertainties and of course, Nigerian volatility. So let's begin to look at public debt. These are the things driving the volatilities. These are the factors driving the uncertainties. These are the things driving the cost of doing business. These are the things driving the uncertainty. That's why we are not getting the investment. These are just all the issues. So whether you talk about price, you talk about foreign exchange, but there are always underlying factors. One of them is definitely debt. So you see how our debt has climbed from 2020 to what we expect it will be in 2023. By the way, if you listen to the budget, and I don't know how much you listen to the budget, I don't know how much you follow the budget presentation, at least I have spoken to 2 or 3 people. Not that they need to tell me anyway, but I will still tell you because I'm a journalist, so I will report what they said. It's just the budget is not implementable. I mean, it doesn't matter whether you bring, you can go and borrow Jeffrey Sachs and whoever, no, it's just not implementable because you cannot borrow 11 trillion. In fact, somebody said to me, he said, where is the government going to get 11 trillion? Maybe the banks will be able to lend 1 trillion. Maybe the, the pensions can probably give 2 trillion. Who else can give loan? Not much. I mean, foreign loans, how much can you stretch it? So you can't even get 11 trillion. And of course, no one is a fool. What has happened to the budget is does that look, we are living anyway, let's just throw a budget there. And it doesn't matter whether it's implemented or not. So, but that is what we think it will be. The debt will definitely rise sometime next year. It will rise further, and you can see how it's been rising in the last few years. So the right side of the graph is actually showing you how the debt service has actually climbed. I mean, the tremendous increases in the debt service. And just look at that 2023, what we expect that it will be projected from the figure that we have at the moment. So if you look at debt service to revenue, it just keeps increasing. I mean, now we're talking about 90% to revenue. I mean, that is just not sustainable. And of course, external debt service, you see the ratio of federal service. We also think that that will also rise from next year. So talking about underlying factors driving all this volatility. So when you talk about foreign exchange crisis, why do we have this? You have the oil price on this side, I mean, climbing. Of course, there's always volatility when it comes to oil price. It depends on how you respond to it. But the oil price is not so much a problem today. The problem today is the volume of production. So if you look at the right side, look at it, your production just keeps falling. Your production, and this is actually the funny bit. This is the funny bit. And you must have noticed it anyway because you are all intelligent people. So just read any budget. Read any Nigerian budget. They will still tell you they expect to produce 1.8 million per barrel, per day. They tell you, even though you look at this data and you're wondering where the 1.8 million is coming from, because for the past 3, 4, 5 years, we've actually hovered around 1.3, 1.4, 1.5. So where is the 1.8 million? How is it coming from? Why do they do that? So that they can always justify the deficit level. That's just the simple mathematics. Okay. So we're done with some simple macro. Let's now look at disruptions. Kusumano has actually done a very fantastic presentations around platforms. Platforms are one of the responses to disruptions. So one of the responses, and any business, if you manage on the business, you keep responding to the challenges that you face. You respond to it in 2 ways. You try and minimize the threat, and of course, you try and increase the opportunities that you can seize. So the thing about disruption is there will always be disruptions. If there were no disruptions, there will not be Microsoft. If there was no disruption, there will not be Apple. If there's no disruption, there will not be Samsung. So everyone, and I'm sure everyone here is thinking, how do they disrupt their industry? How do they change the dynamics of their industry? I mean, I sit down in my office and wondering what else do I do as a media company? So that is just constant thing that happening. So, but what we are looking at here is there are key shifts in the global, regional, and domestic economies all over the world that we need to take note of as a business. So what are those shifts? So the background for this is actually by the book by Dobbs. Actually, if you look at it, I think it was released in 2020. Dobbs and 2 others, Maiwa and Wose, I think. They are all McKinsey people. and they wrote a book on disruptions. You can find the argument virtually everywhere. If you look at Kusumano's presentation as well, you will get the background to this. But this one is from that book. So they highlighted 4 disruptions. I've added about 2. I've added 2 that I think are also fundamental. The first is economic dimensions. And of course, the first panel that we had here is actually about that. For the past 25, 30 years, the center of economic activity has shifted from the West to the East. It doesn't matter whichever way you look at it, that is just what has happened, the center. So whether you talk about investment, you talk about growth, and of course you talk about consumption, the center of economic activity has shifted from the West to Asia, of course, Asia led by China. Does that mean that US and of course Europe are no longer important? Of course they are important and they'll always be important. But when you talk of the rate of the growth of economic activity and investment, you have to look into Asia. That's the number one. The second one, of course, which we are used to, is technology. We have seen the acceleration in the scope, scale, and economic impact of technology the way we have never seen it before. You listen to, sorry, what's her name again, from MasterCard. There are some things you just couldn't imagine, but even if you even dreamed, if you dreamt about them, you will say, no, it's just not possible in real life. But there are things that you just thought never possible that technology is now making possible. And it's not just making it possible on just 1 or 2 scale. I'm talking on a grand scale. So, and of course, the third one, population. If you look at population, I mean, the world population is growing by 1%. Great. However, that's the global world population growing by 1%. But if you actually look into Africa, if you look into Africa, you look into Nigeria, you look into some economies, the population grows actually about 2.5%, 3%. So what it means is that while it may take some 10 years for some population to increase, and of course, some countries, the population is actually falling, in Africa, it is still rising. And whichever way we look at it, as poor as we are, population matters for economic growth. So it means that population matters for economic growth because it means that with more people, the scope to actually replicate economic growth over a 20, 25, 40-year period, that scope continues to rise. But you don't have that scope anymore in Europe or so much in US. So if US grow by 3%, they say, hey, we are doing great. If Nigeria grows by 3%, you remain in poverty. So you see? So it's like, if Dangote has 3% to his wealth, fantastic. If I have 3% to my wealth, I can't send my children to school. You know what I mean? So, okay. So the fourth one, and this is one of the ones that we had, we really think that the narrative on climate change is going to change investment flows in a way we have never seen in a generation. So if you look at the oil companies, for instance, how many oil companies are going to remain in Nigeria in 3, 4, 5 years' time? Not because they don't want to remain, but because shareholders are now demanding that what? We cannot continue to invest in fossil fuels. So it's going to be a big shift as well. Of course, trade and migration, how do you connect people, information, and of course, capital? That is also fundamental to disruption. And of course, the COVID that we have seen since 2020 is a fundamental disruption because whatever it is that is happening in all these economies before then, since COVID has actually changed the whole dynamics. I mean, I can imagine that 3, 4, 5 years ago, if you wanted someone to speak, not because there was no online or virtual meeting, but it's just that we would have thought, okay, could madam, you fly in on a Monday, or you have this meeting, or you go back in. But from the start of this conversation, nobody was even thinking of bringing Kusumano in physically. We just didn't think of it. We just thought it was not important. I mean, Jeffrey Sachs, I mean, so, but now, if I was holding this kind of meeting 5 years ago, and I wanted to bring Kusumano in, or I wanted to bring one person in, then I'll say, okay, I'll bring Kusumano in. Are we going to bring Jeffrey Sachs? I said, no, we can only do one person. But now I can bring Kusumano, I can bring Jeffrey Sachs, and if I like, I can even bring the Prime Minister of UK, speak to us from wherever it is that you are. So what that has done, it's not because the technology is new, but what I'm saying is that COVID has accelerated and started our thinking. So, let's look at some of the data. When you talk of urbanization, so for instance, you say, I mean, everyone knows if you study a bit of economics, whether it's 101 or 102, whatever it is that you did, I'm sure you must have probably come across at least a mention of what they call the Hotto-Lewis model. But even if you're not familiar with the model, I can give you the bit of the narratives. Economic growth happens when we are able to take surplus labor, maybe of agriculture, and you are beginning to actually pull them in industries. I mean, at least we know that. Even though that model is slightly changing, but it has, we can still explain it. We can explain urbanization with that model. So what does that mean? So you are now beginning to have cities that are growing of people. And of course, when these people are growing, these cities are growing, they are not doing farming jobs, they are not doing agriculture jobs, they are doing jobs that have higher incomes. And of course, they are able to have what we call discretionary income, which leads to faster economic growth. So when you have 440 cities, imagine in emerging markets, accounting for half the global growth of by 2025, that is very, very significant. And that is the kind of shifts and that is happening in emerging markets, and of course responsible for the kind of disruption we're talking about. 2.5 people will live in Asian cities by 2025. Asia will always be part of it. 46 cities in China will be among top 20 cities by 2025. Imagine economy 75% growing faster than developed nations. That is the point I was trying to make. Growth in emerging markets, and of course 50% economic share of the world economy, currently 3%. So if you are growing faster than others, it means that your share of the size continues to get bigger and bigger and bigger. There was a time, I think it was almost about 10 years ago, Nigeria was saying that they want to be part of the top 20 global economies. And at that time, I wrote a piece. I remember that piece very well. And I spoke with the former Minister for National Planning at that time. I think it was Dagash. I don't know how many of you still remember him. So Dagash, and I wrote a piece at the moment, and I used the top 20, and I used the Premier League as an example. So if you're a lover of football like I am, so you have Manchester City win the league, you have Liverpool followed, and of course you have Chelsea, and unfortunately also you have Tottenham. I'm sure you understand what shop I support now, if I say unfortunately Tottenham. So you have that, but that is not where I'm going to. But you also have 3 clubs relegated, and you have 3 clubs promoted. So what it means is that if you want to be a top global 20 economy in social here, you have to record faster economic growth. Simple. That's the only way. Now, for you to record that faster growth, you have to build capacities. But we'll talk about it. So by 2030, annual consumption will increase by 150%. If annual consumption is going to increase, somebody needs to meet, some businesses need to meet those consumption. So population dynamics. So this is the bit I want you to, you see in 1950, life expectancy was 47, 2014, 69, 2015 is expected to be 250. Now, advanced economies, look at the changes in their population dynamics. 1950, they had 27% of 0 to 14. Okay? But imagine this, 15 to 64, which is the productive age group, right? They have 68%. But in 2050, 58%. Now, this is the point. 58% will have to cater for 26 and 16. Now, you see why anytime you apply for UK visa, you apply for US, and we will come to that, they are willing to have you so that you can come and pay their taxes. So imagine economies, but look at it for economies. We are now at this stage where they were. What we have now is similar to where they were in 1950. So 1950 with 38%, you see, compared to their 27, we have 58 and we have 4, because life expectancy was very, very low anyway. Today, we still have 5%, no, 20,000, but in 2050, we're still going to have about 64% of people working, actively working to grow the economy, to consume, and of course, to look after 22 and 24. So in terms of trade and migration, global folk contribute about 250 to 450 billion to yearly growth. Trade finance, in 1990, trade finance in goods was just about 5 trillion. Today, it is 28.5 trillion. I mean, talking about, look at what the conversation between the Chinese ambassador, Hafrezim, and of course, the Stanbic. I mean, we're talking serious flows of capital. Where are these capitals moving to? They are moving to businesses, moving to where there is opportunity for growth. They don't move to where there is no opportunity for growth. And where is the opportunity for growth is where you have people to still work on these businesses. So you have trade flow 40% by connected countries, and of course, people. International migration mission of people, 1990, you have 75 million of people. 2021, you have 272 million people moving, migrating from cities, from countries. So, technology changes. I mean, Kusamano discussed this in full details. 1875, first phone call, 1991, first website. Now, if you look at it, 1875, first phone call, 1991, first website. But this is the trick, and that's why you understand platforms and you understand disruptions. The rate of technological growth that we have seen since 1990 is probably 50 times of what happened in the 100 years before. I saw something on Twitter and it was very, very interesting, and let me just mention it here. So the most visited website, they now did a graph of how websites were visited about, it was just about 10 years ago. So the top most visited website 10 years ago are not the top most visited website today. So I'm just saying this, the rate and the pace of changes that we've seen in relation to technology is just huge. Let me move very quickly. So what is happening to media? So as I'm here now, my first installment in business, it was 2007. When I joined business in 2007, our competitor was This Day, Guardian, Punch. Yes, they are still our competitor. But today, no, you can't sit down where I sit down and just assume that your only competitors are This Day, Guardian, and the Punch and the rest. No, CNN is not your competitor, whether you like it or not. Google is not your competitor, whether you like it or not. Facebook is not your competitor. Sky TV is not your competitor. Why? Everyone now in the media space is competing for some kind of attention. So it's the same attention span. We only have 24 hours a day. So how many of them can you sort into your own platform? It will depend on how much you can actually scale. So if you talk about retail, and I'm sure it's possible that someone here today, while sitting amongst us here, may have done a sale of about 100,000. It's possible. Maybe you sell hair, or you sell cream, or you sell perfume, and someone in Jos has just ordered perfume from you, and you easily, logistics, take it to this place, take it to God is Good. By the way, I spoke with someone, so I'm just telling you, we always think this thing is just global, but it's already here. God is Good mottos now make more money from logistics than person. God is good. So if you go through Oworoshoki, have you seen their massive logistics center? I mean, that's the demonstration that, look, this is the business we are doing. Who are they doing those logistics from? They have the small people doing businesses from their homes, on WhatsApp, on wherever it is that they are doing the businesses, just picking perfume, picking hair, picking sometimes food stuff, picking your product, you know? So, I mean, this is what is happening. So retail is changed completely. I remember the first time I think my mom visited the UK. I think that was 1983, if I remember very well. So she bought some stuff and she came here to sell. She went visiting, but she brought some stuff and came to sell. But I don't have to leave my home now to order suits from Suits You in London. I don't have to leave my home to order shirts from Chastaris. Nest will definitely supply to Nigeria. The point I'm trying to make is that because of this technology and of course of the disruption, your competition is not so much as only local anymore, but now global. So whichever sector, whether it's media you look at or you look at retail, the competition is now global. And of course, talking about disruption, he mentioned all of this, so I'm not going to dwell on these. Rising platform companies, that is the result of disruption. So you now have platform companies on a scale that we have never seen them before. So like the lady from MasterCard said, we never produced a card, but you have millions and millions of MasterCard. So they provided the technology for exchanging payments and they just collect their own rent. They collect their own rent, whatever that percentage is. So for most of the platform companies, that is not the model. We provide a platform, people come on it, they exchange, and of course, from that exchange, you collect your own commission or whatever name you want to give to it. So whether it's Uber, Netflix, Oracle, Intel, Microsoft, integrated platforms, investment platforms. So there are different kinds of platforms, and I explained all of this, so I'm not going to do it. So there's one that is, of course, and I have to talk about this because this is part of my home business. Subscription business is, of course, very, very, it's widespread now in developed economies, but it's also happening in Nigeria. Today, subscription business is very straightforward. You make a subscription, and of course, for a period of time, you're able to access the services, and of course, because you have done subscription. And of course, with that subscription, it comes automatic payment. So for instance, we do subscription. Who is our payment provider? Paystack. So when you pay online, you don't see Paystack, but the truth of the matter is Paystack that gives us the money at the end of the month. We provide the services. So you have Paystack on one side collecting the payment. And of course, you have subscription management system. You have another technology company, a company that you've never heard of, managing it, connecting us to the person reading. And of course, we providing the content and the person collecting the payment. So subscription. So talking about subscription, some examples, of course. Business is the first, Arise Play, Netflix, Bloomberg, The Atlantic, software, Microsoft 365. There was a time everyone that has Microsoft, you have to get this flash and you say, oh, install Microsoft. But now Microsoft say, look, pay every month. Don't worry, just pay every month and you can continue to use the service. Automobiles, of course, airline. So financial sector, of course, is not left out. We've seen the recent, whether it's Momo, wherever it is, everywhere, whether it's in relation to payment or deposits. So we are seeing considerable disruption by finance, in the financial sector, of course, led by the fintech companies. So fintech in Nigeria, this is just an example. You have the Paystack. These are Transact, Kuda, Bigiverse, InterSuite, WorkPay. These are companies that 25 years ago did not really exist, but they have becoming massive companies in Nigeria today because what? They are helping businesses and of course merchants connect and of course make payments. Carbon. So when it comes to the energy sector, we've seen the transition from coal to oil and gas and now to renewable energy. So whichever way you look at it, we have to fuel economic growth in the world. We have to fuel economic. The only question we always have to ask ourselves is which is the most efficient, which is the cheapest way, and of course, which is most environmental friendly today. So that is the answer, renewable energy. So the major oil companies that you see today, every one of them is now making an investment in renewable energies. This is just data to back that up. And of course, automobile disrupted. You have electric cars, just look at it, 2016, 1.2 million produced. But by 2020, 6.8 million vehicles, electric vehicles produced. The numbers can only continue to rise. How do businesses respond to that? Global passenger car sales, same thing. So the third one very quickly, talent war. Today, talent has become critically, it's always been very, very important, but it's now very, very important. Yes. Yeah. Talent, very, very important. There's no one that manages business now that will, I say talent is not important, but let's look at some dimensions of this. So what is driving migration? Is talent. Increasing the number of people working. There are people working here in Nigeria and they earn dollars. They work here and you'll be surprised. In fact, don't be surprised that some people are doing 2 jobs. Between 2 jobs, they may open your laptop in your office and the next thing, they're also connected to one platform in the US. So 66% of employee, our home parents, they work for one company for 25 years, 30 years, and they give them long service award. If you see somebody stay in your company now for 3 years, please give the person long service award. So 415% rise in approved study visa. And I'm sure anybody that's going for study visa, are they really coming back? 266 Nigerian doctors licensed in UK in 2 months. Can just think about it. 266 Nigerian doctors in 2 months. I didn't say in 20 years, and I did not say in 2 years. In 2 months. Software engineers, you know that. So let me move on very quickly. So working population, agriculture, manufacturing, don't let me do all of this. Unemployment. Now, the point is that it does not matter whether we get 200,000 people leave Nigeria today. The truth of the matter is that if we can work on our own capabilities, we still have enough population to drive growth. But the problem is, are we ready to work on that capacity? So that's just the issue. But we still have the numbers to drive growth. So are we going to work on the capacity like this? This is just something we're battling with today. You're talking of 1999 to 2003, students were away for 14 months and 2 weeks. 2004 to 2007, 9 months, 1 week. 2008 to 2011, 12 months. 2012 to 2015, 5 months. 2016 to 2019, 4 months. But guess what? 2020 to date, 15 months. Students are not in school. So because we are in Nigeria, we have to talk about 2023. There's no other more important conversations. So let's talk about 2023. And this is my home, just penny thoughts. You don't pay so much of it, just penny. I want to say this before I show you my graph. The most urgent, and if there's anything that is important about this presentation is what just about to say. The most urgent, the most important, the most critical thing that the government that becomes, or anybody that becomes president in 2023 must do is stabilize the Nigerian economy. Everything, whether it's platform, whether it's trading, whether it's investment, whether it's ASU strike, whatever it is that you want to do, if you don't stabilize Nigeria economy, we are going nowhere. So how do we stabilize the economy? Just 3 things I think I would say. The first thing is that, look, there is this notion, and even we that do business, sometimes we have that notion, even though we don't have the notion when it comes to our business, but when it comes to our country, we actually have that notion. Sometimes we don't know. We think that we can grow or become developed without the sacrifices. We think we can grow. Oh, we can do 7%, we can do 9%. We don't really need to do much. No, not lie. There is no country in the world that has become rich without sacrifices. So what is the sacrifice? The number one for me, I think, is we have to delink Nigerian government expenditure from oil prices. Let everybody know that, look, we are not going to link government expenditure with oil prices. What does that mean in reality? It means that you say, look, in 2024, with the first budget, we are only spending $50 per barrel for the year. Whether oil price is 150 or 180, this is what we are spending. What that does for you is that it gives, you are able to manage expectation. You're able to manage expenditure expectations. As I will show you, in fact, let me just go there straight away. Let me just go there. Now, what this graph shows, and I will end here now, is this. Nigeria from 2001, look at this. Fiscal deficit as percentage of GDP. What this means is that when there's high oil prices, Nigeria deficit. When there's low oil prices, deficit. Yes. Did you get it? Let me say it again. High oil price, deficit. Low oil price, deficit. You can never stabilize an economy like that. So the way you stabilize an economy, just look at the Asia, the India, the China, the South Korea. There is the same model. The same way the US developed is the way the Asians developed. The methodologies may be slightly different, but it's the same way. What is that same way? Every country increased their rate of savings. You cannot always import savings. You must increase your own savings. If you're a banker and I come to you, I say I want to do a business of 200 million, right? And I want you to give me some money. What will be the first question you ask? Your own equity. That's it. Your own equity. What are you bringing? So we don't want to increase our savings. We don't want to increase our foreign reserves. We don't want to increase everything. We want another country to bring their capital. The problem with that is that the moment there is an external shock, everybody goes out. And guess what? You become poor again. Yes. You become, I mean, it's straightforward. That's it. We must save. We must save. You want to get mortgage of 120, they ask you, how much do you have? You want to do business of 2 billion, how much do you have? You can't, because if I give you the whole 2 billion, you're putting 100% risk on me. So I need to know what you are investing. So, but we have two issues that we have to deal with ahead of next year. So what is that? Now, let me see. Before you do that, just 2 things, I'll just show you the graph. You must remove subsidy. You can't even start without removing subsidy. There's no point speaking English, Yoruba, Hebrew, Hausa. Let's just remove this subsidy so that anybody that is still asking questions, hey, but they will be corrupt, they will chop the money. You are just a big fool. No, it's true, you are just a big fool. Remove the subsidy. Let's know what is there. Remove it. Let me tell you the way I said, and I will crack Jesus and I will leave this place. If I have not paid my children's school fees, this is school fees season, right? I have not paid my children's school fees. And I come back from work and I drive in a new Mercedes Benz. Would they be happy? That is what subsidy is. You haven't gone to school, you haven't done health, you haven't done roads. You say you are doing subsidy. You must be a big fool. So anyway, and of course, smugglers, they will take their own, Thank you. Thank you.
Thank you, Dr. Kitty, for that very insightful and entertaining presentation. Please give him a round of applause once more. I could see a number of people taking photos with their phones. You guys have to pay. It's a different fee. So Dr. Kitty, there are enough people here who are going to upload your presentation. But rest assured, I'm sure if we ask Dr. Kitty nicely, he may decide to make some of those slides available to us. Like I said, we want to move quickly through this. We started late. Thing about Lagos weather you can't predict. There was a bit of rain this morning. People that had promised to come, even this morning, said they would come. They are not here. So we held back for them and lost about an hour, more than an hour. So I just want us to rush quickly, and then we'll all go and have lunch, like I said earlier. If you don't mind, can we just stand up and stretch a bit, just so that we can go into a last lap with a lot of energy? Who's been a gym instructor here? Just anyone who goes to the gym, clearly from my shape, you can tell that I don't even know way to the gym. Who is a gym person here? Anybody? Oh, we're all unhealthy, like me. Okay, let's just stretch our hands up, down. You know, just stretch. Move your neck around a bit. Stretch your hands. Move your ankles a bit. Yeah, and then back a bit. Okay, you'll be surprised what fat people can do, right? Surprise, surprise. So without further ado, I'm going to call Frank Elanya, who is our head of tech. Frank is going to handle the next session. The title of the session is Made to Measure: Lessons in Building Platform Businesses in Frontier Markets. Frank, over to you. Thank you.
Good afternoon. Good afternoon. Thank you. Okay, so we're just going to be trying to a little quicker so that we all can go and have our meal. So I have with me here, we're having the last panel. This is the last panel that we're having, and it is on Made to Measure: Lessons on Building Platforms Businesses in Frontier Market. And oh, all right. Okay. So a minute, please. Okay. This should be how companies are replenishing talent migration gaps. All right. So I will, without further ado, I'll call my the members of this panel session. That includes Lamide Akintola, Head of Q Commerce Africa at Global. Please, where are you? Thank you. And the next person I have here is Tosin Sorinola, Director of Artists and Media Relations at Boomplay. Then the last but not the least is Massimiliano Spalazzi, the CEO of Jumia Nigeria, and also the EVP Marketplace Jumia Group. Thank you so much. Yes. So, gentlemen, and ladies, we're going to try to speed it open there. So there'll be, the questions are not going to be too much, but we're just going to unpack as much as we can as the time goes. So let me start with you, Spalazzi. I hope you don't mind. I call you that. All right. All right. Oh, okay, Marcy. All right. All right. So, Marcy, you came to, or you became the CEO in 2012 of Jumia Nigeria, and over the time, we have seen the milestones that Jumia has achieved. We have seen Jumia become a unicorn, and we have seen several iterations and several verticals that you've brought into the market. Just tell us briefly what the journey has been since you became the CEO.
So actually, I joined Jumia since 2012, but I became the CEO of Jumia in 2020. for Nigeria, and I'm executive vice president for the group. Okay, so since we started, we actually the journey has been long. We went into many different businesses and verticals, served many different customers and vendors, but one really the one thing that actually kept us together is the same thing we've been thinking since day one, which was how to improve people's lives through the internet and make customers, vendors, logistics partners do better business together, right? So with this mission in mind, we built what Jumia is today. So we expanded our services, starting from key categories such as phones, fashion, laptops, all the way down to what we serve today with Jumia Food, Jumia Pay, Jumia Logistics for external clients, advertising, and more.
So moving on to you, Tosi, looking at Boomplay and the streaming business that we have today, it's sort of become the thing right now. I remember this week, my team was doing a story about cinemas, how cinemas are struggling and all that, because part of that is also because they're streaming. But of course, we have music now, which has become the thing. People don't do cassettes anymore. People don't do several things that they used to do before and all that. What informed Boomplay's investment in Nigeria at the time that it did it in 2015? And what has been the milestone so far?
Okay, so what informed the business? That's actually, very simple to answer. Music is the biggest form of entertainment in Africans' life. It forms a part of our culture and basically everything that we do. So I would say that that's, the basic driver. As at the time we came in, obviously there were other platforms, available for people to stream music also at the time, but they weren't focusing on Africa. And, Africa is the second most populous continent after Asia. And so we saw the potential here, and we also saw the gap in content distribution, in that, piracy had eaten deep into the music streaming sector, which was just starting at the time. And so we wanted to change that. We wanted to provide a means where music lovers are able to get access to music that they love at any, time. And so that's really what we wanted to do. But then let me just give, I know we're trying to rush, but I'll just give a brief history about how Boomplay actually started. So Boomplay was formerly known as Boomplay, as of 2015. And the core reason why we launched the Boomplayer app at that time was to create support for Techno's Boom music series. So Techno had, because we're launched by Transsion, right, into the market. Transsion is the owners of Techno, Itel, Infinix, and the works, right? And so Boomplayer was created to be to build some sort of music support for the series of Boom music phones that Techno had launched at that time. But after we launched into the market, we realized that there was a huge demand for the app. And so somehow music lovers, young people, students were finding ways to move the app from their Techno phones to the other brands as well. And so that pretty much informed our decision to, put the app on the Google Play Store in 2016. And, the success has been, we have over 100 million installations on Google Play Store. We currently have over 70 million monthly active users. We have over 85 million songs on the app, and the growth has been great. We're in Nigeria, Ghana, Kenya, Tanzania, Cote d'Ivoire, and Cameroon, and we're looking to expand to other markets.
Okay, so just a follow-up. You have partnership, distribution partnerships with some of the global brands. That how were you able to do that? And also, how were you able to sort of localize what you have with them here in Nigeria?
Okay, so with respect to our partnership with majors, I believe you're talking about Sony, Universal, Warner, and the rest of them. I would say that when we partnered with them, obviously the interest had always been there for them, to put their music legitimately into in the ears of Africans. And I think what they were basically looking for at that time was a partner that is worthy enough, that had the resolve, and could ultimately drive legitimate listens and in a way that is commercially viable. And I think that they found a partner in Boomplay, and we just started working together. And we're not only partners with the major labels, we're also partners with a lot of indies, independent music distribution companies as well, all over the world. And I'm proud to say that Boomplay is actually the only music streaming platform that has a Pan-Africa approach, to partnerships with all of these major labels and the independent music distribution companies. I think you also asked the question about localization. So in terms of localization, the kind of business that we run, localization is obviously very important. And that's why for us, we have offices in different countries. We are not, our focus on Africa is not to treat Africa as a country. We understand the fact that Africa has 54 countries, and with diverse cultures, different languages, different tastes in music, different genres of music, and all of that. So, we have professionals in this, different regions, and the app is localized to fit the demand and music taste of, every country. So, as you're in Nigeria right now, if you open the app, what you see on your homepage is definitely going to be different from when you go to Kenya, or when you go to Tanzania, or, when you go to Cameroon or anywhere else in Africa. Also, the playlists are localized. Everything about it is localized as well. We also have features like the equalizer feature, which basically allows you listen to music in the tune of whatever genre you enjoy. So if, for instance, you're a Fuji fan, as a Nigerian, we have equalizers localized within the app that can actually help enhance listening to any kind of music you're listening to in a way that, in that kind of Fuji vibe, that you enjoy. So, I mean, for us, localization forms a big part of our strategy, and where, we implement it in every way that we do our business.
Okay, thank you. So let me, please keep in mind, thank you. All right, so Lamide, let's look at Glovo. What exactly, how do you describe yourself? Are you a tech company, or a logistics or delivery firm? Which one is it?
Okay, it's a really good question. I think for those who don't know about Glovo, so Glovo started off in 2015 in Barcelona, and we've expanded across the world. We are currently in 25 countries, and we definitely see ourselves as a tech company, not a logistics app. And I'll explain why, right? So Glovo is an app where customers can get easy access to anything in their city. So we have three main verticals. So our first vertical is restaurants. So customers come on our app, and we're already in Nigeria, and we've partnered with all the major restaurants, right? So you can order from KFC, Chicken Republic, The Place, any of those big restaurants. That's our first vertical. The second vertical that we have at Glovo is our grocery business, which I lead, and here we have partnerships with all the biggest supermarket chains in Africa. So you think Carrefour in Kenya, you think Naivas in Kenya, we partnered with them. You think Marjan in Morocco, you think Prosuma in Cote d'Ivoire, all of them on our application, and customers can order and get products, their grocery products delivered to them. And also in our grocery division, another really innovative thing, and I'm hoping that we'll have time to discuss this, but we were one of the first pioneers of dark stores. So we've already launched 8 dark stores in Africa. And
what's dark stores?
Okay, let me explain it.
And Q-commerce, what's that?
So dark stores are a very innovative concept. So it's a way that So think of them as a digital first supermarket. So they're located in cities, in central locations, and they enable us to deliver to our customers within 30 minutes. So we've opened our first dark store in Lagos. We're very aggressive. We'll be expanding across Nigeria. And you can place an order on an application and get your groceries within 30 minutes. But the other value proposition of our dark stores, and we're very proud of this, especially for Nigeria and Africa, with inflationary pressures, is our prices. Our prices are way more affordable than you can get in most other of our competitors. So we're able to offer our customers what they want, right? They want to order their groceries and get it in 30 minutes, but also they don't want to pay ridiculous prices for it. So those are our dark stores. And so, as I said, we have about 8 dark stores in Africa. And as part of the Delivery Hero group, because we're owned by Delivery Hero, we have about 1,000 dark stores across the world. So we have a lot of expertise in this, and this is something I'm going to continue to invest in Nigeria, more broadly in Africa. And our last vertical, apart from groceries, is retail. So here, we're able to offer customers the opportunity to order from their favorite pharmaceutical chains, their favorite beauty stores, small shops, etc. So I'll give you an example. Like right now, you can come on our app and order from MedPlus. We've signed a partnership with Health Plus. So we're signing all the big pharmacies, and we'll have them on our application. And the idea that we're really building is that a customer comes on the Global app, they can get their restaurant needs fulfilled, they can get their groceries if they want to cook at home, they can get their over-the-counter health products from the big pharmaceutical chains, or maybe they can order from a local shop that's close to their house. And we've really been able to build this in Africa, and more broadly globally. I think maybe to give you a sense of our scale, so we have about 15 million active customers on our platform. We do about 3 billion in sales on our platform every single year. And of course, we're continuing to grow and invest. And of course, in Nigeria, we just expanded to Nigeria about a year ago. And, we've already opened up in Lagos, Abuja, and Ibadan, are planning to expand, across Nigeria.
Thank you. So moving into you, Max, recently, I think it was in 2016, you got the PSSP license. Okay. Knowing Jumia and how aggressive you are in the market, and what's the play? Is there a future of a digital bank there? I know you have Jumia Pay. How large is that going to go? Is this something that you're looking to towards a lot more broader, maybe getting a PSP license to go with it?
So on the PSSP license, we actually acquired it not a few months ago. So the idea, look, let me step back a bit, right? So Jumia idea is to really push for an ecosystem of vendors and customers to operate online, right? So we have served and worked on e-commerce for now 10 years in Nigeria and across Africa. We then decided to move on Jumia Food, so where we're offering pretty much, we just discussed restaurants, dark stores, supermarkets and all. Jumia Pay is the other vertical that allows payments to happen on Jumia Commerce and Jumia Food, right? Now, in this ecosystem, we have also logistics, which we've been building since 10 years. And we decided recently to open logistics to anyone here. So I think we were mentioned before, God is good. There's also Jumia. So if you need to ship your beauty products or items to your customers, you can use that. And so as a result, the last part that was missing, one of the parts that was missing was the PSSP. So how do we then enable these vendors who are not making sales on Jumia, but they're making them on their Instagram or their Facebook, beyond having them delivering their products with a Jumia logistics, right? So today, if you place an order on an Instagram shop, you can have Jumia logistics delivering that product to the customer. We also want to get to the point of the payments, right? So enabling easy payments in our ecosystem. And this is a bit the power, I think, and the beauty of building a marketplace, which was also mentioned in one of the sessions this morning, right? So once you start with one pillar, you start touching different pillars around you, and you start offering more complementary services to those that are actually the actors of your marketplace, right? So that's really going to be the next steps for us at PSSP. And then what's next, we will see.
So I just want to follow up on that. The market is getting a lot more, if you like, congested. A lot of investors are coming into the market, and e-commerce has become literally everybody can do e-commerce now, or think that they can do e-commerce right now. I'm looking at how the market is now in Africa. I know that some time ago you had to take a little step back to recalibrate and push forward again and all that. What are the trends that you see in e-commerce, and how are you positioning yourself to them?
I think e-commerce is, despite we've been here for 10 years, it's still really at the start, right? So if you look at the penetration, if you sum like all the players in the market right now, we're still very small across Africa, right? So, and then e-commerce is more of a mean of reaching people, right, in different ways. So again, we started with Jumia, we started having all the transactions on our platform, right? But what happens when people want to communicate on other platforms, and how do you serve those people to get to those customers through logistics, for example? I think the market is still booming, and actually we're at the start, right? I like to call it like a hockey stick. If you see India, UK, Southeast Asia, US, they've been growing, and then at a certain point, when you see the growth, you see just a hockey stick, right? So suddenly the penetration and the adaptability of online starts growing fast. Think about the youth we have here. We were actually seeing a slide before of the amount of youth here in the country, right? So people that really didn't start working yet. When they will start working, will they walk physically to a bank to open a bank account, right? They will not, they will be online, right? So will they shop by spending 2 hours in traffic? They will not. So once the purchasing power comes in, provided that broadband, technology, internet penetration, smartphone penetration keeps on increasing, you're gonna see a democratization of e-commerce, right? So more people will address their purchases and needs directly from e-commerce. And as a result, this sector will keep on evolving in all its means, right? So only now we spoke about a few of them, but there's many more to be discovered, verticals that needs to come up. So we're really just at the start.
So moving it to you, streaming has, like I said before, has become the thing, but Nigeria still has issues around the internet penetration, still has issues around cost of gadgets, you know, and all of that. How are you looking at the market in terms of all of these realities that you encounter every day, and also given the fact that you have bigger, so to speak, bigger players from all around the world now looking into the market and trying to, because of our Afrobeat and all of the things happening and all that, how are you looking into it, and how is that, and how are you positioning for that market?
Excuse me. So I would say that the field that we're currently, working hard towards is the bit to ease off, data costs for music lovers, and so we have partnerships with, telcos. In the past year, we've partnered with 6 telcos across 4 countries, and we're working with them to create bundles that are more affordable to music lovers. On the hardware side, Techno, Mobile, Infinix, Itel, those are sister companies, and they are known to produce devices that are quite affordable, in the market. So we're looking at this. These are things that we're working on. We're also working on we're very open to working, let me put it this way, we're very open to working with the government on the issue of piracy, because for us, this is the biggest challenge right now. It has always been, definitely there's been a shift because, people are now more aware, right? But then we still have a very long way to go. And, with respect to that, it's not a battle that we can fight on our own. We definitely need the government to implement stronger laws around intellectual property so that we can, ultimately curb piracy, because only then are we able to are we able to also, generate more revenue for artists on our platform, because our platform is a legal platform. And so the whole idea of it is to ensure that music streaming is legal and the artists are able to make revenue from their music sales. You realize now that a lot of the artists depend on shows, right, for them to make money, shows and whatever it is that they get from their tours, ambassadorship as well. But music streaming is actually supposed to be, at least one of the top 5 in terms of their revenue. But we're not really seeing that now because of piracy. So we definitely need the government to implement laws that can help so that ultimately these artists, let me just add that COVID actually, quite changed the orientation of artists and also I would say their management, because everybody was at home, there was lockdown, there were no shows, everything was pretty much online. And so what we realized is that kind of helped to shift the thoughts towards music streaming more. So I'll say that music streaming is even better now after COVID. Obviously, the global economy is impacted, but in terms of music consumption and habits tied around it, that's a lot better. So just in a nutshell, I would say that our strong points in terms of working around the issues or the challenges that we have, towards making devices that are more affordable, for music lovers to access, also working on data costs, and also doing our bits to help curb piracy.
So let me, before I turn to the audience, my last question to you is, what's the difference between you and DHL, UPS, and the other global brands? And also looking at your industry, that's delivery, everybody with a bike, Lagos State has banned bike, so anybody with a bike
through and through. You send a packet through DHL, they deliver the packet. That's all they do. I think for us in Global, we see logistics as an enabler. So our first business is to be able to solve the customer's pain point. They want to order their groceries, they want to get, restaurants, food from restaurants, and we built an app that enables them to do that. Of course, on the back end of our app, we need to build the delivery infrastructure. So we need to partner with couriers, we need to have our bikes on the road, but that's the enabler for us. That's not our core business. Our core business is customers coming on our app and placing their orders. And that's what differentiates us. And I think it also matters who owns the customer, because in DHL, let's say, so in that way, we own the customer relationship directly, and then we use the logistics as just an enabler to be able to deliver the packages. That's the first question that you asked. The second question that you asked was around, bikes and regulation. I actually think that that's a good thing. It's currently, the regulation has, banned passenger bikes, and you see a lot of couriers wanting to come on Global, work on Global, and a living on Global, and we're able to, create standards, healthy standards for couriers, make sure that they have helmets, make sure that their bikes are appropriately, armed, etc. So we've actually seen a spike in the number of people who are interested in working on our platform, and I think it's a good thing. Now, of course, competition is good. As the Dreamier guy was saying, we're still at the very beginning of e-commerce in Africa. It's less than 1% penetration. If you compare that to the US, or you compare that to Europe, you see e-commerce penetrations are around 10-14%. So there's a huge, huge opportunity for growth. And of course, more competition keeps us on our toes.
of course, we benefit from being such a big global company, and we're bringing our technology to Africa, etc. But having competition is a good thing for the industry. So I'll say about 90% of our orders are delivered within 30 minutes. And this is specifically from our dark stores. Because on our dark stores, we're controlling the entire process, right? We own the inventory, we own the dark stores. We've set up the dark stores in such a way that we're able to package an order within 2 minutes. So you place an order on our dark store, it gets dispatched to our dark store. Our dark store has prepared the order within 2 minutes. And then, of course, the delivery radius of the dark store has to also make sense, right? So we put a delivery radius of the dark store that allows us to deliver within 30 minutes. And then, we have very affordable prices. So people have both the convenience of, I've run out of pasta, I want to order pasta. I get it 30 minutes, but also I'm not having to pay double the price for pasta.
All right, thanks. One more question here for you. You talked about having these delivery riders who are using bikes on the road for you. As a company, what are you doing to ensure that they are not hustling on the road and they are keeping the other pedestrians and other motorists safe on the road? Well, you see these drivers driving very rashly around on the roads because they're in a hurry to deliver. What as a company are you doing? And that's a question that we'll have for Junior as well. What are you guys doing to ensure the safety of public and your riders?
100%. I think when we came into the market, this is what differentiates us from our competitors. We have really stringent rules for our riders. You can ask any rider on the road, they easily get kicked out of Glovo. We track everything by data. So I can tell you I can tell you how much battery my driver has on his phone because I have the data behind it. Everything is tracked. And if we find that a rider is, not keeping to the global standards, we kick them off the platform. And, thankfully, we have a huge supply of riders who want to be on the platform and who want to earn an extra living. But we know that to be able to maintain our standards, we have to keep our standards very high. I think that's what has differentiated us in many of our African markets because we're able to have really, really high standards for our riders. And we hope to maintain that same strategy in Nigeria.
Yeah, so you're asking about the security and the riders, right? So in our case, what we do is we are based any rider that is working with Jumia. So Jumia works today with more than 200 logistic companies that serve as riders for e-commerce, for Jumia Food, and for external clients, for logistics for external clients. So everyone needs to do an academy of 2 weeks with us. Once they're done with the academy, they're actually coming in the platform and they get orders the more they're actually doing good. There's something that is called DSAT, so delivery satisfaction. So when you're actually getting an order, you will say, are you happy or not about that? Based on that, you will grow or not. Then, if riders are misbehaving or they are, as you were mentioning, not respecting roads, etc., we work very closely with logistic partners to make sure that they are once warned and then removed from the system. This is how it works. Now, let's be honest, right? So the reality is in the market today in Lagos, the demand for online business is growing exponentially, right? So we are growing double digits. We have new players in the market that are growing, right? So we have single individual players that are also growing. So the demand for riders, especially in Lagos, has never been as high, right? And this, I think, is also an opportunity for government and for people to think that beyond the private, to educate the riders. What can we do more, to have more riders available, educated, with license, trained, that can actually deliver what the online business is going for. So that's a very big opportunity, I think.
All right.
a couple of questions. One is around Amazon coming into the market. How do you intend to respond by April next year? And then secondly, in terms of, you talked about the dark stores. Have any of you considered looking at ghost kitchens as well, or dark kitchens, and funding back? Because if you do, I've got some play for you.
You go first. There you go. So on Amazon, same story as before, right? So think about it in this way. Today it's 1%, the penetration. In UK, it's 18%. In China, it's around 23%, right? The penetration of line. So there is room for more to grow. And to be fair, competition has been here in the market, right? We will continue striving and, as a market leader, but we welcome competition. I think there's a lot to grow there. In terms of that stuff, for example, us also, we have right now, we have 5 operating in Lagos. We have in Lekki, in VI, Nikoi, Opebi, and Alausa, if I'm not wrong, right? So we think that this part can grow a lot. Ghost Kitchen, we also tried. We have some operating in East Africa, actually, and there's a big opportunity also there. So indeed.
I echo everything you said. I think Amazon is great for the business. They're going to pump a lot of marketing into the markets, which we need to be able to build awareness about e-commerce. I think, it would help build the sector generally, and then obviously we'll have winners, and we hope to be on the winning side. On dark kitchens, we have a huge business in Europe on dark kitchens. We tried it in Africa. It didn't work out so well, and we're reconsidering whether it's a priority for us. But we're open, if we want to talk offline, we're open.
Okay, good afternoon. My question goes to Tosin on the issue of piracy. You mentioned about it, on issue of piracy and how it's affected the music business and all that. My question is, the issue of the introduction of streaming was supposed to curb piracy to the barest minimum for most of these artists, because you mentioned that right now they are all getting their money from tours, both in Nigeria and in diaspora out and abroad. So how does your company experience this piracy? Because some people basically might not know how music is being pirated on streaming services. How do you guys curb these issues of piracy in the same space?
Okay. Well, just as I said earlier, we're doing our bit, but it's not a battle for us to fight alone. We need the government. We also need the artists as well. But then, in answering your question, I think I'll just tell you a bit of story about how things have moved, from what it used to be to what it is now, and ultimately to let you know that things have actually gotten better in terms of piracy over time. Artists are definitely making a lot of money from streaming now. But from what we know, it definitely can be better. And as I said, streaming revenue should be at least in top 5, for the artists. So I started my DSP journey with Spinlet, actually. Spinlet is the premier music streaming service in Africa. And I worked at customer service a lot at the time. And half of the questions, this was 2013, right? And half of the questions, actually 99.9% of the questions, of the queries would be, why should I buy music when I can get it for free? So you had the likes of not just OK, you had MP3 for shared. I don't know which of these ones you're familiar with, where people could just go on there and then just rip the music and listen to it. I mean, it's just there, you just download it on your device. The artist gets nothing. Obviously, the website gets, the visits. They're able to, get advertising revenue and all of that. And also, you'll find that artists actually put fame before revenue, in that they actually pay these websites, these platforms, money to put their music on the platforms to be downloaded for free, right? And so just moving away from 2013 till now, my customer service at Boomplay do not receive such queries anymore. Nobody's asking, why should I buy music when I can get it for free? Because, you know, people are more enlightened, but there's just still a lot of work to do, you know, in that state, because this website still exists. If you're very familiar with Nigerian music, you know, recently Burna Boy was going to release his album and it was leaked, you know, days before. So these websites, and, you know, there are also examples that I can mention in that light. So these websites still exist, and they are, you know, messing up the revenue for the artists. For us, obviously, we have done a bit by creating a platform that is legal for streaming. However, what we really need in Africa, as far as, you know, piracy goes, is the government to come in to implement laws around intellectual property that can ultimately help, you know, reduce piracy. I don't think piracy can be completely curbed, because even in advanced countries, I mean, there's still piracy everywhere, but then there's work to be done by the government and by platforms like ours, and we are very open, right, to ensure that these laws are implemented, right, and, you know, we're able to at least, you know, cover it to the barest minimum. I hope I answered your question.
Yes. Okay, so that'll be the last question. Okay, we need a lady actually, so she did first.
Hi, thank you. You guys have spoken really well. My name is Linda. I work at Business Day. So you also mentioned stuff about trying to curb piracy. One big question is always the payment side. So how do you pay these artists that you have their songs, especially for the ones doing very well? What's the payment model like? Is it per listen? Like, do you pay them for each time someone listens to the song, or how many times? How do they get paid?
Before you answer, sorry, is your question also around here? Hopefully. All right, so let's just take that. Okay, go ahead.
Okay, so every stream on Boomplay counts, and an artist is paid for every stream as long as it cuts the 30-second mark. So one stream is equal to 30 seconds. So if you stream a song for 30 seconds, that's one stream. And we pay our artists every quarter. Obviously, we are partners with the labels, the music aggregators, and the rest of them. And as such, you know, we pay them and they pay the artists. You know, but it's obviously based on the contents that they have on our platform. So every stream counts. There's a threshold, you know, just to go into it a bit deeper. So you're not going to be like paid $1, for instance. So you need to cross the threshold in terms of your, you know, streaming revenue before you actually start getting paid. So yeah, you get paid on the platform and for every stream. I think there's a first part to a question that I missed. I'm not sure. Or is that it? That's it. Okay.
Okay. Just to balance a little bit more, I think that this have her. That's the last question. Ash.
Okay. Good afternoon, everyone. I'm Veronica Anibuna. So I have a question for Glovo and Jumia. So from my understanding, so I feel they do the same thing. So I just want to understand the difference in terms of unique selling points for Glovo and Jumia. Thank you.
Sure, I can start. I think for us, we've always started off as a multi-category app. Our biggest belief is that customers want, you know, a full range of service. And when we launched in 2015 in Barcelona, we had all the categories on our app. I think that's the first differentiation for Glovo. The second thing is we really focus on operational excellence. Obviously, I can't speak to the strategy of my competitors. But, you know, if you compare delivery times in, you know, a typical African country, let's say Cote d'Ivoire versus some of our competitors, you see a massive difference. If you compare cancellations, you know, the number of orders, which imagine you order from a restaurant and your order gets canceled. It's the worst thing in the world, right? You're expecting your jollof rice to arrive. It doesn't arrive. If you compare our cancellations to our competitors, you know, it's night and day. And I think that's how we've really distinguished ourselves in Africa. And obviously in Nigeria, we're still very new. And, you know, we're humble enough to learn from our competition. But if you compare us, like, let's say in countries where we've been, in Kenya, Cote d'Ivoire, Morocco, we're already #1. And that's because of our focus on operational excellence. And also, I think as a customer, when I have an app where I can come and I can get my food, I can get my groceries, I can get my healthcare needs, you know, you're able to really fulfill the full set of customer requirements. At least that's what I see as our competitive difference, but I'll be curious to hear what Massimo has said.
We are bigger, so that's jokes apart. So we have 3 apps, right? So yeah, we compete and we offer the services that are very similar, right? So on Jumia Food, we are competing with Global, right? So we're offering restaurants, supermarkets, pharmacies, dark stores, the same. The difference is Jumia, it's e-commerce. I'm sure you tried also Jumia, right? Buying, you know, dresses, mobile phones, and the likes, not delivered on demand, but delivered next day, depending on where you are, right? We have Jumia Pay, where you can charge, you know, like mobile phone, that, and the likes. And then we have Jumia Logistics for external clients. So for example, if there's anyone here that is a bank, credit card company, or you know, like food sector, you can use our services to deliver you know, like the food that you need. Take, for example, a large food chain, they can deliver the material they're using in the very restaurant across the country. Or if you're a bank, you can use us to deliver your credit cards and debit cards to your customers. So we do line haul move, inventory counts, and the likes. I'd say it's in the vertical of Jumia Food, indeed, we are competing with Global.
And I'll just come back on we're bigger. I mean, if you compare our market cap, we're 16 times bigger than Jumia. Okay. So just for the record.
Okay. So I'll begin the truth anyway. Thank you.
In Nigeria.
Yeah, I agree, Nigeria for now.
All right. So thank you so much. It's been a delight talking with all of you. Thank you, everyone that has stayed back. Thank you so much, gentlemen and ladies. So we'll hand over to Obi to bring it all to an end. Thank you so much.
Thank you so much, Frank. We see a little bit of a Microsoft versus Apple fight brewing right there. But it's one of those things. We like to see 2 giants once in a while. You know, you guys are repping for Nigeria, so keep repping, keep repping. Now we come to the final panel of the day. I want to appreciate those who stayed back. We're all very busy people here. But the reason why we decided to have this thing this week was because many of these topics are not what you would normally hear in some of the big business conferences. Business that will have a reputation for, you know, not going with what everyone else is doing. We like to focus on what is going to be the next most important issue tomorrow. And that's what we've done here, talking about platform businesses, you know, talking about how people are managing, you know, with these emerging business models. The final panel of the day we have is titled, How Companies Are Replenishing Talent Migration Gaps. As all of you are probably aware, probably know people who've moved to Canada, moved to the UK, moved to the US. In the last year or two, since COVID happened, lots of people have left. This is a topic we're very passionate about in Business Day. My managing director, Dr. Kitty, is very passionate about it. He talks about it all the time. Almost every management meeting we have, he has a new story to tell us. So I'm very happy to know that he'll be moderating this panel. Dr. Kitty, you're welcome. To join him on this panel will be Bolo Lusoya. He's the country manager of Tech Experts. Tech Experts has over 1,800 people working, providing tech support to companies in Nigeria and the rest of Africa. Mr. Bola Olusoya, you're welcome. We also have Ms. Shewoni. She was here quite early. I appreciate those who, in fact, Doc, you had mentioned Long Service Award. I think, we need to appreciate Bola was here early. Ms. Oni was here early. She's very busy, extremely busy, and she had a cold early this week, but she said she would come and she kept to her word. Please put your hands together for her. Thank you, madam. I haven't seen them yet, but we have two more people. We're supposed to have Wale Ayodele. Is Wale here, please? Wale isn't here yet. We'll have to go ahead. And finally, the managing director of Galaxy Backbone was supposed to join us, but last night he informed us that there'll be a meeting, he'll be able to make it. He's supposed to have a representative here. Perfect. Let me just get his name. Thank you so much, sir, for coming. 1 second, please. Just a second, please. Let me get his name because I want to announce this properly. I only got this message this afternoon. This morning. Oops. Oh dear. Thank you, sir. You saved the day, saved the day. So we have the head of regional office, Abdul Malik Suleiman. You're welcome, sir. Thank you so much.
Yeah, thank you so very much. As Obi said, we really thank you for staying up till now. What I can assure you is that this panel will not take more than 20-25 minutes, but we will still touch all the right buttons when it comes to talent. So the first question I will ask all of you the same question is, in your own organization, in your business, what is the situation in relation to Japa? Is it Japa or Japa? Japa, okay. What is the situation? How is that affecting the productivity? And can you contextualize that, whether from a Nigerian perspective or global perspective, in terms of the opportunities that you see for businesses, and of course, in terms of the opportunities that you see for even an economy such as Nigeria? That's my first question. You go around, then I will now come to the specific. You first, sir.
Japa. Okay, good everyone. So first I'll talk about Japa. I think Japa is a term that is basically common in every business meetings now. But basically for us in Tech Expert, we've looked into the opportunity and tried to reverse the trend. And what we do basically in tech today is we offer deep technical support, IT outsourcing to large organizations. So the tech talents who are living in Nigeria today, they're traveling basically to UK, to US, to different locations globally to offer either software engineering or development roles. We look at what has happened in India 20, 30 years ago, where India basically went into IT outsourcing and tried to attract top organizations, telling them this is why you need to come to India. And we'll go around to convince large enterprise decision makers that you need to open your base in Nigeria. And our success story over the last 4 years, today, Tech Expert hosts 1,800 software engineers in Nigeria, and we're delivering support to the big clients like Microsoft, Micro Focus, not just in Nigeria, but also about 95% of our services is we are supporting North America, we are supporting Asia, we're supporting Middle East and different countries across Europe. So what we've also done is for you to keep young talent nowadays, you need to invest in training. So we have our training called Elevate, which we started about 3 years ago, and we focus basically on skilling and upskilling. Nigeria has, despite the Japan, if you look at your slide earlier on, we have over 600,000 graduates in Nigeria. We're a country of 200 million people, and we are English speaking. So it positions us, we have that talent. Even I believe strongly that even if 100,000 people leave this country in 1 month, we have the talent pool. If we properly train them, skill them, and position them to what is required in the industry. And basically, that is what we do in tech.
Okay, so I'll move to you. Before you come, let me just dimension your answer a bit. You have spoken, as I expect, from your own perspective, and obviously from the opportunities that is created for your business. You run a different kind of business. So what does this Japan mean to your whole business? Is he currently a threat? Is he a threat?
Wale Ayodele, founder of ThinkCraft. Thank you. Please put your hands together.
Please. So, is it only a threat at the moment, at least from your own business perspective, or you're beginning to see a way in which this can also be an opportunity for your business?
Thank you, and just good afternoon to everyone. And I would also like to say thank you for the opportunity to be part of this platform. And I think you started off on that right note, which is it affects different sectors differently. I think, of course, with tech, it's a big opportunity. With the medical field, it's a different perspective. But I think the first context we need to establish is it is still a small percentage of the total workforce. Whatever sector we're looking at, what is currently happening is still a small percentage. And maybe because it's still in the very early stage, because this is a trend we've started seeing post-COVID, as in cutting across various sectors. I mean, it's always been in the medical field, it's probably always been in the tech, but now we're seeing it touch various other functions. But for us, I mean, and maybe a bit of age 11s, we've got four key verticals. We're in retail, a joint venture with Pick n Pay. Logistics, that's a major source of our business. And then real estate, and then automobile sales and after sales. So it's not really a threat, but is it something that, yes, as part of people management? And I think that should really be the focus. Because when you're talking about people management, you have to always identify what are the risks at any point in time. I mean, I saw the chart you showed, which I think was very instructive, looking at the number of months students have been out of school. I think that's a bigger emerging threat that we're seeing as a lagging indicator. We're probably going to start seeing that impact in the next 3-4 years when you start looking for your feeder pipeline and you can't find it. So yes, to the question, it is an emerging issue. It's something that in any people conversation you have to go, because in any normal, strong people management conversation, you should identify talent and understand what are the risks to each talent. And those risks vary depending on the age group of that talent. So anybody within an age cohort, there's a risk of going. Right? So what then is your succession pipeline for that talent? Now that should be a conversation whether you actually have this issue or not. I should identify talent in my organization and say, what are my feeder succession people within the organization or outside of the organization for that talent? So and I think that's something that we do as part of our own people conversation. But what has happened obviously in the last year is we've started putting the lens of who is likely to migrate as one of the factors to consider when you're looking at people. And then what do we do? And one of the things in the few conversations that we've started to have is that the openness you have with your team. We've started having conversations where we know a year ahead, someone who has indicated, I will be leaving. So it's becoming an open conversation where you, as an organization, you have time to plan because you respect that conversation is happening. But you also identify the fact that it's something that can cut across the organization. So do I have a potential successor? If I don't, am I going to get talent outside of the organization? You just need to put all these things on the table. But I would just say it's not a major issue. But I think it just focuses every organization to start looking at how you build succession, how you build a pipeline of talent into the organization.
Yeah, thank you so much. Please let me give it to Mr. Wale Ayodele, founder of ThinkCraft. What do you do, I mean, as a business, and how does this migration, young people, middle-aged people, how does it sit and how does it affect your own business?
So as a tech business, I think we're one of the most affected, right? Because you see that the migration happening today, aside from maybe in the banking sector or medical sector, like there's a lot of demand for tech talents from Nigeria, developers, product managers, and the likes. So we've actually had to deal with our fair share of exits, right? As you know, FinCra, as you know, FinCra is a payments company, or a startup, a fintech startup. So we have, just less than 100 people. So that means when you have 1, 2, 3 people leave, like it's very significant. So if 3 people leave, that's 3% churn in our staff rate. So last year we were less than 50. So we had a 26% churn of our staff, and it was a ridiculous situation. So we had to go back to the drawing board, right, to say, okay, what can we do to fight this situation? And we actually went through some very extreme measures, and I'll share some of them. So, for example, today, every single employee at FinCra has shares in FinCra. So that's to give out employee options to all our staff. In addition to that, we changed our salary structure to try to be more competitive with not just other venture-backed startups, but even startups like in the global stage. So basically, as you look at, okay, what is the average developer at this stage earning somewhere else? We might not be able to exactly match it, but we had to change our structure where some people got as much as a 300% increment, right? Just to be competitive. It didn't end there. We came up with policies like vehicle financing, where today we finance vehicles for some of our staff. We cover 50% of the costs if they are able to stay for a 4-year period. We came up with, of course, more policies like 100% work from home, because before now the issue used to be people were quitting their bosses, like not within FinCra, but generally. But now people are quitting the country, right? So how do we fight against the bad press that Nigeria as a country has? So we have to make it as comfortable as possible for people working with us. You don't want to work from the office, okay, 100% work from home. In fact, it got to a point also that despite all of these policies, people really just wanted to leave. They are scared for their lives or security and all of that. So today, we have come full circle, and we now even have a relocation policy as a company where we've come to say, okay, since we're a remote company, what difference really does it make to us if our staff now lives in the UK or lives in Canada? So today, we actually actively encourage it to say, you want to get a UK Tech Nation visa, come, we'll write the recommendation for you. You are applying for PR to go to Canada. We might even give you loans, to help you settle in. And we've seen that the more we are embracing this idea, so people are more open about it, I want to leave out. And right now we have about 10% of our staff that migrated from Nigeria, living somewhere else, no drop in productivity. And, so those are some of the things that we've had to do to cope with the situation. And just to give a success story, we have a retention rate now of 95% this year since we implemented most of these policies.
Thank you very much. I like the measures you take. I'm particularly interested in hearing what Galaxy Backbone is going to say. And I will tell you from two perspectives. One is that you are a government agency, but it's not necessarily that you run like a government. I mean, you are an agency and you have your own aspirations, which you're trying to meet, when you also operate in the tech space. How does migration, whether it's of talent or your people, how does that affect you at the moment?
Okay, thank you very much. And I'm really very pleased to be here on this platform. I'm here representing my MD, Professor Ndi Abubakar, who was unable to attend due to the illness of his wife. So he sends his apology. Okay, let me start from the beginning so that there will be full understanding, because I'm not sure if everybody here is aware of Galaxy Backbone. Yeah. Okay, good. So Galaxy Backbone was set up by President Obasanjo. He visited the Federal Secretariat in Abuja, beautiful Federal Secretariat, and he looked at the rooftop and saw more than At that time, 1,474 VSATs. Every agency had a VSAT on the rooftop. And he was wondering, what are these? Are they watching TV? They said, no, it's for internet. Internet, yes. Internet, yes. So he entered one of the MDAs and asked, who is your provider? He says A. Who is your provider? He says B. Who is the provider? No, almost all the MDAs had different providers. And you know what that means. Because it is VSAT in those days, if you send an email, it will probably hit abroad before even your neighbor gets the email you are sending. So that was what gave back to Galaxy Backbone. He set up Galaxy Backbone to provide a common platform for government, single platform. And when Galaxy was established in 2006, it started operation actually in 2010. Again, problem because it is a tech company. What happened? We are under the SGF and the salary structure were pegged with civil servant. I'm from the private sector. How do I live and then you reduce my salary by about 80% just because I want to work for government? That in itself was a problem. Then some people started, and at the beginning, almost 70% of the staff left because first, you have to go through government bureaucracy. Second, if you are providing services to an MDA and it is not in the budget, you cannot quickly replenish. Service level agreement couldn't be met. So the first thing the company did to halt that slide of JAPA, as you said, and even generally service level agreement was to wean Galaxy off government control. So, and that was granted. So government says, okay, go, sell your services, build your finances, employ your staff, discuss the revenue, because government has a revenue bracket. Discuss with the revenue people how you want your structure to be. And that was what gave birth to the organization of Galaxy. And from that point, I think it's been fair in the sense that we operate like every private sector company. With all government expect from us is return on investment, that's all. I'm not supposed to be there for 35 years. I've not been there for 10 years, and I will not be there till I'm 60. If you don't meet your KPI, you are put out. The only person who has a 4-year contract is the MD. Every other person can wake up tomorrow, he doesn't have a job, even if you're in the management. And that's good for Galaxy. And all the people who churn, the good thing is we had data of the people who churn and went abroad. And today, we sign underpinning contracts with them and they are providing services back to the organization. Because remember, we started as a VSAT company, we now became a connectivity company, and now we are into data center. We have a tier 4 data center in Kano, we have a tier 3 data center in Abuja, we have a tier 3 data center in Enugu, we have a co-location data space in Ikeja, in Lagos here. And we want to have a tier 4 data center in all the geopolitical zones of the country so that we call it data center close to the populace. But the major challenge we are still having is for those who turn away from Galaxy and go to Nigerian companies, it's very difficult signing a contract with them because of the Nigerian nature, because of the nature of the country. Organizations want their staff to work for them alone. So if you are turning from Galaxy and going abroad, we're happy because we'll never leave you if you are good. You'll still continue to provide services to the company. And that's how we'll be managing. And so far, so good.
Thank you so much. So, Mr. Rubola, I'll come to you now. So before I do that, when we talk of migration, there are 3 dimensions of it. There's the individual dimensions. I mean, personal aspirations. I don't feel fulfilled in this country for whatever reasons. I feel I deserve more, or I just want to further my education. That's one dimension, that's the personal. There's the business and industry dimensions, and that's what we started with. And down one, there are, depending on where you sit in the industry, to you are smiling to the bank. To me, as my colleagues will tell you, it's not something I find funny, especially when 3 of my people just left in 2 weeks. How do I regroup? So, but for the nation, there is the India example. And that is where, and I want you to combine the 3 levels. How does tech experts see Nigeria being a net benefit, because as I said in my presentation, you also agree, everyone has highlighted that we have the resources. So it means that it is about building the capacity for how does tech experts help to reach this, so that we're not just talking about, well, if A wants to live well, and so, but there's already B. I'm talking from a national perspective now, and from a business perspective. So how do we do that? What are the steps we have to take? How do we ensure that from now in the next 5 years, as she was trying to say, we just continue to replenish the talent that is required for Nigeria to grow?
Okay, so first I'll start from talent development. So we have our sister company called Elevate. And basically what Elevate is doing is, first we partner with the government. For example, Lagos State Employability LSITF. We partner with them to not just do things around vocation. Now we help them do skilling program, mass skilling program on software development, cybersecurity, things that we know will help with improve the employability metrics. Because yes, we have the talent in Nigeria, but we still have 30-something% that are unemployed, because what they've learned in school, they cannot add value to corporate organizations. So we're doing that with government on employability programs. We've done a similar thing with Microsoft in Nigeria. Microsoft at the ADC in Nigeria. We partner with them on software development programs. We've trained, for example, recently about 125 people, and about 90% of them were able to get employment even at the last week of their program. So we are doing a lot of programs even with other state governments within Nigeria, and we've even expanded this to other countries in Africa. Then in the area of businesses, so for businesses in Nigeria, we see there's a good migrations, you're having attritions, but really, can every organization say, I want to have a succession plan of having 10 to 20 extra people as my overhead? The answer is no. So with what is going on in the country, what we now do in Nigeria now is we do IT outsourcing. So we outsource talent to organizations. So whether you lose 50 or 100, I have a talent pool that I can continue to backfill for you. And for you, there's business continuity. So as long as you have business continuity, the economy is not impacted big time. So we do IT outsourcing to ensure there's business continuity for organizations in the country. And for the individuals, so what we've done is we've launched a solution that is called WISE. So WISE is a talent management solution to keep the individual within the country. See, every IT guy wants to leave, but do I want to leave for a $50 job or leave for a $1,000 job? That guy wants to leave for a $1,000 job. So our WISE solution creates a career management journey for them and says, over this period of 3 years, I want to know this guy, understand him, create micro learnings for him, targeted learnings, and it's able to grow. So some have joined us as software engineers, and they leave maybe after 3 years as solution architect. He knows when he's leaving after 3 years, yes, they may leave the country, or they may go to other organizations and get involved in things around digital transformation. So really, we are able to look for solutions around all this. And I think the fact that tech operates globally in 10 different countries. So we understand the needs of emerging markets. So we're just trying to replicate this in Nigeria and have solutions for each level.
Okay, thank you very much. Sean, let me come to you on this, but I'm going to still talking about where Nigeria sits. He's talking about tech, and it's very, very easy to design systems like this in tech now. But the problem is not only tech. So the problem is talent in general. So you talk where the data has shown so that about 266 medical doctors being imagined. Now, I saw an advert, I don't know how many, sorry, I saw an advert in the newspaper just last week. I think it was Lit that was now advertising that, oh, they now have spaces for training. But if you, that's training to become a consultant. But if you look at it 3, 4, 5 years ago, there are medical doctors that graduated that did not have spaces for training. So what, as a nation, how do we build systems I mean, like I said, two things. One, to expand our capacity. Two, to improve our productivity. There must be a way in which countries, everybody design a system that works for the individual, works for businesses, and of course, work for the nation. But what is the basic template you think we can work with?
You're asking a very wide question.
I know.
Because there is, what should we do from a capacity standpoint in terms of fixing the education sector? I mean, that's a conversation that could go from here till tomorrow. What do we do as private organizations to help bridge that gap when an employee comes into the door, right? I mean, he's described what he does.
Yes.
In our own organization, what we're trying to do is build that employee experience from when you come in. How do we create an environment that at least allows you to thrive, allows you to be an entrepreneur, even if you're not an entrepreneur? How can you be an entrepreneur in all the things that we provide, from the performance management system, from the pay structure that we're designing, and just even from the responsibilities that you're given, that latitude that you're given within your role, all to create that experience that at least by the time you leave, you're leaving with an enriched experience, right? Our business model is different from a tech where you're earning both nationally and internationally. I wish I had that kind of model. But within what we have, how much of that are you investing back in the individual? So through training, through the pay structure, like I said. But I think what the extension for that, which is where we also want to play a role, and I don't want to use the word CSR, because I think this is really more from how do you play a corporate, a public sector role within an economy. We're very passionate about entry-level education. Like I said, this for me, that graph you showed is the bigger problem. Because what we're building now with people leaving, will eventually, hopefully when we get the right leadership, will morph into what India is today in terms of being a hub, for certain key talent. I believe so. I mean, we're already a hub for medical talent. I mean, if you talk about, the highest nationals in medical field, Nigeria came up on that. So we're already becoming a hub for certain specialties of discipline. So I think if we can just get those, enabling policies right, we will solve this problem in a way that it becomes a positive net contributor to Nigeria. The bigger one is fixing the education sector. And I'm glad, if you remember how Professor Sachs ended, he talked about, the first thing he said about, speaking to the African elite is building capacity. How do you educate? We're a youthful continent, and Nigeria in particular is even more youthful than most countries. How are we going to close that gap? So for us in AG Leventis, we've targeted the entry level. So we partner with agencies like STEM Met, JAN, Junior Achievement of Nigeria, how we can at least catch at the very entry level, impact some of these skills that we believe will become, the emerging skills both for now and in the future. So you're talking of STEM subjects, you're talking of, also disciplines where, especially in the engineering sector, because we have a little bit of manufacturing when it comes to automobiles. So I think that for us, as an organization, is our only little role that we believe we can play in trying to address this bigger problem I think we have as a country, which is really closing this capacity gap.
Yeah, thank you. I'm going to ask a follow-up question, actually. One of the things that is missing in the questions that we have asked so far, and I'm going to bring that in now, is that I probably have a good job in Nigeria, and it's already happening in the banking sector. I mean, you see people earning well. But they still want to leave. They are doing well. Like the head of Franklin say, but they still want to leave. So how do we, and because you are a member of about 3 boards, I believe. Yeah. So in those board conversations, is there anything that we can do at the highest business level about people's mental state, their understanding of probably the challenges that we face as a country and where we see the future of the country, even though you may not even believe it's important, but where we see the future of the country. Because ultimately, that is what drives some of this migration. It's not necessarily about, oh, I don't like age 11s, or I believe my skill is more, better utilized outside. But it's really about what is my stake here in the next 5 to 10 years. Well, how do you deal with, as a business, how do we deal with that? Let me say you, how do we deal with that?
Okay. You know, there are different reasons why people leave.
Yes.
And I was reading some of the data points you had in your, there's some things that are controllable, there are things that are not controllable. Exactly. And you have to understand where people are in their own personal muscle. For some people who are young, they're thinking of their children's education. So you understand that data point, right? And like the tech guys, if there are ways in which you can, if I'm part of a multinational, like you talked about some of the organizations, I'm grateful to sit on their board. If you have a multinational, you have the opportunity to create different, geographies, experiences, for your talent. If you don't, you have to think, what else can you create within your ecosystem? But you can't stop people from leaving. I mean, I'm a realist and I like to face a problem and identify. We have a bigger issue as a country, right? And it's creating certain triggers for different people. So you have to recognize that. Now, as people managers, and I hope we understand that people managers, it goes beyond just HR. Every leader is a people manager. What conversations do you have in those one-on-one sessions with individuals? In some cases, you can help narrow the reason why they want to leave. In some cases, you can't. Right, you can't. So I think the key thing, coming back to the direct question on board, every board, I believe, I'm grateful to sit on strong boards that focus also on people. You would have a committee on human resources, and that's why I keep going back to the earlier comments. What do you talk about how you manage talent and how you manage resources generally? Right? Because understanding the triggers, understanding the age cohort within your organization. If I'm in an organization like where everybody is young, your focus, what you discuss as part of a committee on people will be different. So some of these issues will come to bear. And then what opportunities? So if you're a multinational, how well then are you exporting your talent outside of your market to create that experience? So that's a huge question. You just have to dimensionalize.
Yes. So let me come back to you. And you started that conversation. I'm very, very delighted. And I wanted to provide more detail. There's obviously a challenge with replenishing this talent. So for instance, let me give an example of Business Day. I work with a very, very tight budget. I work in a very, very tight productivity industry. That's just the truth. Media industry, whether in Nigeria or all over the world, is tight when it comes to productivity, because I can't just sit down somewhere and expect some kind of money, for people to just. So I can't, as you're saying, I can't employ 2 or 3 people because I think, one is going to leave, so you stay there, be marking time. I can't do that. So from your experience, how do we expand as a country? I know you've done what your own business does. But is there a template that you know of? Maybe it's the Indian model, whether it's the Chinese model, whether it's Kenya, wherever it is. How do we look, we just continue to replenish the talent. Even football teams, as we know, football teams too, they are getting tired of spending 100 million, on players. So they want to train their own over 2-3 years and be able to play as good as 100 million player. So is there a way you can think, okay, can we design this as a nation, say, okay, let's do this?
So it's very easy, but it's also very difficult. Why is it easy? Because I think the solution at scale is education. But that's the role of governments, and that's what makes it difficult for us. I don't think that government really wants to work. But if you look at it, maybe from the corporate social responsibility part, I think that's the only way we can make some progress. So, for example, he mentioned some initiatives, working with governments and just finding ways to upskill people. She also mentioned some things that they do in our organization. It's same for us as well. And I think I'm very glad that this is something that different organizations are thinking about So for example, last year, my company sponsored 200 girls to learn how to code. So we sponsored them through a particular company called AltSchool. So AltSchool today, they're a tech company, right? So they issue diplomas for tech skills like product management, programming. They're also going into some other specialized courses like video editing and the likes. I believe that platforms like AltSchool have they have a great potential in terms of educating the larger part of the economy. So right now, they have about 11,000 students going through their programs. And that's huge because I'm a graduate of Keynote University. While I was in my final year, the entire school were just 7,000 students, right? But we have AltSchool, a tech company that's just about a year old, already have 11,000 students. And these are not just 11,000 students that will spend 4 or 5 years and pay millions. Their many diploma costs less than $500, and they are learning vocational skills that they can use to start earning $50,000 a year, $70,000 a year within 1 to 2 years. So I feel like platforms like that can really help. And then of course, more businesses like, being intentional about sponsoring people to this kind of initiatives. And then of course, bringing in like lower level entrances to the company. So prior to now, we always had like the idea of only hiring senior talents, because when you are building a startup, right, it is like if you have 5 people are probably doing the work of like 30 people. So to a very large extent, you can't necessarily rely on very junior people. You need very skilled specialists to be able to grow fast and achieve results. So that's why most tech companies have found it such a pain that even though there are so many unemployed people, it's very difficult to find quality people for those specialist roles. So that's why we've now come full circle to say, for us to be able to fill these roles over a long term, we need to also contribute towards developing that capacity, since our educational system and government is not really playing that role. So one of the good news I saw recently, I think with Flutterwave, they started a graduate training program where they hired 200 people, right? I think that's like really impressive, given that as an organization, they were just about 500. So they increased their staff count by 40% with new entrants that don't really have any experience. So 3, 4, 5 years down the line, maybe half of those people are in other tech companies coming in as experts, coming in as experienced hires. And I think more initiatives like that can really help. I just wanted to also mention, like in my family, I have 6 siblings, so 7 of us. 5 of my siblings are jackpot. We're just 2 left. Right? Yeah, 5 of them are jackpot. We're just 2 left. And I think it's very good for the country because I can see the quality of life my family started living when all my siblings started to live. Like the allowances my parents are getting, and the projects that you see today. I'll have my brothers calling and say, "Oh, well, I want to invest in a tech company. This tech thing, there's money there." They can't have that disposable income to make those kind of investments if they were all here. In fact, one of my brothers used to work at Tech Experts. Yeah, he was a cloud security engineer. He left from there to the US. I think there's the net positive outcome, but for us to not feel that pain, we just need to do more work in ensuring that we're building capacity for the available people.
Yes, so please go ahead.
I just want to correct this impression because you mentioned it once. Building succession doesn't necessarily mean you have to bring people into the organization, right? You can actually identify people outside the organization in the event. And how are you cultivating that conversation and all that? So it's not all about have 2, 3 people to start working.
Yeah, thank you very much. Yeah, so you've spoken extensively, and I really want to nationalize this thing, because the reason I'm particular about this national is because there's really nothing we can do as individuals or as businesses. It must always be about the nation. Perhaps the Indians were having this conversation 30, 40 years ago, but today it has become a net benefit for them. So whether it's Microsoft, whether it's Google, whatever it is that you're talking about, you have an Indian man sitting on top. So I don't know whether we will get there, but I really hope that we do. But the truth of the matter is, the point I'm trying to make is that as a nation, we have to build capacity, not only for this nation, but for the global economy. So in Galaxy Backbone, in all those businesses, do we have that kind of mindset? And how do we begin to engage the government to understand that these people as people, wherever it is that they are, whether it's diaspora or they're here, is really about looking after them to ensure that they deliver the best?
Yes, I think that the government fully understands that training and skilling people up is a must for a country. Because you can aspire to be anything, and if you don't have the requisite personnel, you will fail as a nation. But for example, what is the Ministry of Communication and Digital Economy doing recently? It is busy conducting training in all geopolitical zones on blockchain technology, digitization, 200 like that. I actually attended the one in Northwest and Northeast, and brilliant fresh graduates. The one that was conducted in Northwest, I think about 7 or 8 of them are already out of the country as an outcome of that training, in conjunction with Huawei, in conjunction with Microsoft and other multinationals. And for Galaxy Backbone, the mistake organizations make is if you only try to train for yourself, you will fail. You will. So if this JAPA team, as long as they're going to improve themselves, we are happy. We have people in our companies now who have worked with Tesis, financial company in the US for 15, 20 years. They are tired. You get to a stage that you just want to come back to your family and you have the skill. So you just come back and fit in. But if you deny him the opportunity of going there, he will not have that skill. And in Galaxy Backbone, government has a lot of programs sitting down that they don't know what to do with it. So when we sniff such, we discuss with government. There is the 5-year plan for e-government by the Korean. We sat with the Korean consultancy firm and then got a place in PSIN, the Public Service Institute. And we call it Galaxy Academy. Last year, we trained 427 fresh graduates. We write letters to MDAs. If you have any copper, NYSC, that is serving, that has a minimum of 2-1, send it. And they go there, they perform. 57 of them are in Korea today. And that pool is what we can also pick from in the event that our own staff decide to chant. So that's really what we are doing.
Okay, thank you. As we begin to round this up, can I have questions? Does anyone have questions? Can we have a roving mic, please? Questions, please, for my panel. Please, say your name and your question, and if it's directed to any individual, please.
So I don't know whether we're allowed to add 1 or 2.
Yes. Yeah.
So I just wanted to share 2 things that we also did. I mean, I run a company that has 3 subsidiaries and some outside Nigeria. We started noticing this trend 3 years ago. So the first thing I did, I have 3 MDs that report to me. I called a management meeting that there's a big threat. Unlike you guys in the tech, I'm in a business where you have to be physically present, real estate, management, development, and healthcare management. And I told them something. I said, everybody go and look within your organization. Your mindset should stop being who does the job. It's Femi that does the job. I said, think like, how does the job get done? And come back to me with different solutions. And different things came back. Somebody said, look, this job, this guy is the only one doing it. If he leaves today, I'm in trouble. He started thinking of how to outsource. Another one said, look, if I outsource everything, I'm going to run into trouble. So they redesigned so many jobs in the organization. And that gave us a lot of comfort that if anything happens, we are not dependent on anybody. So that's number 1. Number 2, immediately that started happening, we developed a graduate development program for people who will come into the organization, and we started with 20 every year. We bring in 20 fresh graduates into the company. We post them around within 6 months. They go to different departments, and different departments will do reports on them, and they stay there. I tell you that because of that initiative, today,
the rate at which we needed to recruit people into the organization dropped because most of those guys within 6 months, they fit into the organization since they've been in the company for the past 5 years because they went through very intense programs of development. Number 3 thing I wanted to mention is at the national scale. I think as a nation, we should think differently. Yes, what is happening now could look like a problem, but let's convert it to a solution. What is the essence of us saying we are 200 million people, but half of them are illiterate or unemployable graduates? These people will become very sophisticated as security threat to us. I think we should begin to see it that if Nigerian graduates are this skillful and this marketable internationally, why don't we put more money in education and produce more and sell them? Yes. Yeah, because I mean, I run the diagnosis center of Luth, where we invest in major top of the range diagnostic equipment, up to MRI, CT scan, everything. And within the first 2 years of that project, it's a PPP, we lost about 17 senior consultant radiologists. They are supposed to provide us with personnel, clinical personnel. We provide the managerial support and systems. And that automatically threw us off balance. So I called a meeting. I said, listen, if this is happening, we can't stop it. These are top-end consultants who, if they look at the image, they can tell you if someone is going to have stroke in the next 30 minutes or 1 year. I mean, we're losing them. They're leaving this country in droves. So we then said, okay, you can go. But what we're going to do, I mean, the call I went to pick up there now, we started looking for radiology consultants, where we're going to have just 1 or 2 here who will capture the image. And it can be transmitted to any consultant. All these guys that have left, who got their details in Canada, in UK, everywhere. They will interpret the thing to us, send it back to the doctors here, who will prescribe. So that's another way we have to start looking at things. We don't have to do everything physically, locally. So let's start thinking of how do we still make use of these talents wherever they go and connect them back home. Thank you.
Thank you, sir. Any question? Any other question, please? Anyone else? Okay, please. Or comment? Question or comment?
Good afternoon. My name is Isika. I'm country manager at Elevate. Maybe question or comment. I think to the man from Galaxy, because he seems to be the closest person to government, and maybe to you, the moderator, you look like
me.
Yes, so
me
is close to government.
You have to look what?
You know, I mean, like my colleague Bolahan has said, the fact that we have a pipeline of trainable young people, that's why this problem is not criminal, because we can train and replace. And to his point, we have Nigeria Export Promotion Council, right? Why can't we have Nigerian Human Export Promotion Council, you know, that will aggregate this abundance that you're seeing and build a commercial value for, you know, forex for the nation? Just thinking. I think it's something we may need to explore. Thank you.
Thank you very much. I'll take one final question or comment. Yes, sir. Please.
Good afternoon. My name is Ayo Kuleade from Sky Capital. I think, to me, I'm not worried about the number of people living in Nigeria. More should go. Because I feel that Nigeria has a lot of talent and we need a lot of money. So if we cannot export crude, they are still can export human beings. They bring diasporas, remittances into the country. Is a way of growing the economy. I'm sorry, I'm sitting beside 2 people, but we know how many Indians are across the world. How much are we exporting from Nigeria to China today? We see them in almost all the factories in Nigeria. Are they complaining? The answer is no. So that's natural resources that we have. We should encourage them. Why I don't have a fear is because Nigerians are great people and they're very hardworking people. But the system is making them to be lazy.
Absolutely.
I run, and I'm new in my company just less than a year. And some people left. And I told my chairman, I said, I'm not worried. I can replace these people in a week. In fact, when I was in UBA, I remember when I was in UBA, my chairman gave me a $12 and said, recruit 200. I give you 200 people to be recruited in 1 month. And I recruited them in 2 weeks. So that means there's talent. So people will leave, but there are still enough people who are unemployed. But the challenge is this for leaders. You must be ready to train people and to show people. Just 2 weeks ago, I democratized credit training. Guess who came first? Not the real people in banking. The first, the second came from asset management, because we just got one of the best talents in Nigeria, Mr. Chikanboni. I just said, everybody, we have subsidiaries outside Nigeria. I said, everybody come. Just let us make these things to be free for all. You are going to pay the same if you get a facilitator to train 10 people. He may charge you the same price because it's exclusive, it's customized for you. So I brought 20 people. And today, when I have a credit, my head of legal came third. I said, that means you know this thing, Abi, no problem. It's not only the legal you check in credit. Again, you also check what? Because they also give them the practical experience. So we have lots of talents in the country. We should not worry about people, but we should encourage more to leave the country so that we can get more money. That like they get this, $1 is worth 700. How many people in Nigeria earn 700 naira per day? But $1 is worth 700. So if you can export that one to our villages and go, I think that will be improved standard of living for people. Thank you, sir.
Thank you, sir. Final question. Final question. Definitely final. That gentleman over there.
It's more like a comment and question.
Okay.
I had an interactive session with, my name is Shion, I'm a lawyer. I had an interactive session with one of the representatives of DHL in Nigeria, and he said something very instructive. He told me one-on-one. He said, what exactly is the problem with you in this country? Are you so dumb and so daft? And he said, times when they bring in goods, he said, we import virtually everything. And when the craft comes to Nigeria with all the load, it goes back empty. He said, in fact, at times they use sandbags to balance the aircraft. He said, you just consume, you never produce anything. In fact, there was a time we were told that Nigeria was actually importing toothpick. In fact, recently there was an article in Punch. They said there was we were importing sawdust. It was that bad. You made a very brilliant presentation, sir. I'm talking to the MD of Business Day.
Thank you, sir.
What efforts have you made to get across to Professor Doyin Salami? I know in one-on-one, Bismarck, one is on the economic team. I mean, those are the people that you need to get across to. In my family, everybody has run away. I'm the only one left in Nigeria. They've all run out. I am the only one left in Nigeria. I'm feeling very lonely. I'm feeling very lonely. I'm very sad. I don't know what efforts are you making? Because I don't know, the economic condition seems to be going down the drain. It's terrible.
All right, thank you very much. On that note, I want to ask my panel to give their final thoughts, and I will thank them, and we will end this conference, and I will ask a very, very important request of you all. Please, your final thoughts.
I think the summary of this all is we need to continue to invest in our people. We must be ready to train our people. And I'll go back to the scenario you mentioned earlier on. 2008, I was in India to set up the IT outsourcing unit for Nokia. It was a building of over 3,000 people. The following year, we went to Bangladesh. Then, at one point, I was with NCL to set up a similar thing in Israel. Today, they're doing IT outsourcing. The biggest players in India, you will hear 100,000 FTEs, 200,000 FTEs. Why can't we do that in Nigeria? There are millions of people that are living in India. There's nowhere I travel to in the world, there is an Indian guy there. So it's not about the number of people living in Nigeria, we need to invest in our people. We have thousands of graduates leaving the university every year. Companies like Madam said, we need to recruit fresh graduates. This year, Tech Expert has recruited over 500 fresh graduates. I'm running them through a 3-month intensive training. I'm giving them a 3-year career plan so that they can stay with us. Organizations must be willing to do that, to keep talent within the country. And when you're able to keep them within the country and you expose them to international brands, really, there will, instead of maybe Japan in 1 year, they may be here for another 2 to 3 years, but you have a continuous talent pool. We should see a nation that in the next 10 years will have IT outsourcing brands that can boast of 10,000 FTEs, 20,000 FTEs. We've done about 2,000 in the last 4 years. Me sitting here today, I think about 5 different people have said my brother or sister are passed through tech expert, because I have another 700 people that have gone and gone, but we have a constant pipeline. We have a plan to go to 5,000 people within the next 2 years. So I think we have the talent pool. Is how well we manage the talent pool as a country that is key to us. Thank you.
I'll just say what I've consistently said. The bigger problem is on capacity. Let's focus on that. What we can do as an organization, just as he highlighted, let's all focus on that. Like in any country, the average Nigerian thrives. I mean, I know there are people who still get the short end of the stick when they leave, but you typically will find in any sector that Nigerians are across the world, they thrive. So we have a resilient group of people that have the capacity to do excellently well. So we just have to build that. What we can do within an organization, let's do it. What we can invest, let's do it. And we just hope that, you know, the larger society, which is from a governance standpoint, will get their act together. But we owe it to our organizations to build capacity. And that's what we should just focus on.
Thank you so much. So I'll just echo what other colleagues here have said, which is still really about capacity development. We've all identified the gaps from our governments. So what that just means is that the mantle sadly has been passed to us as private sector to be able to develop this capacity at least the best we can. I'm usually happy when I hear things like 500 people have been recruited, 1,000 people have been trained. And for me and my organization this year, and we actually put corporate social responsibility as part of our organizational OKRs. So for this year, one of our goals was actually to train at least 1,000 people, at least contribute towards training 1,000 people. So where we are not large enough to recruit so much, then we put our money towards investing in people getting trained. So just to urge everyone here that is in a position to make this kind of decisions, it's really helps and it makes a difference. So 54 people moving from Nigeria to Korea, I think that's really amazing. Maybe one of those 54 people will build a $5 billion company in 10 years. And if you look at the impact of that on the economy, right, it's so huge. So that's really what I'll just say is capacity development, and let's just make it our responsibility as the private sector.
Yes, sir. Okay, thank you so much. I will start on a cautionary note in the sense that the 54 people from the data we have who went to Korea didn't stay at home for 15 months. They didn't stay at home for 15 months. So we must go back to that capacity, because let us not be deluded with the fact that we are 200 million. We think we can keep on training unemployable graduates. That training will correct them. That would be wrong. So we must go back and fix our institutions, and they must work. Because it never really occurred to me that is, 15 months. It's really scary. 15 months. Okay.
Thank you so very much. And please, a round of applause for my panel. On behalf of business here, I really want to thank everyone that has spoken here today. Everyone that sponsored, everyone that made this event possible, because they believe in what we are trying to achieve. And for everyone that has stayed to this time, I really thank you. It's not easy to get your attention for an hour, but some of you have been here for 5 hours. I thank you all. The final thing I want to ask is this. How many of you, as an individual or your business, you have a business subscription? Okay, So thank you. That's a good representation. If you don't have a business day subscription, please, there is a business day subscription flyer around. Please just click on the barcode and we will take it from there. But if your organization does not have a business day subscription, please, you should subscribe for your colleagues. I mean, it could be 10, it could be 5, it could be 20, depending on the scale of your organization. A business day subscription, I can assure you, is worth it. Is worth it. You get your news, your reports, your analysis, and of course, I always say this because it's important. We are in a democracy. It may not be perfect, but let's not delude ourselves that a media company is not important in a democracy. Otherwise, we'll live in darkness. We don't want to be in darkness, so please subscribe. Thank you so very much. Have a great day.
Thank you, everyone.
I will come to you, sir. So, photo.
Yes.
Can we do this?
Please photograph it, please.
I wanted you to take pictures.